to talk about pre-market. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
This is my last show today. I had a good run. I got other things I can do.
It's a cute sweater.
Thank you.
Yeah.
Thank you very much.
It is. I thought it was hands for a moment.
No,
but
they're
it's
penguins.
two
They're
penguins.
Yes.
Very nice. Very pretty.
Very
I
It
don't
does make a
trust
heart
either
in the
of you.
middle, though.
I don't trust either of you. Come on, Nikki, you can do it.
I'll just do it this way.
There you go.
Nikki's in a gang. What Nikki's doing over there.
There you go.
He's a blood or crip right now. I don't know what you are.
You can't quite do it.
Well, my fingers are all like soft.
I know from amount of football and look at James making a nice little heart.
Heart
Yeah,
shape.
sweet.
From toiling away in the mines.
And
But it is funny because me and my dad
Softball.
both have
the pinky. Yeah, the
different pinkies.
you guys both have what? We're just...
We both have little ones. But they're cute. But they're really cute.
How'd yours get like that?
Softball, just like you.
Yeah?
Yeah.
Flag football right here.
Flag football.
Ooh,
Yeah.
I could see a little bit.
Yeah.
One too, yeah.
Oh my God! I just tweeted
Well, he
out.
used to say to me when I would get hurt, you have 9 others.
Yes,
So you hurt one.
I did do
Now
that.
with Vinny, he's like, "Oh, is it okay?"
Mom kisses it first, then I kiss it because she's got the magic.
Mommy, come kiss it.
Yeah. It's
Surprised
true.
you didn't like helicopter him to like an orthopedic surgeon.
Oh, that was
like-
yeah.
Or I'd punch him in the arm and tell him, now your finger doesn't hurt anymore. Because he'd be like, "Ow, what'd you do that for?" I go, "Your finger doesn't hurt. You forgot all about it. You're fine now." I got the greatest. It's only 2 weeks to Christmas Eve.
Yes.
Today, 2 weeks to Christmas Eve. Get your stuff all ready, and everybody else out there. And my buddy Michael sent me a TikTok, or I think it was it was an Instagram little reel on the toys from the '60s, and now they're going to do another one from the '60s. A little short and stuff like the lawn darts.
Oh,
That we used to play with, and
before they got banned.
Yeah, because they're throwing sharp objects.
I mean, a couple
10-year-olds
people took
throwing
them to the thigh.
10-year-old.
nailed in the head or through your eye or something like that.
Yeah.
It was such a great toy to play with, though. It was really, really good. And then they reminded me that it was called the thing. You can make, like, you would get this plastic that you would melt the plastic. So you just had like a hot plate and it had like indentations in it, and you would melt this plastic, which had these fumes in your bedroom, of course.
Yeah.
Just like
We're standing over it, and, like, watching it.
sipping.
That's what's wrong with your generation.
That's right. You wonder what's
the
wrong
lead
with us.
paint
Is right.
and the plastic fumes.
Yeah, and you'd make these plastic like I don't know, like spiders or like creepy crawly type things. It was just so much fun. I loved that thing. Anyway, brought back good memories. But we played with real toys, not like what you people do.
Are you okay?
I was reminiscing. Yes.
Is it time?
It could be.
I've been looking at homes.
Yeah, okay.
There's some nice ones in Glenview.
Sometimes they set it up so they have like, it looks like when they were growing up, and then that's real calming and soothing.
Yeah, you see, your mother's a lot more forgiving and kind than I am. Don't worry, I took care of my health as I get older. I've taken care of all my stuff. I'm not depending on you people, friends and family, to take care of.
Why would I take care of you?
You're a good
You're
friend.
literally my coworker.
We spent 15 years together in a room.
Boomer entitlement, okay? Come on, everybody's got to take care of it.
I mean,
The amount of things that women are responsible for just expanding.
Yes.
It's like, yes, your coworker, you are now responsible for his long-term health care. How? I did not see that in the training that I took.
I just thought you would have a little bit of, you feel like you had a little responsibility.
It doesn't go both ways, though.
Sure it does. I'll
When it's
take
the
care of you
time of
when
the
you get
month
old.
for me, where are you with the chocolate and the potato chips, my guy?
I'll take care of you when you get old if I'm still around.
Taylor Swift gear.
Okay.
I did.
That does
one time.
It doesn't help with cramps.
More than anybody else in this room.
This show's out of control today. Nikki, how was golf last night?
It was good.
Are you still the number one seed?
Did you throw a game? Because wasn't this almost like a bye week for you?
We had a bye week. We didn't throw. We just went and played.
Oh, okay.
None of our handicaps changed, though.
I know, but if this was a bye week and you still enter your scores, right?
Yeah.
You kind of get the yips a little bit. You get that, you get your
No, I can't do that. I'm a competitive guy. I don't.
Me too. That's why I'm trying to throw the game a little bit. I'm competitively putting it in my advantage.
No, we don't cheat. We don't throw.
Everybody else is.
Probably.
What course did you play?
Oakmont.
Very
hard.
Yeah,
where
where's
is
that?
that?
Very hard.
Pennsylvania? Where's Oakland? I don't know where that is.
But there was the one that they just.
No, I know. I know it's very famous. I just don't know what state it's in.
Pennsylvania.
Ah.
That's a good call.
Hey, fellas, if you're watching.
Look at that. get you a girl that knows Oakmont.
Right?
That's why I got you taking care of me when I get older.
Yeah, I'm
a lot of things. It's gonna be good.
I'm not taking care of you, dude.
Yes, you are. You just said.
I listen to too much true crime.
Everything is melting now in Chicago because we got a little bit of rain and it got
It's 40 degrees.
40 degrees, and you've got these icicles now, which are the best murder weapon, right? I mean, because it just goes
It just vanishes.
Come here, Grandpa. Stand
right here.
Stand right here under the big.
Hang on, I'm gonna take a picture of you.
Yeah, hang on.
No, best murder shot of insulin under the tongue. Because the insulin, the way it metabolizes in your body, they won't detect it. Ooh. And then under the tongue, they're not going to find the injection site. But I've already said too much.
I guess somebody who's...
I've already said too much.
I guess somebody who snores a lot, you'd be able to do that to them a lot easier.
Yes.
How was your evening, Bat? What'd you get up to?
Ooh, my evening was wonderful. Didn't have anything really to do. Early hockey practice because the varsity team, which is the real team, the JVs are just the Johnnies. The varsity team, which Vinny is on, had practice at 4:00 in the afternoon instead of like 9 o'clock at night. Because the varsity team is like in New York playing in some tournament or something like that. So we got the good times, which was really, really nice. So we were dumb.
They travel all the way to New York?
Yeah, they played
on a bus.
On a bus, yeah.
That's
not like New York, like the city you're thinking of, like upstate New York.
Oh.
Close to like 7-8 hours away, not like the 13 hours away that you would get to go into the city.
I gotcha.
Mm-hmm. And not Madison Square Garden worthy.
All right.
Mm-hmm. So that was it. So it was a very easy night for the Batista household. Outdoor lights finally got put up. It was a little late. Yeah, a little late this year. Tree is up.
Did you put your inflatables out?
You did not put the inflatables out this year.
That's okay. I mean, we've had a lot of high winds. It's been...
the winds didn't matter. It just snowed too early.
Yeah, well, yeah.
Yeah, so just wreaths and lights.
What about
this weekend, right?
What about your flat tom?
No flat tom. I do have the igloo up, but the igloo is
You can put flat tom in the igloo.
I have. In years past, I had him in there with me.
Aww.
We can keep him with us. And
then he shot like hockey pucks at him, and he kind of wilted a little bit. He's a little
Go to Staples, order another one.
Yeah. If I missed them, I mean, sure. Don't miss him that much. I'm okay. Gonna see him tonight though. For those who want.
You are?
Yeah.
Boys' night?
Yeah.
Where are you going?
Undisclosed location.
Oh, that's right. I'm sorry. My bad. It's EJ's.
Come on. If you
It's
need
EJ's.
to ask, you can't go. I mean, that's how it is. Mm-hmm. Yeah. You're one of two places, EJ's or Carson's. They're pretty.
Yeah.
You go to either one of them.
Pretty simple.
Yeah.
Right. Yeah. Pretty simple people.
Yeah.
We're not very.
And if it's in the morning, and Sather.
That's right. Yeah. There you go.
No, he looks at other like Mike's now. Mike's. I correct as I said
Mike's
it.
is good.
That's the new obsession.
Yeah.
Pretty easy.
Yeah, but the Mike's is at like 5:30 before a 7 a.m. tea time. It's an early morning. You really got to plan for that one.
Mm-hmm.
Yeah. That's too.
7 is early. I wake up at 5 every morning. What do you mean 7 is early?
Yeah,
You act like I'm not sitting here with you. Like I did the same thing.
But you get mad when you travel that like the coffee shops or places aren't open like early.
I don't understand it.
Like why a coffee shop opens at 8.
That's a little late.
Yeah, 8 is late. But we're messed up because we've been doing this so long.
Yeah.
Even the hotels are 7 a.m. I mean, how?
Have you never been to Europe?
I have, but I mean, I don't get it. I really don't get it. I really don't know. If you want a business out there, killer business, that's what you got to do. Open up a place that's open 24 hours or opens early in the morning to serve coffee to people.
I mean, the city that drives me the most nuts because I'm so type A is New Orleans. Because I go down there and the
They go
shops,
open at noon?
the shops just open when they feel like it. But it's the vibe down there. But it's just like it goes against like I was like, I have things to do. They're like, oh man, I just got up and I had some wine.
I've never been to New Orleans. Well, I've driven through New Orleans.
It's fun. It is a vibe.
Yeah.
But if you're like, okay, I have an itinerary, I have a plan, I have an agenda of things I need to get done, and the store is just like, LOL.
Yeah, right. Yeah.
I can't believe you've never been to New Orleans.
I know. I've driven through it because I was in the wrong city a long time ago. I had to get to the right city.
Yeah.
The
best fun I had is going in like late December, like around this time, like after the holidays, because it's not crowded.
Yeah, sure.
And still, like the temperatures are great. Like obviously in the summer, it's hard.
Yeah, I'm gonna go there someday. I don't know. The drinking thing.
I'm sure Vinny's gonna have his like 16th birthday down there or something.
Yeah, yes, or bachelor party or something like that. Because the bachelor parties have gotten out of hand with you guys. I mean, I know you just went through that.
Stop lumping all of us together.
He's an angry boomer now. Like, look at him. He's just,
I'm sorry. Why would I have a bachelor party?
Or bachelorette party.
Yeah.
And I was talking more about my son over there.
All right.
Does that.
Well, we have a great show for you wherever you are, but we are, for the most part, on time. It is a wonderful Wednesday here at Tasty Live. A lot of good content headed your way. At the top of the 8 o'clock hour, excuse me, we have an options jive. Different flavors of BPR. Ooh. What's your favorite flavor of BPR?
I would say portfolio margin BPR.
Ooh, yummy.
That's a fun one. But yeah, we're going to talk about just buying power reduction, how you can reduce the amount of capital you put up in different kind of account types. Talk about spreads versus naked positions, common mistakes, all those kind of things. But basic.
Very cool. Okay.
Yeah, light.
And because it is Wednesday, it's assume the position Wednesday, and that means we have What's Your Assumption at 8:40.
We do.
The bats are going to do viewer-submitted trades. Viewers write in. They have an underlying, and they also have a directional bias. It's going to be interesting because we're kind of at the dregs of earnings. Volatility's low across the board. People are just, it's a wait out the clock situation.
J-Pow.
Yeah,
Most
waiting for
important,
J-Pow.
important number in the entire world's coming out, besides the last most important number in the entire world's coming out.
But our viewers are very crafty, so they put together some trade ideas. And that's around 8:40. The bats are going to do viewer-submitted trades. And then 9 a.m., new segment, Strategies for Your IRA. It is part of our 12 Days of Trading series. Yesterday, you might have seen me. My video on why you should have an IRA. But today, strategies to trade in your IRA. We actually have a couple of videos, but I think I've scheduled Dr. Jim put together a nice little video for some trade strategies. It'll come out on our socials. Follow us on social. But we have a segment. What are you going to do? What are you going to talk about in that segment today, Nikki?
Just like the basics of IRA accounts and really how you can more efficiently trade options with IRA accounts. So buying the wing, kind of a discussion on just kind of changing your risk in an IRA account.
Okay. And that's good. And Bat, you trade in your IRA a lot.
I did. I don't as much anymore.
Get it together, man.
Follow page. I know. I used to because we had an IRA account that we would use.
We're working on it.
Yes. But it really comes down to being hypersensitive to the amount of buying power you're using on any position in IRA because you could do anything you want at Tasty Trade an IRA account, sell naked calls. Be naked, calls or puts. Obviously, puts you can do in most brokerage firms. But it really depends on how much buying power you use because it uses more buying power. You have to be hypersensitive to buying power. It's really that's the whole key to trading an IRA account, in my opinion.
And because we can never get enough, live from the trade desk, Marty is back.
You got a sweet spot for Marty.
I love Marty because Marty will participate. If I ask Marty to film a video for Ask the Trade Desk, he's like,
do you know how many compromising positions he's been filmed in these past decades? I mean, come on. Marty, this is what you ask him to do is nothing.
But I just think it's funny because all these trade desk guys, they're also like grizzled, but they all just want to be like social girlies. And I love that for them. So yeah, make sure you follow Tasty Trade also on social, and you'll see our trade desk team. So Quentin and Marty and Slappy, they're all in the videos.
Quentin's much more reserved on film. I've watched some of his.
He is so good. He is literally one take. Like, I'll ask him.
Whoa, hey.
Oh, you too. Of course. No, you're one take too.
No. He is one take, and because he like you and I, we can just say whatever, but because they're licensed and
registered.
Registered, they have to like know what they can and can't say, and he nails it
guarded
every time. Yeah.
You don't have to be guarded. You can say whatever you want.
But anyway, Marty's going to be counting down the top trending tickers over at Tasty Trade. And then 10 a.m. live from the floor of the SIBO, Liz and Jenny. It's always electric and the ladies are live, although they may be a little less electric because I think Liz went out last night to her husband's holiday party.
Yeah.
So because she had her luggage, so she stayed downtown. She was doing the city thing. So, but it's...
She's an early bird too, though. She wakes up early always. Too.
Yeah.
So she does it. Even on the road, she's one of the first ones that's out of the hotel or downstairs looking for coffee. Yeah.
But now this time of year, like all my other friends, like their offices are having all these massive holiday parties now, and I'm just like, we might get pizza.
We might schedule our COVID holiday party. Still do. We might start scheduling that now.
But are their offices having holiday parties?
No.
Not really?
Not really. Not that
Yeah.
I don't.
All right.
Yeah.
Well, Liz and Jenny are going to be live from the floor of the SIBO today, so tune in for that. But hey, let's get this show on the road. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Today's
Across the wire.
This
leading story.
just in.
Top stories. Jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's December the 10th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
Last night you had Chewy. It looks like it's down $2. To Adobe and Oracle.
Ooh, what you gonna do?
Or
They're
today.
both kind of AI plays.
Today, yes.
Yeah.
They're both kind of AI plays. What are you gonna do?
I was able to. I sold puts early in Oracle on a humongous down move, and then it went humongously down lower.
Yeah.
Got out a couple of days ago for about $1.50 loss after having $10, $15 loss.
That's
on
great.
it. I look back at the puts just for giggles. I never look back on a trade typically after I put it on where I covered those puts because Oracle's caught a little bit of a bid. Matter of fact, it's up $2 this morning. Those puts are the exact same price where I closed them. They'll be a little bit lower this morning, but you know what? That's a good close. We'll figure out Oracle's got an 80 IV rank. Maybe there's something to do in there. Markets are a little bit wide. Adobe ADBE, on the other hand, has been on a little bit of a tear to the upside after making lows last week or so. So went from around 315 to 340, but still on the low end of its range.
Yeah.
Hey, getting to the first headline of the day, what to expect when the Fed announces their next interest rate move. Today, the U.S. Central Bank will have to make its decision without some key government data. Obviously,
They're flying blind. They'll be flying without instrument panels.
There are concerns about continuing weakness in the U.S. labor market. Let's look at
Shouldn't
treasuries.
they always be concerned about it? Even like when it's good? I mean, that's the job, right? I mean, that's the only thing that really...
What are you trying to do here?
Yeah, sorry.
I want to talk about bonds.
Sure, bonds 115. We're long a little bit of bonds, short some puts.
Long notes too.
Long notes, yep.
Out of the money puts.
Yeah, out of the money puts. At the money on the ZB, I think, or just at the money at 115. Yeah, bonds are kind of, as bonds go lower, rates go higher. So I don't know if bonds are being a little predictive on what the Fed's going to say about future cuts. I mean, the cut seems pretty cut and clear, clear and dry.
Right.
I mean, about 80% on the
I think it was almost 90% yesterday, but it's probably higher now. No, 89.9.
Okay. It's anytime the Fed watch tool has been 65% or above, it's never been wrong on its prediction. So let's just assume that we're going to get that quarter cut. It's what they're going to say in the future. And it looks like they're going to say they're going to watch and not be so aggressive.
Sure, but there is dissension. There's not like a total consensus. So it'll be interesting to see what happens. Another thing I'd like to look at today, the yen is a little weak and the dollar seems steady. Again, everything is just waiting for this Fed to come out. The yen looked punch drunk Wednesday after a sudden spill overnight, pressured by wide interest rate differentials between Japan and the rest of the world. What are currencies doing?
Yeah, so there was
Going against me?
well, there was that whole thing about the yen, as the yen was catching a bid, how there's going to be this big unwind, and there's
Carry trade
2.0, blah, blah, blah. Now the yen's going back down. Does that mean that was wrong?
Early.
Early, got it. Okay. All right, awesome.
Yeah.
What a difference.
The yen's been super weak. I mean, the dollar's been weak. It's been.
Do we need to send Mike back to Japan?
You can go back now and he can get like 10% off or something like that.
Yeah. No, I mean, he got there basically at the perfect time. So.
If he got all his money right when he landed.
Yes.
Because the yen kind of rallied after that.
Yeah.
Anything to do in the euro or pound to round out the...
I'm short the euro against the yen, which is probably the worst pair you could be in.
Oh, really?
If you wanted to...
make money.
Make money, yes. The euro Japanese yen pair has gone straight up, parabolic.
And the euro has one of the better IV ranks if you look at the option side than, say, the pound, which is next, and then the yen, which is the lowest.
JP Morgan stock tumbled over 4% yesterday after the company warned of higher spending in 2026. Oh no! The stock slide made JP Morgan the biggest loser in the Dow yesterday, and it was the bank's largest one-day decline since April 4th.
Ooh.
Yeah, when you look at it, for a month's time or so, it has about a $15 to $20 range. Yesterday's move was almost like a month move in JP Morgan. Different than if you look at like a App Lovin', which had a big move to the upside, where its monthly expected move is $100. Completely different. JP Morgan down at the low end of its range. If you would have asked me in the morning, I would say it was at the high end of its range.
Yeah.
That's how big a range it had yesterday. Most recent range, I'm talking about.
I got long it into that move.
I don't blame you. JP Morgan actually up a
all diagonal
small, up like $1 or something like that this morning with even the S&P's just quite a bit. They're up 5. When I woke up this morning, they were down 5.
Rate cuts good for banks, no? You would think.
Yeah.
The
get
bank
money
said
cheaper,
and
they don't give you any break on it.
Of course.
When you come into the bank to get it, so you don't benefit from it, but they benefit from it. Yes. Of course.
JP Morgan said they expect to realize $105 billion in expenses next year.
Well,
Letting people order dinner.
Remember when we used to make fun of people on the show? You would say, well, that was, it's a tax write-off. It's
a write-down.
It's a write-down. No big deal.
It's a write-off.
You don't really lose it. It's a tax write-off.
Hey, congratulations to Silver for Scott
No.
climbed to $60 per ounce for the
we are
first
short
time.
silver.
I'm all blinged out in my silver jewelry today. So Spot Silver hit $60 per ounce for the first time ever, driven by a market deficit and increasing demand for the devil's metal. I don't know.
62 and change on the futures last night. 61 in the orders right now. Got down to 61. We're short silver, so we're not allowed to talk about it anymore like that.
That's not how that works.
Unless you have something bad to say about silver, don't say it.
I do not. I look good in silver.
Yeah, I would like silver back down to like 60. That would be fantastic.
58 would be Nirvana, but 60.
Yeah, 60.
Sure.
Okay, because I
You're not a
scalped
picky
it a
man.
little bit. I'm all right at 60. 60 is.
I know, but you'd like to go to bed with it at 61, maybe 60 and a half, and wake up with it at 58 and a half.
That'd be fantastic.
What about gold?
Gold not participating anywhere near. Matter of fact, gold is down about $9 or $10 right now, which is about a quarter of a percentage point. But if you look at gold on a chart the last week or so, it's been going sideways. You could close your eyes and it'd be just about the same price, where silver has just gone parabolic. So that ratio, you were talking about this morning, the gold-silver ratio, 2 gold to 1 silver is now under $70.
68.54.
Wow.
Remember, it was trading 105 just 6-8 months ago.
Yeah. It goes back like 10 years plus.
Okay.
That we haven't seen this low of a ratio.
Right. Oh, wow.
Now we would be saying we'd be saying the same thing 4 days ago, where we haven't seen any lower than this too, because it had been some time. So that spread between the two, either gold has to catch up, meaning it has to go higher, or gold sits and silver comes down, or gold
Doesn't
goes higher.
have to, but
doesn't have to,
the
but
play.
for that disparity between the two to come into play.
Yeah.
So that's why you say, hey, I just want to. I don't know if silver's going to stay here or gold hopefully catches up, or if silver's going to come lower and gold is going to stay there, or maybe go higher. That's why you would do the pairs trade, that reversion to the mean in price between the two to come together.
Yeah.
Bitcoin jumped to 94,000, but hawkish Fed cut could threaten the crypto rally. What are you doing in digital assets?
92.5, down about 1,000 this morning. Got to around 93.5. Yes, it catch a little bit of a bid at the higher end of its bid. It really was yesterday afternoon is when it took off, right? I mean,
like middle of the day.
Yeah, noonish or something like that. It just like anything else. I think just price. I don't see too much.
Nice to see it a little choppy down here.
Yes,
90-ish.
Yeah. Maybe even a little bit of volatility come back into it. Be nice too.
Yeah, but we're long. iBid, Ethe, Coinbase.
Yeah.
Okay.
Long.
Hey, GameStop had earnings last night, and their Bitcoin holdings, as well as their sales, slide. The shares of GameStop dropped more than 5% in the extended session after the specialty retailer showed sliding quarterly sales and profits, and saw the value of their Bitcoin holdings fall as well.
GameStop closed around 23 and change. It's going to be under 22 on its way to $6.
Yeah.
My prediction. I don't know. I mean, I don't understand why the stock isn't in the single digits, but who knows?
Yeah, I think this game has kind of played out.
Yeah.
They did have sales of $821 million. That's more than I thought. I was like, that's more than I thought.
I liked their thing from yesterday.
Oh, the trade anything?
Yeah, the trade in thing.
Yeah.
That was fun.
You wanted some creepy dolls?
Yeah.
Hey, I just put this in here because it's just funny to me. Cracker Barrel also reported their earnings. CBRL, they backtracked on that remodel and logo change, but it did not help the company. They reported steep drops for its fiscal first quarter sales and same restaurant sales, as well as a loss for the quarter. The restaurant and gift shop chain also trimmed their outlook for the year. They said they were going to sell fewer chicken and dumplings than expected, and the stock down more than 7% in the extended session.
When was the last time you've been to a Cracker Barrel?
College.
Like over a decade. I'm not against Cracker Barrel. They're just not.
I'm not against it either. I'm just saying.
There just aren't any around here.
It's the only place where you can get multiple dishes that are all completely white. Like there's no vegetables on there. There's no
everything's
just beige.
Like,
just beige.
Love it with gravy. Love it.
Some gravy on it.
Give it to me.
This is right. This is another example of the board knows how their stock or how their outlook is going to look. They can see the numbers every day. How the stock, how the company is doing, not the stock, how the company is doing. If they see something like hey. This next quarter looks like it's going to be a rough one for us. You don't want to be in the news, like trying to change your logo or anything else like that.
Yeah.
You want to kind of hide a little bit.
Sure.
This stock has gone from the mid 50s to 27 in a quick little burp here, and it's 25.5 right now. So down around $2.
The memes were good.
The memes were good.
I appreciate the memes.
So good.
Of this. This was a good one.
Oracle's reliance on OpenAI is going to come into focus as the company's going to have to face a lot of scrutiny as their debt-fueled AI build-out is going to have to answer to analyst questions when they report earnings after the bell today. Oracle had a $400 billion plus contract backlog ignited by a stock market frenzy, but can they pay when the bill comes due?
I think all this bad news in Oracle and this drop from 330 under 200 at one point, which was really just about 2 weeks ago or so, back up to around 223. It's actually up $1.50. I think Oracle has some good IV rank. Even January's monthly implied volatility is over 62. That'll probably go into the low 50s, 53, 54, 55. So I think January, if you want to trade earnings in Oracle, might be an okay play. So maybe we'll see something in Oracle. Plus, I got about $150 I got to make back in there per contract. So I've got a little bit of a love-hate relationship with Oracle right now.
How about you,
Chase,
Nikki?
don't chase.
I'm not chasing. I'll be good.
Yeah, this will be an interesting one. I mean, it'll be.
It doesn't have the greatest markets.
It doesn't have the greatest markets, and I think obviously with the events coming up later today, I think you probably wait until later in the day and see what happens with the market. It might steer you towards a different direction, or even not even placing a trade if a lot of other things are.
So you're saying wait till after the Fed news comes
Yeah.
out to do the earnings
There's no
plays?
reason
Okay.
not to.
Like, I don't think there's a rush to do it now. I don't anticipate the market moving all that much throughout the session here.
And I would say that just about on any earnings stock. I mean, wait till the end of the day.
Yeah.
Close enough to the end of the
Sure.
day. Last hour. I don't know.
Yeah, I think we've done research that.
I think
supports
particularly
that.
today when you have a
Yeah.
big sort
Yeah.
of event
Yeah,
kind of
yeah.
in the middle of the day. Definitely makes sense.
SpaceX is planning to go public in mid to late 2026, and they're looking to raise $30 billion at a valuation of $1.5 trillion. Did they discover a new galaxy? What are we doing? It would make it the largest IPO of all time, edging out Saudi Aramco's public listing in 2019, which brought in $29 billion. But of course, there's a big OpenAI IPO that's still out there. But what do you think of SpaceX being worth $1.5 trillion?
I don't.
Launch
I mean,
rockets into the sky, which is
and bring them back.
Sometimes.
back.
I mean,
Sometimes.
It really, yeah. But it really is amazing.
Yeah,
Sure, reusable rockets? Yeah, that's great.
Yeah.
it's pretty sweet.
You can't even do that in a park when you light off a rocket. You know, you have to put a new. You never find it and stuff anyway. People do that anymore? Do they light up rockets?
As hobbyists?
Yeah. Are there any more Hobby Lobbies?
You're talking about like making the rockets, the ones.
Well,
that
you could
make?
buy the rocket or you could make it, but you used to have kits that you
Yeah.
could make a rocket and you would put on this like small little metal pole. You stick this firecracker up its butt pretty much like that,
Yeah.
and you light it and go up
Yeah.
and come down and it would be all burnt up. It was supposed to be reusable, but it never was.
Again, we all don't have all the same hobbies.
Yeah.
We all don't hang out.
Are there Hobby Lobbies anymore?
Yeah.
Yeah, there's Hobby Lobby.
Really? I haven't seen one in a while.
It's more like decoration stuff than
Yeah.
like model trains. I mean, I'm sure they still have that
Oh, 'cause
stuff.
you guys
but
are kind of softer generation. I get it.
okay, I'm gonna. What's
Hey.
Tesla doing? What's Tesla doing? Because you can't trade SpaceX, but you can trade-
You cannot. And Tesla's always on our top 20 list as
Sure.
one of the most actively traded here at
447 right now.
Yeah, up around $2 or so with even the
Nice.
S&Ps and the market unchanged pretty much. Yeah, 447 brings it to the near higher end of its range.
Yeah.
The Navy is making a massive bet on cutting-edge technology to modernize its fleet, and they're pumping $448 million into AI, into autonomous systems to supercharge shipbuilding efforts, and they gave a contract to Palantir. What is Palantir doing?
Up about $2.5, $3 to 184 and change. Which, if you throw out the high of almost 210 and you throw out the low of 150 or so, here at 184, you're just a skosh off of highs, which is around 100.
It was up at like 190
right
in the after hours, like
Yeah.
right after. Kind of similar to what happened with Nvidia, where it was you kind of squeezed higher, and then it ended up being kind of a nothing day for Nvidia. So
Yeah, well, Palantir, is valued. Well, let's see, Nvidia's $4 trillion and change, but Palantir is valued at around $433 billion compared to Nvidia. That's $4 trillion.
Yeah.
I mean, I'm just naming the two. So you would think Palantir would have a lot more volatility than, say,
Yes.
in Nvidia. But Nick's point is, it seems like the
news cycle hasn't been as sticky. It hasn't been as like
they go up $15
Yes.
and another $15 the following day, and
Yes.
another $15 the following month. Yeah.
yes.
I mean, I thought the stock would have moved more after seeing Alex Karp's whatever that interview was that went viral. But you do you.
Yeah. Eclectic guy.
Yeah. Accenture and Anthropic have struck a multi-year partnership to boost AI adoption. Oh, no, my bad. Sorry. No, yep. No, I'm going to do the Accenture story. Sorry.
You
Talking to production. Yeah, Accenture and Anthropic announced expansion of their partnership through a new business group where around 30,000 of the consulting giant's employees will be trained on your favorite model, Nikki, on Claude.
See?
ACN is Accenture.
Never traded it. I just looked at the markets. Now I know why. They're very wide. December 18th is earnings. IV rank of 72. It's on its butt.
Well, that's a good IV rank, though.
Good IV rank. Yeah, and it's kind of on the low end of its range. But markets are, you have to have a directional bias in there.
People forget that this is just Arthur Andersen, and then they just rebranded. Like the North remembers after the accounting scandal. But then they're like, no, now we're Accenture. It's accent on the future. And so, do you not? Okay.
That's good. I like that accent on the future.
Accent on the future.
That's good.
That's what that is. Now, CoreWeave CEO is defending AI's circular deals. He says it's just all the companies working together. He
Look the other way.
Yeah, he says that it's the CoreWeave is also in the midst of creating a new business model for how cloud computing can be built and run. It used to be CoreWeave was kind of that girl, but we've stopped talking about the stock. I didn't know if there were any opportunities in CoreWeave.
CoreWeave, early on in the summertime was, flirting with 200, got up to around 180 and change. It got down to around 70 or 80 plain, no 100. So $100 taken off of this in a short period of time. Trading at $90 right now, or just a skosh under. Looks like it's down about 50 cents this morning. IV rank's only 14 in there, so I think you really have to be directional in CoreWeave too. But it's one of those stocks still has implied volatility that's 90.
Oh wow!
Which 180 is not out of the realm in a year, and
you mean a doubling of the stock price.
Doubling of the stock, and 10 is not out of the realm for the year.
Sure.
So,
what a time to be alive.
Yeah.
What a time to be alive, yeah.
Hey, Australia today becomes the first country to ban social media for all children under the age of 16. They're blocking access to TikTok, YouTube, Instagram, and Facebook. 10 of the largest platforms were ordered to block children starting midnight or face fines of up to $33 million. The law has, of course, drawn criticism from the tech companies.
How are they going to do this?
I don't know. I don't know how they enforce it.
I feel like that's an impossible.
I don't know, Australia, wasn't it, correct me if I'm wrong, and I know you will, wasn't it?
Here we go. We're gonna
I love the shade. I love just the shade all the way.
Wasn't it populated back in the day by mostly prisoners and stuff like that?
Yes, for convicts. Yes.
Yeah, for convicts.
It was a penal colony.
Right.
Yes.
For an ex-penal colony, they sure are pretty. I don't know. I guess would this be conservative? I mean, really kind of.
You're gonna start throwing stones at people who come from a line of people who've been in jail. This is the.
As a fellow, you can understand their thinking. I think they're getting a little overboard here, but
This is where you want to go. Mm-hmm. Okay.
It's almost like saying, I would say to Nick, when he would do something wrong. All right, that's it. I'm not going to let.
Never get that.
Yeah, right, ever again. You're never watching TV ever again. Like, it seems like a hard thing to implement.
Right. Yeah. But let's look at a stock like Meta. They would obviously be affected by.
I don't like looking at Meta.
Okay.
But sure, 651 down 5. I don't have a position in it, but just.
Might be an interesting spot to get into something, but
IV rank 5 is in there.
That's the case with everything right now.
It is, but very, and more will, not as many, but this has almost a 10% vol differential between Jan and Feb.
Yeah.
It will be almost impossible to make money on some sort of tight-ish diagonal spread. Of course, if you go wider and you get the directional move, you're going to have delta to it. But if you're doing a $10, $20 wide diagonal spread between Jan and Feb, those 9 or 10 vol points are just almost impossible to make up. So if you're going to do anything in Meta, do it all in January or all in February would be my way of doing it. Of course, you can do whatever you want.
Spotify said they are making music videos available to premium subscribers in the U.S. and Canada. That is as the streaming giant continues to try to challenge YouTube for market share. The video content would offer more immersive and engaging experience than audio alone. Spot.
Looks like the Netflix chart here. I mean, it's come down from like 750-ish to 550-ish. I haven't traded it. But I mean, these markets.
But it started the year in the 450-ish area. I mean,
Everything is like that.
Yes. Well,
All relative.
Yeah, right. I mean, it's in the middle of its whole year range. Let's
Yeah.
put it to you that way. Not a last month or two. The bone that I have to pick with Spotify is I share my account with my son, so it doesn't curate like my songs versus his songs. They all get kind of mushed together. So my age when I looked at the Spotify thing was like 22, which was pretty.
Congratulations.
Which was pretty good. Thank you.
Yeah.
Thank you.
Ooh, I don't know about you. I'm feeling 22. Okay. All right, you're welcome.
That almost felt like it was like a tick. Like
It
hurt.
is.
Like
It
you
is.
literally
My
couldn't hold
Tourette's.
that in.
I
Like,
have swift Tourette's.
It had to come out. Like that was like,
He started it.
involuntary.
Boeing's
That was good.
Boeing's deliveries fell 17% in November, trailing rival Airbus. Boeing said they delivered 32 of their popular single-aisle 737 MAX jets in November, including 5 to your sister at Southwest Airlines. What are you doing in Boeing?
It's getting going. Looks like it's up around $1, 75 cents to $1, trading 201. Remember, just about 2 weeks ago, this was $180. It's up to around 201. A month ago, it was $220.
You caught it.
Yeah,
That's look.
got a little lucky in there. Love, on the other hand, is trading $38 near its highs.
Oh my
Hey,
God!
hey.
Please.
There you go, sis.
Have sis lighten up, please. She's had 3 days to do it.
Lighten up. Hey, I'm skipping a story here, John. Sugar-free Oreos are launching in 2026.
What?
Mondelez has done it all with Oreos, from watermelon flavored to pumpkin spice and even jelly donut. But yesterday, the company announced Oreo Zero Sugar cookies are going to start rolling out in January to help people meet their New Year, New You goals. The slightly new design, if you can see here, it's embossed on the cookie. It says zero sugar. They spent 4 years crafting the sugar-free treat. Okay, here's what this reminds me of. So this is my favorite thing. Sometimes when I'm sad and I just need to pick me up, I Google and I go to like this Reddit page. If you type in sugar-free gummy bear reviews, so a while ago, Haribo made these sugar-free gummy bears.
One of those ones that gave you the
Yes.
buns?
So one of the reviews, so this kid, he was like in school, and I just want to read just a couple of seconds for it. With 15 questions left, I promptly wrote C for every answer and ran out of the classroom. My professor yelled something, but I was too occupied with the volcanic eruption that needed to take place. I found the bathroom and I burst through the door like the Kool-Aid man. Almost immediately, the floodgates of hell were opened, and the damned liquefied souls of the entire bag of gummy bears cried as they burned through my sphincter into the watery abyss below. I had never felt such simultaneous relief and anguish in my life. After 30 more minutes of this, I immediately went home, dug a hole in my backyard, and burned the remaining gummy bears.
Well written.
I'm sure this will have similar effect.
But yeah, read those reviews. There's more. Like, if you're ever just feeling just bad, just sugar-free gummy bear reviews. But also it happened like with those potato chips, like in the early 2000s, the fat-free ones, and then it just, I don't know. Don't mess with Mother Nature.
Yeah, don't mess with Mother Nature.
Yeah, if you're gonna eat an Oreo, just eat the Oreo. I think.
They got thin Oreos now too, if you want to kind of,
Those are good. I kind of like those.
Yeah,
it'll be a little less guilty about it. Pretty good, I'm not gonna lie.
Hey, the baseball gods just blessed the Chicago White Sox with the #1 overall pick in the baseball draft, and then I just made this slide.
That's good.
I mean, I got nothing else to say.
The
Thanks.
Pope has had some great effect on some Chicago teams.
This is going to be huge for my White Sox. So congratulations on getting the #1 pick.
God is on your side.
Not mad at
This
it.
is huge.
No,
Yeah.
no, can't fight it.
Anyway, finally today for my viral video of the day, I have never been to a hockey game.
Oh my God, you're
professional
kidding
or
me.
otherwise. No, I've never been to a hockey game because I think it'd be weird to go by myself, and then I just don't know any. Like none of my friends are into hockey, but I would like to go. I mean, I read a lot of hockey romances, but I have
Yeah, it's good place.
I have been grossly misinformed about what happens at a hockey game. I need to go. What?
I got to hear about this now.
Oh, wow.
What is happening? Who is that? Who is that? I want to.
Hockey game is this?
That's what I'm saying. I want to go to the Boy Aquarium. Can I just pick one and take it home? Like,
I want that one.
I want that one. No, but I'm being so for real. Do they take their shirts off?
Yeah, they do that every time. This is actually this
After a
only
win,
partial
the winning team
when
does
they
it.
win, it's full nudity.
Right.
Like just
Yeah,
helicopters.
Yeah, it basically turns into Thunder Down Under.
Yeah. No, it doesn't happen typically, but evidently it does occasionally. So you got to keep going so you find
Yeah.
it.
Yeah, it's just like the books. What's coming up next?
We're going to take a quick 90-second break and come back. We got more with Confirm and Send, and we'll take a quick look at the market. We'll be back in 90 seconds. Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer emails. But before, let's take a look at the market. Even the S&P is completely unchanged.
I think it's going to be a grind of a day until the big moment.
And then it'll be a grind to the day. If you believe what volatility is telling you, down small here. And look at the number 19.5. That's because the futures rolled last night, right? You know, the 19.5 is the new 17 and change, where it was just, that's the cost to carry on the futures. 19.5, it's $1,000. Contango, that $1,000 a point. Net gas. NASDAQ, I apologize, down 19 and change, basically unchanged. Russell down 5, basically unchanged. Dow up 6, basically unchanged. Volatility down 3, basically unchanged. Bonds down 5. I'm going to say unchanged only because I'm long them. Mm-hmm. Okay, if I say it's unchanged, I don't have the loss like I have. Notes are also down 3.5. Surprising. Notes been very, very weak. That's shorter dated. 10-year notes, the 20-plus year, or some would say the 30-year ZB bond. Really, it's a 22 or 23 year, the way it works out to be. Anyway, also lower. You would think if interest rates were coming down, that bonds would go higher, because bonds have an inverse relationship to rates, but they're not doing that, maybe signifying that they're going to have a little bit of future talk that's not going to be as sensitive to more rate cuts. Anyway, Bitcoin down 1,000 to 62 and change. Ethereum doing the opposite, up $5, basically unchanged. Oil up 12 cents, basically unchanged. You see a theme here. Gold down $5, basically unchanged. And then your beloved silver catching itself a bid up.
Owie. That's my owie.
Owie? Is that your owie? Is that what
owie.
Tell me where the bad man touched you.
Yeah, the bad man got me there.
Traded up to 62 last night, 62 and change. It's about 90 cents lower, so you got to be a little bit happy about that.
Yeah.
61 and change. I know you'd like to see it break 60 to put you back in the chips a little bit. Net gas down 2.5 cents. You can see net gas had a huge move higher, up over 5.5 or just about 5.5, now down to 4.5 in an equally quick move lower. Net gas, I think, is an untradeable product.
Got to just stay small. I mean,
you have to trade, and directional.
Yeah.
Probably, you know what I mean? Small is the big thing. I agree with you there. Chewy, after being down pre-market, is now up. When the market's set to open here, it looks like it's up around $2.50 to almost $3. It was down around $2. So it's at a pre-market move, but now it's to the other side.
Got to have some Chewy.
Great. From a consumer standpoint, I haven't really traded Chewy that much. You know, $30-ish stock for seems like a eternity with a decent monthly implied volatility, but you really only can trade the at-the-money options when it's that low of a stock.
Yeah.
Just because the out-of-the-money options trade for dimes and stuff. But from a consumer standpoint, who has animals in their house, not you anymore, you've moved out, but other animals.
You replaced me with about 4 others. So you got enough animals there.
It's a great company. I mean, the product gets there on time, decent price. They write you Christmas cards. I mean,
yeah. No, I know they do that. That's like their big.
Yeah.
Big thing.
Yeah, it's pretty cool. I don't know. Can't get out of its own way though.
Nice.
Chewy.
Very nice.
All right, let's go. Confirm and send.
Cool.
Wednesday, December 10th, 2 weeks before Christmas Eve.
Exactly.
Yeah, exactly.
2 weeks.
So get your stuff done.
All right.
And I can see in your eyes you haven't gotten your stuff done yet.
No, I need to do that.
Get your stuff done. I'm expecting big things from you this year. What's the best way to hedge a long delta portfolio against a sudden big move lower?
Oh.
How do you do it?
If you know it's coming, I mean
if you know it's coming, get out of your longs.
Yeah, get out of the longs and
just
put the hedge on as the core portfolio.
Right.
From a delta perspective, the E-mini futures or micro E-mini futures are probably your easiest way to get delta exposure. You could do other things like, zebras in SPY. You could do put diagonal spreads. Those sort of things have a positive gamma, a little bit of delta to it as well. But everything should be an underhedge. You don't want to hedge your, if you're long 100 deltas, you don't want to be 0 delta. You always want to underhedge
Yeah, somewhere between 25 and 50%. Now, listen, you're putting, how do you hedge against a big move lower? You get out of your delta, right? I mean, I was making a joke. I mean, but if that's what you think is going to happen in the market, you can't hedge. Right. You can't play both sides. You can lighten up. It all comes down to size, right? If you're trading small, your strategy diversified, this is going to, and you have long delta, this is going to hurt. But it shouldn't hurt you that much. It should also have money on the side so that you're leaving a little bit to do something to take advantage of that move lower, assuming your assumption hasn't changed, which is higher in this case. But a sudden big move lower, I mean, futures are the most capital effective, easiest way to do it. An E-mini S&P, even a /ES would be 500 shares of SPY. So if you're long beta weighted 100 deltas and you sell an E-mini S&Ps, you're now short 400 deltas. You are ready for your big sudden move lower. I mean, that would be the way to do it. It would be a 1-to-1 relationship, as Nick is finding out with silver to the way. Silver, I know.
Oh. Tough one.
Tough one.
Silver's tough.
It's a directional bias, is all I'm saying.
Yes.
Size is your friend here. Stay small and keep your deltas in check. Your beta weight deltas. Next one, please. Whoa.
I'm long some deep in the money calls with little extrinsic value that expire next week. So you're basically short stock here. I'm debating early.
No, I'm long deep in the money call. So he's
long.
Long delta. This is a high class product.
Yeah.
He's
So
doing
you got
good.
long stock. Okay.
Long stock.
I'm debating early exercising, taking the stock and selling the stock versus just closing the option position. Under what circumstances might I choose one over the other? Is one more advantageous than the other?
So let me just simplify this. You're long in the money calls, no extrinsic value. Like you said, it's long stock.
Yeah.
So you can look at it any way you want, but you have long stock right now. If stock goes up $1, you're going to make somewhere between 85 cents and $1. I mean, you have long stock. That's what you have. So waiting to get the stock itself, you already have it. It's a foregone thing. Synthetically, that's what you already have. So that's not what I want to do, because when you get that stock, you're actually going to use a lot more buying power than the same position, synthetically, the same position you have now with the options. So if you like the stock and you want to stay in it, then I would just sell the call that you're long and buy the back month same strike, or maybe a little bit lower if you want more delta risk and less extrinsic, paying for less extrinsic. Or if you want to take the stock and you have the money sitting on the sidelines, sell that January option with 37 days to go now.
Yeah.
Wait for the exercise. You have a synthetic covered call on now. You'll have a classic covered call on when you take the stock, but you are going to use more buying power. So really it comes down to, do you have the money sitting on the sidelines if your assumption hasn't changed, which is 100% bull.
And if it's just to close the position, you might as well just sell out of the call. If you're asking whether it's better to exercise and
then sell it,
and then sell it.
Yeah, no.
You
not
might
cost effective, not commission effective.
Yeah, and you have
nothing
overnight
good about it.
risk, because the stock's going to, when you exercise an option, or when you get exercised, either side of the coin here, it doesn't go through until overnight. Like, that's when the settlement happens. So you don't like exercise the option and then the next 5 minutes you have the stock. It happens overnight, so you have that overnight risk. You might as well just close out of the position if that is your thinking there.
Yeah.
There's no benefit. The only benefit I could see is if there was a dividend coming up, but even then, it's not even, like, you might as well sell the option and buy the stock where it is right now. I mean, there's probably a penny or two of extrinsic value. Even if it's deep in the money, you might not be seeing it. It might be 5 or 10 cents, or 2 cents or whatever, but there's something there.
Totally agree. Totally agree. Next question, please. I think SPY pays a dividend this quarter. I know you've explained before how to estimate the dividend, but can you please cover it again?
So the easy.
You learned this early on when we started trading. If you remember when we were doing bat versus bat.
Yeah, because this was like, dividend risk was like something you had to worry about because volatility was so low and we just grinded higher the entire year. So
if you had it
everybody
in the
was
money
short
call
calls.
spread, even you could be affected by the dividend. SPY, pays $1-ish dividend, sometimes $1.50. I mean, it pays a decent dividend. But go ahead, you were going to say.
So the easiest way to do it is to look. So this will probably come or will come around the December expiration. Is it on the 19th or is it like? I forget if it's.
Yes, 9/19. The dividend's $1.
Well, that was in September. That was.
So it's around the same time.
It's around the same time.
Yeah. So it'll be 12/19 pretty much, or 18/17, somewhere there.
So when we get closer to expiration, you'll see you can measure how much extrinsic value is in the options, the synthetic stock position. So the one way to do that is either by just doing a box or by selling stock and doing a synthetic long stock position. So sell stock, short put, long call. And if you do that whole package together, there's going to be an extrinsic value to that position because the dividend is coming up. It looks like it's free money. We all know it's not free money, but it's an estimate that you can use for the dividend. The dividend will probably come in higher than that amount because there's if there was a free money glitch there, everybody would take that. That's probably a low estimate to what that dividend is going to be. So we can take a look at that closer to expiration. It's not something that you can estimate right now, nor should you even be concerned about it right now because it doesn't your risk doesn't happen until it does go X dividend.
Closer to the X date, you're going to have them, all of those like March, June, SEP, and DEAS. Those are the 4 quarters. It pays a quarterly dividend. Those are the 4 months that you have to do it. Like Nick said, it's at the expiration, which is December 19th. It just so happens to be the same as September 19th. It's payable, like 2 weeks later, sometime in January, I believe. And in this example, you don't know exactly how much it's going to be. You could look at the gutter, the right side of.
Gives you an estimate.
It gives you it tells you what last quarters were, and this will be pretty close to that. And like you said, it's nothing to worry about at this time, especially in a $700 stock, $680 stock, whatever SPY is right now. So deep in the money calls because they have so much premium left to them with all this time to go. So there's nothing to worry about. But you are correct. If you were to look at the box or just the conversion, it should be trading which is, buy
sell
call.
Put, buy call, should trade to parity.
Should trade to parity of the stock.
Yes.
So that's the way to figure it out.
Yes.
You don't have to do all that work. You could just wait till we get closer to expiration and we'll tell you, pretty close, within a couple of nickels. You'll also get a notice from the brokerage firm, from tastytrade, whether you're long, short, it's just if you have a position in SPY, not one that has dividend risk, but you'll get an email that'll say, hey, you have a position in SPY, it might have dividend risk. Don't be alarmed that you do have dividend risk. It's just giving you a heads up.
Yeah.
It's just an automated email that's sent out to everybody in SPY to give you a heads up because SPY does pay such a big dividend, $180 dividend.
And it's not known prior.
So it's not known prior. That's correct. That's correct.
Tough one.
Next one, please.
On the far right side of the platform, under the Overview tab, one of the data points offered is correlation, which is correlation. I believe this correlation, but the correlation to what and how can I use this?
Sure. So it'll say CORR. It's in the top right-hand quarter of that gutter, which I was just talking about a moment ago, where you can also see what the dividend is. Matter of fact,
I can share
you want to show it?
Sure.
Okay. Nick will put that up there for you.
This is for Amazon here.
That's okay.
So Amazon, you have this correlation here. It's actually a negative correlation, which is pretty surprising. It has moved opposite to what SPY.
That's what the question
measures.
is. What is it based on? It's
Yes.
SPY. Put up SPY for just a quick second. You'll see it's got to be 100. You could have left the gutter up there. It doesn't matter. I would like to.
Yeah, it just goes behind the platform.
Gotcha.
Here we go.
Yeah. So there's the correlation, 1.00. So everything is beta weighted or correlated to SPY. That's the answer to the question.
And it's 3 months.
And it is 3 month time frame. That's right. So subject to change, subject to movement, right? So that correlation might be negative 36, which is inverse, can quickly turn to, positive.
And it's not a given. Just because Amazon has a negative correlation doesn't mean market goes up, Amazon goes down today.
Right.
It's just over the last 3 months.
And if you had looked at it 6 months ago, it would probably have a much higher, like positive 70-ish correlation because Amazon was going straight up with the market.
Yes.
7. Good job out of you. Even the S&P is down 4. Everything turned a little bit red, but again, it's basically unchanged here. And I think we're going to chop around. Matter of fact, a little public service announcement. We've done some research on the 0 days when a Fed meeting comes out. Doesn't contract as quickly as in past days. So if you've had, it's been a good. Shock. What's that? Not a shock.
Because you have a binary event in the middle of the day.
So if that's your bread and butter trade these days, and that's what you've been doing, maybe you should chill. Maybe reduce your size a little bit.
Go out for a nice lunch.
Go out for a nice lunch and wait.
Yeah, wait.
Take a quicker profit.
Yeah. Come back tomorrow. Get a nice lunch. Go shopping a little bit. Maybe get
24 to 48 hours after a move. Especially a move of some magnitude, usually it reverses after the Fed fund speak here. So a lot going on in the market, even though there's nothing going on, probably a choppy day, but we'll see. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Option
Jive.
Option Jive. You're going to love it. Back in 90 seconds.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's Option Jive. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, an Option Jive. Before we do, even the S&Ps, I didn't quote you how The range from last night was about 25 handles up or down, which is about the expected move typically for one day. But look here, one day move in E-mini S&P is around 42 and change. Seems unusually high. We've been looking at this, it's been in the $20, $25 range. A little bit volatility expanding a little bit in the
40 points.
Yeah, I know. All right, come on. I'm making a story here.
I know.
Give me a break.
But no vol. I don't know. It tells you nobody's scared of anything right now.
Nope.
Does that scare you?
Yes.
That spooks me.
Yes. Last time I think we had a Fed decision like this, we had a 200-point move to the downside, quick 200-point move to the downside over a couple of days.
Yeah, I feel like the last couple have been kind of inside.
Yeah, just after we had a move lower. I think I should go back and look at my notes.
All right.
Option jive.
Let's do it.
You know what? What difference does it make what it did last time? I mean, it has absolutely no bearing on this time. So
I agree.
It really
I agree.
means absolutely nothing.
Yes.
But take it back. I ain't looking at nothing.
Different flavors of buying power reduction. It's like Ben and Jerry's here at 31 flavors. Not that many, but
I
we
haven't
got a
had
couple.
Ben and Jerry's in years.
Yeah. They got expensive.
Did they?
Yeah, you get the pint jars. They're expensive now.
Yeah, food's expensive.
Yeah.
Everything's expensive.
Yeah, it's a 2% inflation.
That's right. That's right.
You measure it in Ben and Jerry's, it's like 47% inflation. Okay. Let's do it. Buying power.
Ready.
So we're going to be talking about buying power here. We're doing this again with our IRA discussion in the market measure spot. But the definition of buying power reduction of a position is the cash held by your broker as collateral in order to open and maintain that position. So regulatory minimum buying power are determined by FINRA. So this is the 4210 rule. And then there's other caveats here. You can have broker to broker differences. You can have exchange differences. You can have differences between account types, status. There's all sorts of things that go into there. The bottom line is that there's no X plus Y equals Z type calculation for buying power. It's going to be dynamic. It's going to vary broker to broker. It can vary underlying to underlying. And there's many, many factors that go into this, but we are kind of talking about a basic a way that you can kind of determine this. Buying power varies by position type and account type. So, naked puts are going to use different buying power than spreads or jade lizards, so on and so forth. There's a variable in all these trades. And one of the great things that my dad has said many times is like, you can think of this as kind of, the risk on the position, right? The broker is holding this amount of cash to allow you to put on this position. It might not be the max risk on the trade, but it's probably a realistic risk. And we measured that in yesterday's segments as well. We had two really good segments on like kind of understanding risk and quantifying risk, especially with undefined risk trades using CVAR, using buying power reduction. We looked at kind of how many times the strangle had the loss equal to the buying power in SPY. So, just keep in mind that buying power is a really good way to measure what your kind of max pain is on that trade. Doesn't mean that it is the max pain. It's a good metric to.
Yes, especially, and I know we're not talking about margin accounts here, but especially in a margin account. Let me take a step back here if we have a minute. I know you got 7 slides to go through.
Yeah.
The reason why brokerage firms in the past were never allowed to sell naked calls, magnitude of reasons, but the real big reason that they would sit on was you can't add money to an IRA account the way you can add money to a margin account. You can add money to a margin account anytime you want. There's no issues there. If you can't add money to an IRA account, that's the rules. So we had to come up with some sort of metric that shielded you from having to put money into an IRA account. So the money that they hold for a naked call, I don't know if we've ever said this before, has never, ever been tested in its history of selling naked calls. So it's never, ever happened. And that's how our trustee was allowed to say, you know what? Okay, never happened. That's the amount of money you're holding. It's good. So if the customer has that type of coin in their IRA account, then they could put on that strategy.
Interesting. Very nice. Little fun fact for you.
Yeah, sure.
Next slide here. So when we're talking about long stock, just a quick way to estimate your buying power. And of course, the platform gives you all this, so you don't have to do any of this tough math, even though this is easy math here. But you don't have to do any sort of calculating on your own. So typically, accounts can purchase equities using 50% of the notional value of that stock position. This is a Reg T account. Other accounts, like a portfolio margin account, are going to have a much more dynamic risk profile. So it takes into account your overall exposure, not only in that asset, but in your portfolio as a whole. So you might use a lot less than this, but in a regular Reg T account, if you're buying 100 shares, let's say they're at $100, it's going to use about 50% of the cash secured value of that position, basically as if 50% of what the value of that position is if you were to buy it all in cash. So you'd use about $5,000 here. Of course, there are some restrictions based on account types. In an IRA account, it's cash secured. In a margin account, it's 50%. Portfolio margin, it might be far less or will be far less than 50% there. And then stock to stock, it depends as well. If you have a much higher volatility stock, that's going to be priced into the margin requirement as well. It might use $7,000 or $8,000, or it might even be cash secured in a margin account or a portfolio margin account if there's an excessively high volatility there. So again, there's always going to be this kind of variable, and that depends on many, many different factors. When you talk about long options, buying power is just the premium paid. You multiply that by 100. That's because all of your options are on a 100 share notional. Those options control 100 shares of stock. So an example here is if you buy a call for $3, the buying power is going to be $300. So it's 100 shares at $3. The holder of the option chooses whether or not to exercise, and you can only lose on what you pay. So if you're buying premium, you can only lose what you pay for that option. It's pretty straightforward. Short options is where it kind of gets a little bit more variable, and that's what we're going to go into next here.
Good.
So when we talk about there's a lot going on here. It's not meant to, we're not going to talk through every one of them, but this is a good one if you're just wondering. You save this, keep this on as your screensaver on your computer.
Mm-hmm.
Buying power. So it's the maximum possible when buying power is equal to the maximum possible loss. So when you're looking at cash secured puts, so this is in an IRA account or a cash account, it's just the strike times 100 minus the premium collected. So again, this is your losses if the stock went to zero. When you get into a vertical spread, it's going to be the width of the spread times 100. So you have that's your max risk on the position minus the premium collected. It's all pretty self-explanatory here. When you get into naked positions on the upside, that's where you get kind of a little bit of a variable here, and we'll get into that on the next slide here. So next slide here for undefined risk positions. Rather than requiring the maximum possible loss, FINRA allows a lower buying power intended to cover 90 to 95% of the trades. So this is CVAR, right? So it incorporates basically a 2 standard deviation of risk on that position. And really the basics there is 20% underlying move as a loss. So it's 20% times the underlying value minus the out of the money distance minus the premium. And then there's also, you can incorporate the 10% strike break loss. So this is if you're, short the 100 strike put and the stock goes to 90, what does this loss look like? And then a hard minimum, which prevents the buying power from getting too low. So when you have something that's super high volatility, you're always going to be using some sort of buying power. There's no situation where you're selling premium and not being putting up any sort of risk capital. So these are just a couple quick ways that you can calculate this. And again, this is so you know how the sausage is made. They tell you this on the platform. Like there's no there's no gray area.
Right, there's no guesswork here.
What it is right now, and that can change, obviously. So that is something to keep in mind. So getting on to a couple examples here on the next slide here, talking about a $500 underlying and talking about the position details here and kind of walking through what this math looks like. And all of these are kind of in the same realm. This isn't a huge deviation. You shouldn't be surprised by these numbers here. So just talking about basic buying power or just a rough buying power of a naked position on a naked position on a $500 stock, it's going to be somewhere around, $5,000 to $10,000 is going to be your kind of risk parameters here. And you can see that the difference changes with the overall delta of the position, right? You're getting more directional. You're selling just the call. It's going to use a lot more capital than selling both sides. And that's because you can only have risk on one side. And so if you're only putting risk on one side, you have more total risk than if you have risk on both sides of the market, because one of those, it's like when you're selling an iron condor, you're not going to be margined on both these spreads, although you were at one point.
Yes.
Which is another thing that Tasty had an influence on.
That's correct. That's correct. Influential.
Mm-hmm. So when you're selling spreads on both sides of the market, you can only lose on one spread. You can only lose on the call spread or the put spread. You can't lose on both, assuming they're both out of the money at the entry and as you keep the position on. So you have less risk there. So here's just a quick walkthrough of a bunch of examples. Read those on your own. I don't think I need to walk through those for you.
No.
But just gives you an idea of how you can estimate buying power and what it should be. But this next slide is a good one because there's a couple common mistakes that we see a lot and that people kind of get caught up in. And so a lot of people look for lower buying power as a better trade. So I sell $1 here, but I only put up $2, $200 versus I sell $1 here and I put up $1,000. This one's better than the other. Nah, not so much. I mean, capital efficiency wise, certainly better, but there's different measures of risk here. So capital efficiency doesn't equal better risk-adjusted returns. It doesn't mean that trade is going to, it has a higher return potential, but that's because it has higher volatility. And when you have higher risk, you have higher reward, and that's all baked into it. Sometimes paying more buying power, and paying is probably the wrong word here, but putting up more buying power for a larger potential profit makes sense. Those are going to be lower delta options, higher probability of expiring out of the money, et cetera, et cetera. Buying power is equal to my maximum loss. This isn't totally true, but it's a good metric to think of a realistic loss. So it's true in the fact in defined risk positions, it is true because those are cash secured. For naked positions, you can lose more than the buying power. Is it realistic? Couple percentage points.
Yeah.
Realistic. It's
tailwind.
tailwind.
IRA account, it's never happened.
Yes.
Could happen.
Yes.
But it's never happened in the past.
Yes. Buying power.
The amount of buying power it holds. Sorry.
It's a good way to look. Buying power is a good way to look at a collateral as a realistic loss, not a loss cap. Just because your buying power is $1,000 doesn't mean that is the max you can lose on that. Those things can change. The other huge issue is that people look to max out their buying power or get caught up in the idea that they have cash on the sideline, that they're not efficiently using this cash that's on the sideline. When buying power, you're getting leverage. And so even if you're using 50% of your available capital, you are probably leveraged 1, 2, 3x to what your cash value of your account is. So it's important to understand that cash on the sideline is not being wasted. You're leveraged, and that leverage is way cheaper than what you would do, what you could do with cash, borrowing more cash to be that same sort of leverage. You're getting the leverage. That's why we always talk about keeping cash on the sideline, having some powder dry at all times, because it's not a waste. You are leveraged and you have more exposure than what your cash would allow you if you were just buying spot everything in cash.
Good.
Last slide here.
Words there, but good job as a team. Go ahead. Last
slide here. So buying power is collateral required by FINRA, and this amount varies, and it can change based on account type and broker-to-broker restrictions and stock restrictions and all sorts of things. So buying power on a defined risk trade is going to be equal to your max loss. On a naked position, there is some variable there, but it's a good way to gauge what your realistic loss is going to be. Lower buying power means more leverage, not necessarily less risk. So you have to remember that, just because something is a very, very high return on capital doesn't mean that it doesn't have the same risk on it.
Good job out of you. Good job out of the team. Good job out of your timing, too. We're going to take a quick 90-second break and come back. We've got the opening bell, and me found these messages back in 90 seconds.
Turn on the machine.
Turn those machines back on.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Nicky, we are back, son. We got about a minute and a half before the market officially opens here, but it's like it's open for us right now because we're going over it. Even the S&Ps are down 6 right now. NASDAQ's down 50. Russell's down 7, and the Dow is down 39. Volatility is up by 4 cents. Tight range in volatility, tight range in the E-mini S&Ps, about 25 handles. Bitcoin down about 1.25%. It's $1,100. Decent sized move after having a rally yesterday. It's been back and forth, steadily stair-stepping, as you can see from the chart. A little bit higher. We'll see if it can hold this 90-plus range. Ethereum basically unchanged. The two's been doing the same. Maybe a little bit more strength in Ethereum than in Bitcoin. Oil down 32 cents. Gold down $12, about $10 off of its lows. And silver up 44.5 cents. But just about 28 cents off its lows. A lot better than when Nick and I woke up when it was trading closer to $62, which is an all-time high in silver. Net gas.
You got to rub it in.
No. If something's at an all-time high or an all-time low and you're trading, especially a 50-50 product like that, there's your opening bell, by the way.
There we go.
See how I can make things happen like that? It's amazing, isn't it?
You're
usually going to have the opposite position because I would have the opposite position too.
On my Twitter news feed, the thing that just popped up is In-N-Out is retiring the number 67. 67.
In-N-Out?
Order number.
Oh.
It's because they were announcing it.
Oh.
And all the kids were doing
doing this? 6-7? Yeah. Oh, that's funny. Okay. You see?
Where we live in now.
This is the world we live in.
That's the breaking news. It's amazing.
You see how happy? Are you happy that you had that?
Yeah, I've been waiting to do like a 6-7.
Have you been really?
Kind of, yeah. But I'm turning into my father, so I miss the opportunities. I feel like there's been some of those times.
You just haven't been on your game.
Yeah, no. Well, I just miss it. You miss it. It goes over your head. I'm old now.
I can understand.
Gray hair.
It goes over my head too. Yeah. Let's see what else is going over our head here. You see what I did there? That's called the segue. With
Very
those
nice.
that are
professional.
Thank you.
Professionals
that are bucking the move, meaning going a little bit higher as the market's slightly lower here. Bob is the first name that I look at. Chinese stocks catch a little bit of, but they seem to have a inverse relationship to the market. What's Baba's relationship? Correlation's 0.73. So I would say that is very
negative 0.7.
Negative, yeah. I'm sorry, negative
Yes.
0.73. So it definitely has an inverse relationship to the market.
Good luck trading those. They are.
Yeah, it's hard.
The Chinese stocks are impossible. There's just so much kerfuffle.
Yep, Marvell down $2 or $3. MU down around $3 or so. Up. Marvell up. MU up. Baba up. Palantir up 2 and change. Chewy for earnings up $1.40. That's had about a $5 range already, higher or lower. Both market. Tesla up $1 and change. Amazon up $1 and change, pretty much unchanged to the upside. Let's see our downside movers. Microsoft down 9 and change. Microsoft caught a little bid the last 4 or 5 days after being
big move.
Big move lower in Microsoft, yes, after a big move higher the last couple of days, yes. Microsoft, two-sided action, trying to get its wings underneath it, hasn't been able to hold that. Apple Oven down $8 after being up, I don't know, about 5% yesterday. It's down 1%. Today. It was up 5% yesterday, down 1% today. You are closing.
I closed a put in DraftKings that I had for 35, 40 cents. It was a small, little tiny thing. So, but I also have long stock and I'm short 2 of the at the money calls. It's had a nice little rally. And then I went and sold the 450 puts in Microsoft. The stock actually just dropped another like $2. So you could do it even better. But I sold these. So I sold these out at 415 on the 3rd. I bought them back at 271 on the 8th. So you had about 5 days there. The option lost about half its value. They're now trading around $4 again. So I figured I'd sell the puts there. I know Ivy rank is not super high. It's at 16, but the stock's had a nice move today, lower $10, and has kind of been on the weaker end. And when you're for positions, like I traded at $4 a week ago. I closed that out for 50%. Now it's trading at $4 again.
Rinse and repeat.
If I was okay with
your
it,
assumption hasn't changed.
With a week ago, why not?
Sure.
So
it has a 0.40 positive correlation to the market. I'm talking correlations today just because the viewer.
Silver almost unchanged.
Act like you've been there before. I know you need silver lower. Silver's still up 10 cents, but we're hanging in there.
Palantir only up $2. These news events.
Man, Palantir gets a lot of shade thrown at it, doesn't it?
I mean, it's arguably one of the most overvalued stocks, and if you do a traditional by traditional metrics. I'm not saying that it can't grow into that, but when you think about PE ratios or any sort of
a lot of stocks like that, but yes, Palantir
I know
is
Tesla is one that has been like that for a million years.
Yeah, totally.
And I hate those discussions are so they are insincere because it's like it trades. Like if you think it's expensive, sell it.
Sure.
Like you could go sell it from your phone, before you jump in the shower. Like there's nobody's stopping you from doing that. So it I don't know. Put your money where your mouth.
Put your money where your mouth is.
Yes. I do have a little bit of short delta there. So we have just an out of the money call spread. It's not a small. It's a tiny position. Nothing.
Even the S&P is at their lowest level of the session here, down around 11 and change. Although the session's only 5 minutes long. I'm talking about overnight session into today. Let's look at the E-mini expected move around $43.50 for the 0-day options there. Gold down $13, trading near its lows. Silver up 8 cents, trading near its lows, about 10 cents away from that.
I will say, because I asked Vecchio this, because we hadn't seen the silver move get into the mainstream media yet. I will say that yesterday when I got home, I flipped on the TV and CNBC was on, and one guy was balls to the wall, long silver. Greatest trade ever, big time catch up. There's 100% upside through 2026.
And beyond.
wouldn't touch gold here. It's all about silver. Everything's going higher. So I think that might be a good sign here.
It really is funny how they can flip flop so easily with all of these, especially with whatever's.
But we got it finally. Now we got everybody.
That's the confirmation you needed that silver might be extended at this time.
That's how you get the.
Who knows what it's going to do in 2026 and beyond? But you're saying right now that's what you needed to feel good about your short.
To feel good, yeah.
I agree with you.
Yeah, so we're in the game there.
Very good. I don't know what else to say here about this market. I can say watch your zero-day trading. I said it before the market opens. It seems like the volatility doesn't come in as quickly as normally. So if you do trade those zero-day options, maybe trade them a little bit smaller today, or take your profits a little bit quicker in them. You do have the meeting coming out later today at around 1-ish Central Time. We've got What's Your Assumption coming up next, unless you have anything, I
don't know. Do I close these Marvell puts?
Marvell puts. Let's take a look at what you did here.
I sold them yesterday at
$2.22.
Stock's up $2 and change today.
Yeah, they're trading around $1.79.80.
I'm gonna put a little bid in there, see if I get.
Sure, improve the bid a little bit. Stock's higher right now.
Yeah, markets aren't great there.
Markets could be 10 cents-ish wide, a little bit more in there. So maybe improve the bid a little bit.
Yeah, I don't have a ton. Oh, volatility kind of stay in bid there though. OKLO.
My OKLO, I have an order working in there. It's still about 40 cents away from where I need to get filled, but that's a 1x2 call spread that's waiting in there. My silver trade I did from yesterday on option trades today.
Jade Lizard.
Reverse Jade Lizard.
Yes.
Because it's bearish delta, selling a naked call and a put spread. Did that around 320-ish. It's trading at around, let's put that in there, trading at around 280-ish or so. So you got about a 40-cent winner in there if you're looking to do something. I'm going to sit.
Cool.
Try to take a buck on it. But that's all I really have working. All right, you ready to take a quick 90-second break? Even the S&Ps, the sell-off is over. They're down $5. We'll take a quick 90-second break and come back. Volatility is up 4 cents. We'll take a quick 90-second break and come back. We got more Tasty Live after this with
What's Your Assumption?
10 trades. We'll be back in 90 seconds. Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Tasty Trade's Money Match event, unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with, what's your assumption? I think our timing was perfect on that one. Even the S&P is down 4.
I still got to work on it.
No, you're good.
I got to work on it a little late.
Nah,
a little late.
Nah.
Oh, wow.
You gave James a new toy.
Seriously.
Dow up 12. First one to go green.
Oh, wow. E-mini's only down 5. Cancel.
E-mini's only down 5.
All up a couple ticks. Bonds up 2. Like that.
Yeah.
2 ticks.
8.
Tiny baby little move.
Yep.
Nothing.
Nothing burger. Oops. Don't drink yet.
Yeah, don't drink.
Too early.
Andrew, please.
Andrew, don't
Not
do it.
yet.
Don't
It's
do
too
it.
early.
Don't do it.
There's a
Too
lot
early.
going
Too
on later
early.
today.
Too early.
You got to be, you can't. No more. Don't say that word.
Don't do that.
What's your assumption? Should we do it?
I'm ready. Let's go.
All right.
Russell up 70 cents.
Oh, man.
Cancel crash.
Buy the dip.
The dips are $5 these days.
They get shallower and shallower.
Yeah. A little scary.
Yeah.
Go ahead. See what's going on.
What's your assumption? Let's do it.
Ready.
CVNA, directional bias, neutral time frame on that's Marvell.
Oh,
Nice.
good
Took
job out of
$50
you, dude.
Just let that one rally a little bit.
Oh, nice. Very nice. Yeah. You improved the bid by what, like a penny or something?
No, like 5 cents.
Oh, you did? Okay.
I was way off.
Nice.
$50. There we go.
Good job.
Ajit.
was looking at the 500, 520, 1x2 call ratio spread. Senior bat. Would you buy Junior Bat a used car from Carvana for Christmas, the car vending machines? Taking some premium to spend on a nice Christmas gift? Giving almost 6 bones.
So a neighbor got one from Carvana, and it comes on a truck that's all like lit up. Like they make like a little bit of a spectacle out of it. It was kind of cool. Yeah. It was kind of cool. I don't know. I don't think we qualify for such an expensive car from Carvana for the little guy, but we'll see. Ajit. So what do you think about Carvana? Up $3.60.
Who's the Junior Bat, Ajit?
I don't think he's talking about you. You would be Senior Bat. You are my oldest child. You can't be Junior Bat.
Or you're Senior Bat, I'm Bat, and he's Junior Bat.
You're going to make me Senior Bat? That's so cold.
I mean, technically.
I mean, if the shoe fits, yeah.
Yeah.
I agree.
Yeah.
What do you think?
Be 2 Junior Bats.
No, I like where you were going. Yeah, Junior Bat, Baby Bat.
Yeah.
You've graduated.
I think I'm screwed either way, so it's fine.
Carvana getting put in the S&P 500. Wants to go kind of neutral. Ivy rank is 8.
I faded this. I put a put diagonal spread on, so I have a little bit of short delta. This is kind of a double down. I don't mind it, but what do you think about?
Markets are not liquid.
No, they're like $1 wide.
Or more. Low Ivy rank.
What do you think about doing? There's a ton of call skew here.
There's a ton of call skew. Stock's been on a tear. It's getting put into the S&P 500. I mean, I'll put this up on the screen. I mean, this is the stock 1, 2, 3, 4, 5, 6, 7, 8, 9. Big jump. 10, 11, 12. 12 days of Christmas. 12 days of straight up moving Carvana.
And these aren't small up moves.
These are not small up moves.
That's like a, what, 25% in...
Yeah. Let's be friends here. 300 to 450. It's actually 460, but 300 to 450.
Yeah.
Yeah, I would say that's a substantial move.
What do you think about the 500, 520?
Strangle?
No, ratio, like he's.
Ratio spread. Sure.
He's looking at 500, 520. You can move it to the 500, 530 for $1. I don't know where you're going to get filled here.
I mean, this is omni. When you're doing a ratio spread, omnidirectional. This would be, in my eyes, slightly bearish. But I know your upside.
If you go to the 520, slightly bearish. If you go to the 530, it's kind of not that bearish.
I mean, what about we go a little bit further out? Are you looking 520, 540? I don't want to do the 500, 520.
I was thinking of 500, 530.
Okay.
It's 30 points wide at $1. I mean, like, I'm going to put it in.
$1.50 credit is the mid price.
I was going to put it at $2.50 and see if we get filled. Move it from there.
Okay.
I mean, this is one, if you get a little bit of a downside move, maybe you buy in the risk and make it into a butterfly. You know, the dollar-ish credit, gives you a little bit of flexibility in it.
It gives you a break even over 560, which has a probability of happening about 15%. So I don't hate it. I like the idea of having the embedded long call spread. I like the idea of having a wider embedded call spread than the tighter one that Ajit put on here. But you getting filled at $1.50 is even with the stock going higher, you're smoking
opium.
But you could put it in at your price and
$1.50.
Oh, there you go. Well, stock just upticked another 50 cents, 5.50. You caught the top. You're amazing.
Top for now.
The recent top.
This thing could go up $10
The top
more.
from this moment.
Yeah.
I mean, it has 10 short delta, 9 and change.
Yeah, it's not.
But it's dynamic delta, right? As time goes by, you'll actually get a little bit long in there. If the stock stays right here, if the stock goes higher, you get a little bit short. Whatever. I like it. Omnidirectional trade.
Yeah.
Put it in at your price. That's the most important part.
And go above the mid price and work your way.
Go above the mid
Don't
price
have to chase.
and get filled. Yes. All right. Do it. Next one, please. Thank you, Ajit, and thank you for all your help in the chat room. Very active in there. SPX, 0 day. Iron Condor is doing well. It will take a while to break 7,000, so regular neutral play, 20 delta or $25 wide Iron Condor. As I said it 2 times already, I'll say it one more time now. Typically, from our research, you don't get the same vol contraction in 0 day. I would probably abstain. We trade it small. If you're trading more than one contract, I would probably cut my contract size in half today. With the Fed meeting today, seems like volatility contracts a lot slower, or take my profits a lot faster. What do you want to do?
Yeah, I think you got all. I don't think it's a 0 day.
I agree with you.
I mean, unless this is your bread and butter and you don't mind.
That's what I said.
You don't mind the risk here, but I don't mind waiting and doing one tomorrow.
Yep.
And getting back to the program. I think no reason to chase.
Totally agree with you. Had good success with it. Had a nice success rate.
Yeah.
Got some money with it. I think today you can abstain from that.
Yeah. So I'll pass, but thank you.
Very good. Next one, please.
NVIDIA Google pair trade.
Short-term bullish. I think it wants to be long NVIDIA. I mean, usually when you put on a race on a spread like this, the first one that you're talking about is your long. The second one is your short. So long NVIDIA, which they put down in the description, just telling everybody else. If you were doing like a gold-silver ratio spread and you wanted to get long, you'd be quoting gold first. Anyway, long NVIDIA 2 times, short Google 1 time. Pair has recently bottomed, is on its way back up. I put on this trade last week and took some profits. I'm watching closely to see when I want to re-enter. This is from Reddit. What's the name there? Zophius?
Zophius. Morpheus, but with a Z.
Very good. Very discreet.
So you want to do the stock? I'm asking you this. Like you want to do 200, 100?
I think that's really the only way you can do. Like
if you're looking to
benefit from this pair. NVIDIA is down 32 cents today.
Yeah.
Google is up 31 cents, so you'd be doing it at a better price than it was yesterday.
Yeah.
You can go as big or as wide as much as you want. You could do 200 versus 100.
Yeah,
you could do 100 versus 50.
Yeah.
I mean, you're doing it just as an engagement trader. You could trade odd lots. I mean, I'm not doing 1 by 2, but I mean, I think 100 by 50 is It's a good enough way of supporting this one, especially when you're using stock or 200 by 100, which you're doing.
Yeah, make it a little cleaner.
You bought your NVIDIA and you sold your Google. Good job out of you.
There we go. Yeah.
1 by 2.
Exactly. I mean, we'll hopefully scalp it.
Yep.
Cool. I like it. I'm in.
Awesome. It's not a position. It's just a trade.
Yes. I'm not making a long-term trade out of this. This is a pairs trade. I like it.
Got it. Google.
I'm new. We don't trade a lot of stock, so,
No, I like it. Yeah, sure. No commission. There you go.
Yeah.
No commission on stock trades. Next one, please. Oracle earnings play. It's here. It's finally here, the 10th, after the market closes today. Neutral to slightly bullish on Oracle earnings. What do you think, Bats? Sean in Hong Kong. Good IV rank in Oracle. Oracle has an IV rank of 82. Let's take a look over the last 5 days. Oracle volatility hasn't changed, so it's been staying bid and high. What do you think? Talk to me, Goose. Neutral earnings play in Oracle. Markets are not going to be the greatest. I mean, I default to January on this, even though I know it's an earnings trade. You got January
just sell the puts? What do you want to do?
Well, he wants to be neutral. So it is both sides. IV implied volatility is 63. I think it's going to go into the low 50s.
Yeah, but like selling a 20 delta put is a neutral / bullish trade.
Selling a 20 delta put is a neutral / bullish trade.
I mean, you sell the 180 strike puts, you're pretty neutral.
That would be the 13, 15. Oh, what month are you in?
I'm looking at January.
All right, so you're looking at
I'm just saying conceptually, yes, you're selling puts, you want the stock to go up. But if you're selling 20 delta puts, it's not like you're
neutral, slightly bullish. You are exactly the way he's asking you to do.
Yeah.
Neutral to slightly bullish. Yeah, I mean, it's 13 deltas. You certainly could do that.
What do you think? Well, what about the 185s at $4?
Sure. Market's 385, 410. Stock's a little bit lower. You're improving the offer. I like it.
That's true.
You don't get filled. I don't think you...
I think you could do like a Jade Lizard if you wanted to, but if you're going this far out and you got earnings coming up, I'd rather, have the stock up $5 or $10 and be out of this position. Whereas the Jade Lizard, you probably don't move all that much.
That's right.
Especially if you're doing like a $5 or $10 wide Jade Lizard.
Yep. And then you got filled at your price on a little downtick on the stock.
I like it.
Good job. And the guy wrote in from Hong Kong, for crying out loud. You should support him. Yeah. Thank you for watching.
I like it. Tasty internationally.
Worldwide.
LMT. Ooh.
Lockheed Martin.
So I did play this. This was my Vecchio War trade when he got me on the long call spread in oil over the weekend. I was like, well, if I'm doing that, I'm getting Lockheed Martin as well. Because
Lockheed Martin had a nice little rally the last couple of days.
I closed on Monday.
Yeah.
Or on Tuesday. When did I close that?
It's back to probably where you closed it. It's back to 458. Well, you know what? I can look on the follow page.
Yeah, I actually, it's right. It's trading right around because it was yesterday when on Monday when I closed it. It did have a continuation of that rally.
Yeah, you put it on when the stock was 450. Took it off when the stock was 457.
Yeah.
Stock is 459 and change right now, down $7.
Yeah. What do you think here? All right.
He's bullish. He's bullish.
America.
Senor Batista. 3 T's total. It's BATTISTA.
That's right.
It's okay, Roberto. Not from Chicago, South Side, Netherlands. America. Admittedly, not the best markets. True, market makers need to feed their family too. That's bull. They can do a lot better than that. But going into the holidays, the upside is guaranteed.
Oh.
First guarantee in life I've ever had, getting it right from Roberto. When it comes to delivering presents, nobody does it better than these guys. Sell the at-the-money put. Lockheed Martin, IV rank of 10. Would not put me at selling the at-the-money put just because of that, right?
Some of these markets really stink. Like when I put the trade on originally, it was a fight to get filled, and even getting filled on the close was a fight. You can look at some of these options. They're $2 wide, $3 wide.
Yeah.
On some of these, on the upside, the at the money 465 call in January is $4 wide.
The 455 is 1380, 1880. Yeah, I mean,
You got $7,
$5
7
wide.
at 12.
I think you abstain,
Yeah.
or if you're looking to do anything in here, you buy a strike or two in the money, you sell a strike or two out of the money.
And it'll
like you do
trade
the
it
455, 465, $10 wide, should trade around $5. You go in at 460. You know what I'm saying? Like, and that's your 1-to-1 shot in Lockheed Martin.
Yeah.
That's the way I do
You want
it.
to do that? You want to do a $10 wide out in January?
Oh, sure. Now you can do the 455, 465.
Yeah, stock's right at 460. This should trade.
Big dividend coming in. A big dividend came 1201, $3.45. So you won't have to worry about that now.
And just to give you some context here, peeps, if you're looking at this, these spreads, 60 cents at $9.
Yeah,
You're not. So this will.
You're not getting in good. You're not getting out good. This
is a set it and forget it trade. Like this is one where,
we know, or or everybody knows that if the stock is trading 460, this $10 wide spread right at the money should trade around $5.
Yes, I'm gonna try.
Stock's been lower. It's been a little bit weaker.
I'm gonna try and put it in at like $4.
Okay. Well, I was saying 460, but you can do what you like.
Yeah, I was gonna leave it at $4 and see if we get filled.
Yeah, you're looking for a downtick.
Yeah, if the stock goes down another dollar or two, then
it traded down to 456. It's 460 and change. So it went down $4.50. So if it goes back and tests those lows again, you'll get filled.
Yeah, cool. So we're gonna work that order. So we're with you, but waiting on our price here, $4.
Very good.
And we're out in January.
Next one, please. TLT bullish. Now we have these positions on already. Long bonds for the long haul. Covered call. A poor man's covered call. Ivy rank doesn't look exciting right now. This is David from California, Irvine, California. I've been there. Beautiful area.
Yeah, I think we're with you on this. So
I think we're kind of locked and loaded in there too.
yeah, we're long bonds. We're long notes. We're with you on this. I don't know if you're looking to get smaller. I would use TLT. You look at like a poor man's cover call, like you have diagonal spread. Even if you want to just get a little more capital efficient than really what our position is, buy it in the money call as a synthetic stock position. You could do it on a shorter duration too. It's cheap, to do that as opposed to like buy shares, especially if you're in a cash or IRA account, like we did our buying power segment on. That's how I would approach this. But I'm with you on this, so I'm going to pass on this trade. But we're
pulling for you because we need it too.
If yours works, ours works. So I like it.
Okay. All right.
Next one.
Next one, please.
Netflix. All right. See, everybody's looking at the same things. We're looking at the same things. We've been trading Netflix.
Yeah, bullish in Netflix.
January 16th, thinking at the money put spread or just a long call spread. So I'm with you here. I'm short the hundreds and the 96 puts. I scalped out of the 90 puts yesterday. The great thing about the split is now you can trade this naked. So if you've been, looking for something that's got a little bit higher volatility, 37% monthly implied volatility, not through the roof. I rank at 26, relatively decent here. It's now kind of on the board of tradability, but I'm already locked and loaded. I basically have synthetic cover calls here, so I'm with you, John in Denver.
All right. So we have to abstain. I agree with you.
Yes.
Next one, please. ADBE bearish for earnings. Oof. ADBE on its butt. We typically are contrarian. Now it has caught a bid for the last 30 points or so in the last 2 weeks or so. Not as bullish as others. Adobe's been overpriced for a while. It's a little back and forth action here on his opinion here. Josh, Seattle. What do you think?
I don't know. This is a tough chart to be short into.
For us, the way we like to do it. I mean, Adobe does have good IV rank. So if you are bearish here, maybe it is a naked call spread if you want to. But I'm not interested in But I'm pulling for you, though. I don't have an ADB position.
I think we got to wait until the end of the day either way. I know we did the Oracle one, but was an out of the money put, kind of a nothing trade. I think, I don't know, you got an IV rank of 61.
IV rank's pretty good. I mean, if you want to support, do both sides. Do both sides with a little bit of long delta and not support Josh as much. Do an iron condor. You look at January monthly implied volatility, it's only 43 compared to around going into the 4. So you're looking at about a 4-handle move here, a lot different than what we looked at for the last earnings play, which is Oracle, which has a lot bigger vol differential between the months. So I like Oracle as a better trade with crappy markets like Adobe than Adobe.
Ugh. Selling this thing in the hole.
Ugh.
Looks gross.
Mm-hmm.
What about playing this like 1x2 to buy the January, or you want to do like a put ratio?
Sure, if you're dying to do something in Adobe, what month are you looking at?
You want to do it in the weekly?
With 2 days to go?
Yeah. You do something like the
you got a
30,
$24 expected move.
You do something like the 30, 25, 315.
330, 3.
Buy the 330, sell the 325, sell the 315, like a skip strike. A ratio.
52-cent credit?
Yeah.
What do you? I mean, your break even's all the way down to around 310 or so. I mean, what are you looking to?
You did this kind of junk for 10 years. What do you mean? What are you getting?
I don't do things for 50 cents.
I know.
Buck and a half. Yeah. I get to that.
I don't know.
What are you looking to make here? So you got a 20 here. Let's just go over this. Just for you got a $25 expected move. The stock is 340. You're hoping
you get a move at the expected move. You make $2.
Yeah.
That's your max profit.
Yep.
Got no risk to the upside.
Got no risk to the outside. Your break even is 310, which is around 2 times the expected.
What about you make it a butterfly? You buy the 295 and you try and get this for a tiny little credit.
Which one you trying to do?
You buy the 295 with it.
Oh, so you're selling us, buying a spread, selling
buy the
a spread.
30-25 put spread. You sell the 15-95 put spread against it. So you're 20 points wide. You have a 5-point wide long spread, 20-point wide put spread.
And you're doing it for a small credit. Gives
try
you
and
break
get
even
10
just
cents.
above 310 or right there at 310. I think
a shot trade into the end of the week.
Yeah, your risk is $1,400 or something like that.
Let's see.
I don't hate it.
Let's see if I get.
Let's see what you're gonna get filled on this.
Yeah, the markets are not great. I'm gonna try 20 cents and.
Stock's unchanged. Maybe you leave it in, see how your mid-price changes, and maybe how the markets kind of tighten up as the day goes on.
I'm gonna put it in for a 10-cent credit. See if we get filled on that. Need a little.
Yeah, mid-price is 20-cent credit, so the lower credit you receive, the worse it is for you. So you're improving it. You're going to need a little bit of movement.
Yeah.
Okie dokie.
All right, I'm in with you, Josh.
All right.
Yeah.
We're trying to support you here. Trying to support you here.
Next one, please. 6J. Oh no.
No, bullish. Baiting you here.
I know.
6J up this morning about a quarter percentage point. That's 175 ticks. But it's gotten 2 weeks ago it was getting bid.
Yeah.
It sold off. It's back into the lower end of its range here. Yen back at lowest levels, they say. Dare to catch the falling knife. Long futures. Jimmy C in Sacramento, CA. What do you think?
I'm long the yen in the FX products. You want to do just like an at the money call spread? $500 kind of risk reward?
Sure. I hate the yen trading it, but if you want to, go right ahead.
Let's see if I can.
You the man.
I mean, we got to support the peeps. Nobody knows anything anyways.
Of course,
Come on.
of course.
Oh, so trade. All right, we did an at the money call spread 30 days.
Very nice.
Long call spread.
Very nice. You did, and you got filled at 34.
Cool.
On that.
Yes.
A let's see how you did on those. I think you did.
I got one more. We got one more.
Oh, so sorry. Sorry. I was getting ahead of myself. I apologize.
I bid.
You're long this.
I'm long this. I'm with you, Eric. We had a nice little day yesterday.
Down 56 cents today after the breather.
Yes.
Taking a breather after the nice move up yesterday.
Yeah.
2 prior days was lower, but it's higher than it's been in the last 4 days or so. So you got to be happy about that.
I think it'll be an interesting trade here towards the end of the day. We'll see. See what happens. But I'm with you. I'm fully locked and loaded.
So, Eric, you're not going to do anything here? Jam 57 covered call or naked puts?
No. No, I'm there. I'm there.
All right. Beautiful. Beautiful.
I think we did a lot of them / had a lot of them.
Yes.
Those that, you know, we're all kind of looking at the same thing here. So we're working that Adobe Butterfly. LMT, we gave an to. But we're working that one.
We're working.
So I'll give it a
give it a little more time.
Yeah. And Netflix we already have, TLT we already have. So we're there. We really only passed on the SPX 0-day trade, which
That's
we talked
correct.
about this morning. A lot going on today. Pass on the SPX.
That's correct. Just because that's what our research shows. And, you know, listen, we try to listen to our research all the time. So live by it, die by it. Dow up 109, Russell up 5, Dow up, I'm sorry, even the S&P's up 250, Russell up 5 and change, Dow up 107. NASDAQ, the only red, down 56 or so. Bonds up 10 ticks, 115.16. Get on your horse, little doggy.
Let's go.
Notes up 1 tick. Bitcoin down 1,100, sitting right there. Gold down $7 or $8. Silver up 14 cents. We'll take a quick 90-second break and come back. We got more Tasty Live and special guest TP coming in. Strategies for your IRA. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means. Time for another great segment here, Strategies for Your IRA, and special guest, Mr. Thomas Preston, affectionately known as TP. How are you, my friend?
I'm great. Thanks for having me on today. Having a lot of fun being on the air with you guys.
Awesome. Been too long. Good to have you.
So Nick, are you how do you feel supporting your dad all this time? I mean, you're a young guy. You're at the prime of your life. I understand it, but it's some heavy lifting, right?
Well, Vanetta and I were talking about we've been looking for retirement homes for him. We will make sure that he gets a very cozy place. Be very good care for him. So we're working on it, but
You're cruel.
It gets harder by the
ITP.
day.
Right, TP?
You are seriously, Bat.
What do you mean?
Kids,
I'm going to put him in a good place. He's going to have a great place.
The appropriate answer is Nick. Okay, and since Christmas is coming, and you want to score some points with your dad, presumably, is you say, TP, it's always a lot of work, but I love my dad, and
I'm up for the challenge.
Together. I love the challenge. He's not going in a nursing home anytime soon.
That's right.
Yeah. Poor bit.
He's going to be cleaning my house.
No, I'm off diaper duty. We decided that one of the girls can take that one.
Vinny's my own.
Vinny will take that.
Yeah, Vinny will take that. He's the closest to a diaper.
Yeah.
So here's what we're doing today. We are given this the middle of December. And a lot of people are, as you know, sort of wrapping up things for the end of the year. A lot of people taking distributions from their IRAs before the year end and all that. And people are looking to position themselves for making new contributions at the beginning of the year before the, April 15th deadline or whatever. Mm-hmm. And some new folks just sort of getting into this and saying, hey, I want to start an IRA or, one of the various flavors of IRAs, but what do I do in it beyond buying an index fund?
Okay.
Like everybody else does. So that's one of the things that I want to talk about today is the foundational strategy for IRAs. And I think you guys know what this is because we've been talking about this stuff for 20 years. Mm-hmm. But I think it's important to outline why what we're going to talk about is the foundational strategy. All right? So let's hit the next slide. Let's get this thing going. So I did a little bit of research, and I just wanted to chat GPT or Grok. I can't remember. And I asked what percentage how much money is held in retirement accounts? And I saw fairly consistently through some different sources that about 34% of assets are held in retirement accounts. That's going to be IRAs, individual retirement accounts. That's going to be 401ks. That's going to be other retirement products. I think versus, and that number seems a little low, given that I think a lot of people put their savings in 401k, the automatic contributions, things like that. I don't know what do you guys think? Bat, you've been around the block for a while. Do you think 34% sounds high or low?
I think it sounds low, to be honest with you. I mean, I think a lot of times when you first, I don't think a lot of people fund them. Like, I think that 34% of households is kind of a high number when they think about funding them year after year after year. I think a lot of people have them. That's but I think a lot of them are dormant. So I think this is
I think that number is probably a good representation of illiquid, so to speak.
Yeah.
Of stuff that's just passive. Passive value.
Yeah.
I don't think, that 34% seems about right, but it's probably all in stock that's going to be sitting there for another
mutual
25
fund,
years.
Or let's say, are they including people's houses, real estate, things like that?
Sure.
Because I do know just from talking to people sock away a lot of money in people's basic retirement plan is their 401k.
Yeah.
That's for most people. But here's what's really bugging me is this next statistic, and this is an educated guess. by people because nobody really knows. But only about 2% of those people have individual self-directed IRAs. In other words, they've got their 401ks. Maybe they rolled over money into an IRA with a money manager or something like that. Only 2% of them opened up an IRA, put some money in, transferred some money in, and started trading. That is pitifully low.
Yeah. I don't think there's anything.
That's systematic too. It's really hard. Like in a 401k, you don't have that many options, and even in an IRA account, if it's not at like a retail focused broker, if you're sitting at somewhere else that's not like a Tasty, it's very hard from restrictions to technology to really get involved in anything. It's and again, I think it goes to the first point of like a lot of it is just parked wealth. It's not like liquid wealth that people are trying to it's just kind of sit there and let it do its thing.
Well, and I don't want to derail this discussion, but what you're running into there, Nick, is it's a whole industry that makes money off of you not doing anything.
Yes.
Okay. So here, just stick it in my mutual fund. And I'm only charging you 50 basis points over whatever. It doesn't seem like much. But when you collect billions of dollars in assets and it just sits there, that's how these places make money. So they have a personal interest in you not sending your money out and trading it yourself. But that's a different discussion. Let's go to the next slide. So the positive in creating an IRA is it's whether it's traditional or Roth. Traditional is pre-tax contribution, Roth is post-tax contribution. I don't want to get into the whole tax thing. That's not my expertise. But basically, the money grows tax-free or tax-deferred on your trading, on your investments. The negative, and this is what we're going to talk mainly about today, the negative is capital requirements for stock and naked options can be much, much higher in an IRA account because you can't borrow money in an IRA. In other words, you can't go debit cash. And all naked short options like short puts have to be cash secured. So it's like a cash account in that sense. There's no margin. You don't get any benefit from the margining rules. That's just the way it is. Those are laws, okay? And they just don't let you play like that. So that's a huge negative when it comes to sort of modest size IRA accounts. If I have $5,000 in an IRA and I want to trade Spider and I want to sell a put in SPY, I can't afford to do that, right? I can't afford to be. And guys, with the market at all-time highs, the prices of individual stocks are just so high. You guys were talking about Netflix earlier. Then can a small account just trade a naked put in Netflix? No, it's too bloody expensive, even after a split. You can't do it. So let's go to the next slide. So the solution is verticals. Okay, and we're going to talk about just short put spreads here today. Not talking about bearish. I'm talking about just if you want to get long in an IRA. For example, long SPY shares and short SPY puts carry significantly heavier capital requirements than an IRA compared to a margin account. Verticals typically, not always, but typically have the same capital requirement in an IRA as they do in a margin account, which are significantly lower. Remember, because a naked short put is an undefined risk trade. Long stock is undefined risk. Short put spread, defined risk.
Long stock is defined risk, but it can go to zero. It's the full boat.
It's the full margin.
Okay, defined risk. Do you want to lose $670 on one long share of SPY? Yeah, it's defined risk until your account blows up.
Sure.
Okay. Sure. So that's the point. So here, what we have, long SPY, we have capital requirements on the right-hand side, and margin account versus IRA. For SPY shares, $684. If you buy 100 shares, $34,000 in a margin account, $68,000 in an IRA. Short a put, in margin account, $13,000. That IRA, the margin requirement is the strike price. Okay, $67,000 to sell that put. But 67, 68, excuse me, 76, 78, 676, 678 put spread in SPY, taking a 60-cent credit. And I don't care. I'm not talking about IV ring. I'm not talking about expiration. I don't care. I take in 60 cents. The margin, the capital requirement in margin account, $140. IRA, $140. Okay. This is why a put spread is a foundational trade. Yes. Most people can do these things. Most people, if they put $2,000, $5,000 in a self-directed IRA, maybe they've got a big 401k somewhere. Maybe they've got a giant managed fund somewhere, and they want to try it a little bit. So they do a partial transfer into a self-directed IRA. This is how you start out. You don't have to suck up all your capital in a one naked short put. You can manage your capital, have a higher probability of profit just selling that put spread. Let's go to the next slide. So here's where we get into the actual returns on what you're doing and why verticals are attractive, more attractive potentially than a naked short option. Comparing short puts to short put verticals, the probabilities are similar, but potential return on verticals is much higher because of the lower buying power requirements. So I sell that 678 put. I take an 860 credit. That's awesome. The probability of profit's about 68%. In other words, the 68% probability that it's going to expire worthless. But if I take that $860 max profit and divide it by the $67,000 margin requirement, my return on capital is 1.2%. Okay. So if I do this once a month, yeah, okay, so if I do the 30-day option, great, okay, that's fine. But if I sell the put spread for 60 cents, and oh, by the way, Nikki, I can do this if I have a $5,000 self-directed IRA. My return on capital is, let's do the math. $60 over $140 of buying power requirement is 42% return. Now, I'm not saying that I'm not saying you're going to make 42% return every year. That's not what I'm saying here. You still have risk. If the stock goes down, if the S&Ps go down, wait a second. If the stock goes down, you're going to lose money on your short put spread. You're also going to lose money on your short put. You're also going to lose money on your long stock. And by the way, your long index fund too. You're not going to escape losses if the market sells off. But if the market rallies, or if the market doesn't do anything, which is what it does most of the time, your return on capital is going to be higher selling that put spread.
Yeah, I mean, this is one of the things that I tell beginner traders is that starting with a put spread is the easiest, most basic way to get an intro to options. And it's easy to understand, and it's easy for people to lean long. Like a lot of people get caught up in being short delta and scared of the upside. Everybody is fine with being long the market for the most part, like because everybody is,
especially an IRA account. That's we can ask Gronk, see how many lean long. I mean, you really only had long strategy. So there's nothing else you could do.
So this is a good little intro and starting point for people that are looking to do something with an IRA. And you don't have to do it with the whole account, right? You can have 80 or 90% in just long positions and then sprinkle in some put spreads to give you a little bit of a higher potential return on capital over a long period of time. I mean, it's a no-brainer to incorporate this in some way.
Let's see that in the next slide.
Yeah.
So okay, Nikki, you want to trade NVIDIA? You want to trade Apple? You want to trade Bank America? Am I looking at any IV ranks here? No. Am I looking at anything other than just pick a liquid stock? You're bullish on NVIDIA. I'm going to sell the naked put. Oh, wait a second. The probability of profit between a naked short put in NVIDIA and the short put spread, 78% to 75%. That is a meaningless difference. Okay, 3% probability of profit, that's not how you make money. That's not a difference, okay? If we're talking about 30% versus 78%, that's a difference. But 75 to 78, those are basically the same. But the capital requirement, $17,000 to sell a single short 170 put in NVIDIA, I can't do that, but I can sell a 65-70 put in NVIDIA, takes $405. Return on capital, again, max profit divided by capital requirement, 1.8% on your short put, 23% in the put spread. Do the same thing in Apple, 1.1% return on capital, 28% on the short put spread. Bank America at $54. Okay, we're talking about, high stock prices. Well, Bank America's $54. Maybe I can sell a short put in there. Well, the 52 put, I still need $5,200 to sell that naked short put, but I can sell a 2-point put spread, $170, get a 17% return on capital. Now, here's the caveat, and you guys talk about this a lot, is you're going to have to hold these short put spreads a little bit longer to get your profit. Okay, short put spreads and spreads in general generate profits more slowly than a naked short option does. So the argument against this is Nick will say, well, TP, if I sell that 52 put or 270 put in Apple or the 170 put in NVIDIA, I don't have to hold it as long. I can take it off for a profit faster. Yeah, that is true. You're absolutely right about that. But you're still using a boatload of capital to make that smaller, faster profit. And Tony,
it goes slower. It goes slower against you too. I mean,
that's exactly right.
So I mean, you might not benefit as quickly on the way up, but you don't lose as quickly on the way down, which gives you time to do something about that too. So that
is exactly right. And that's why I keep going back to this. And what Nick said earlier, this is a foundational strategy. Let's go to the last slide. So the takeaways, right? And I could go on and on with the takeaways, but here are just two of them. Verticals can have a higher return on capital if the trade is successful because they have significantly lower buying power requirements than an undefined short premium trade. Okay, we just saw all those examples. These lower capital requirements can go especially far for IRA accounts as their capital requirements for undefined risk trade setups can be steep in comparison to those from Ardent accounts. What this allows you to do is with, let's say, a $5,000 self-directed IRA, I can put on 10 of these verticals. I can build a little portfolio of short put spreads. What does that do? It teaches me how to trade these things. Mm-hmm. I'm becoming a better trader. Not necessarily profitable. I don't know. If the market sells off, you're going to get killed on them. Okay, I get that. But you're getting better at learning how to spot these things, how to pick the verticals, how to look at these probability numbers and your time decay numbers, how to look at IV rank. And then, Nick, to your point is, what is an iron condor? It's two verticals. Mm-hmm. What's a jade lizard? It's a vertical and an extra option. What's a zebra? It's a long vertical and an extra long option. What's a diagonal? A calendar spread in a short vertical. Mm-hmm. Okay? So once you get these verticals, and the IRA is a great place to practice with them, to try them out, then all the other strategies make a lot more sense. Mm-hmm. That, I think, is the biggest takeaway.
I agree. Well done. Well done, TP.
Got to start somewhere.
A lot of information there, but well done by you, my friend. So you're
thank you.
Great addition to have you on. Appreciate it. What do you think about this market here, TP? Let me switch gears on you just a minute. You got an unchanged market. Fed coming out this afternoon. Bonds have been weak. Catch a small bid up 10 right now. Silver's been on a tear to the upside. Let's call it basically unchanged, up 18 cents because we're a little bit short it. Gold is down 11. What do you think here about the market going into the end of the year?
I think so. Here's the thing: the Fed funds are pricing in. It's 90% probability we're going to see a rate cut. Okay, but everybody already knows it. And if you look at things, I had to shut down my platform because the video people don't like me running too much bandwidth on my other stuff.
Sure.
So I have to shut it down. But
so
if
we
you
have
look
good
at
quality, so your face looks pretty.
Yeah.
Because
we need the bandwidth.
this is how I make money.
I understand.
Okay?
I understand.
This visage pays the bills.
I understand.
Okay?
That's the moneymaker, we call it.
That's
the moneymaker.
So here's what you want to look at. So look at like the 2-year 2-year notes and the 5-year notes. Those are what the
here, I'll go into it for everybody here.
Xeon.
Yeah.
I can never remember. I have them loaded up on my watch list, but those were down a little bit. So everybody's kind of waiting and seeing what's going to happen. Normally, I sell my 0 DTE strangles and iron condors at about 9 o'clock. Doing the show, that's okay. I don't know if I was going to trade them anyway today, because I think the premium in those options is going to stay relatively rich until we get an announcement this afternoon. So that's why normally I'll put those iron condors, those strangles on at 9 o'clock, take them up by 10:30 or 11, and I make my 50% profit. That's how I pay the bills. Today, I have them loaded up in the platform just to know what I would have done, but I don't think I'm going to be able to take those off for any time close to it.
We've done the research. It doesn't collapse as fast. The volatility doesn't collapse as fast. It's really gone nowhere. But the volatility doesn't collapse as fast on those. As a matter of fact, the expected move was around $40-ish. It's $38-ish on ES an hour later. So of course volatility is going to come in a little, but not nearly as much as it typically does. So
no. So the other thing, the other thing too is, let's say they cut rates. I think that's a foregone conclusion. I don't necessarily think the market's going to see that as a bullish sign. From what I've heard, the Fed governors who are voting on these things, and Nick, I'm suggesting I'm putting in an application for you to be a Fed governor next year.
No, you TP. I would vote for you. I would put you.
I make too much money as a model, okay? And there's conflicts of interest working for the government, all that stuff. So anyway, of the Fed governors, they're basically evenly split between wanting to do a cut, keeping them the same. In other words, the doves who are looking to cut rates, the hawks who are looking to keep it the same, and the centrists who could go either way. The center people, and Powell, I think, is in the center, biased towards a cut. The bigger story, I think, than this is going to be whether they replace Jerome Powell with what's his name, Hassett, in January. If they do, that could signal a continued rate cut, continued easing of interest rates, and a surge in the S&Ps. I think this net lower interest rates could be bullish for the S&Ps.
Very good, my friend. Appreciate your time. I got to let you go. I got to bring my friend Marty in from the trade desk. We'll take a quick 90-second break and come back. We got the Tasty Trade trade desk. Immediately following these messages. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
That's right, Nikki. We are back. That man you just saw on the promo, I don't know if he even knows this, but our promo for years has featured this gentleman laughing and having a good time on the trade desk. Who am I talking about? My man Marty. That's right, Marty from the trade desk. How are you, brother?
Gentlemen, brothers, always good to be here.
We are brothers in arms. We've known each other for a long time. Probably, I mean, pushing 40 years, 35 for sure.
Because we met when we were 6, which was good.
Yeah.
On a play date.
Sick? Did you say when we were 6?
Not
six,
sick.
SIX,
Right, right.
yes.
6, 7.
Six, seven.
We have to thank our parents. for
Yes,
that,
I
right?
got it.
Right?
I got it.
Right, Tony, we can just thank them for introducing us.
Yeah, it's been a long.
What's going on, gentlemen?
Nothing, my friend. We're waiting for the most important news to come out around 1 o'clock. Since the most important news that came out the last time we had the most important news.
You guys got like a bell or something you ring like when it starts over there?
We just hit end call. And then
End call?
End call.
Right.
End call. Is that what you do?
No, they don't. But that'll be, this should be.
You get a little action.
Yeah, I mean, you're gonna, because nothing's going on until this happens. So
Yeah, you
everybody's
wouldn't know because you leave right after this. You know. you have to-
Yeah. I put my headphones on.
Yeah, it does get kind of fun in here sometimes when we get like some big moves or some announcements. You hear the rustling on the desk, even on our side of the wall here. You hear.
He has outside interests. You know what I mean? So
He's a popular guy, you know.
Right.
Extracurricular activity.
Yeah.
You've heard of that, right?
That as well. So anyway, I had a call from a phone client. Shout out to Bob King.
Okay.
Wanted to ask you guys both. Let's just use Goldman Sachs doing a strangle. And let's say he's doing a 20, let's just call it a 20 delta.
Okay.
Obviously, you can get a disparity in whether the puts or the calls have more distance between where the at-the-monies are.
Okay.
And he wants to know what you would adjust maybe first, or how you would make an adjustment if one's a little further outside the expected range, or one falls, where you have,
one's trading at $10, the other one's
on one side, and
they're both 20 delta, and one's trading at $10, the other one's trading at $8.
Correct.
Yeah. Do I roll? Do I push the strike down a little bit to get $8,
right,
or do I keep it $10?
Right.
$8?
What would be your?
Typically, I let the market beat me. I keep it at the 20 delta on both sides, even though, let's say there's call skew and I'm $40 away on the call side, and I'm only $30 away on the put side. To get the same 20 delta and the call's trading for a little bit more, I keep it to $10, $8. I don't move it. But there's no wrong answer.
Right.
There's no right answer. You still need the stock to stay inside the expected move.
Right.
I go with the delta. What do you?
It does. Well, I agree with you, but it also tells you a little bit about what the market expects out of this, or at least
the velocity of the move.
The velocity of the risk to be. The further out option is going to be on that skewed side. So that call that is 100 points out of the money versus the put that's 80 points out of the money. It's telling you that the market sees the bigger risk to be to the upside. It doesn't necessarily mean it plays out that way, but that's what skew is in itself. So
because in Goldman, the calls are real rich, even up at that 950 number. But you wouldn't be shocked
900
to next year, seeing Goldman trading at $1,100 and be, oh my God, how'd this happen?
Well, if you were a market maker in Goldman Sachs and you've been getting run over since the stock was $400 and it's $880,
right?
And everybody wants to buy calls, right? That's typically. What's happening when something goes in one direction.
Right.
Yeah.
If they're willing to buy them at $8, they're probably willing to buy them at $10.
Right.
So I'm going to raise my. That's what it is. I mean, it's supply and demand. That's all it comes down to.
Yeah, if you loved it at 400, you're going to love it at 800. But it's the psychological of getting around the point of, I can't pay $700 for this stock now because.
Well, it also becomes a little bit of your market to answer the question. Who was the gentleman's name?
Bob King.
It also comes down to a little bit of market awareness too. So if the calls are trading richer and you're a little bit bearish in Goldman Sachs, then I definitely going to lean $10, $8 to give your example if the calls are trading for more. If I'm more neutral, I might go to $8.
Right.
But we're splitting hairs here. If the stock goes well above or below its expected move, the extra $2 you got in the credit is not going to help you and not going to hurt you.
Do you think that you need an opinion if you're going into?
Yeah, you probably should have opinion in everything you do. And neutral is an opinion. I'm okay with that. In
Short vol is an opinion.
Short vol is an opinion, right? Ivy rank can help you with that opinion. If it's low, maybe you have less of an opinion. If it's high, maybe you have more of opinion. And if Ivy rank is high and you do have opinion, maybe you get a little bit more aggressive with your strategy, not the number of contracts, but with your strategy. Yeah. Maybe you go a little closer on one side or the other, lean one way or the other. I don't know. That's how I do it.
And remember, you can do all this in IRAs too.
You can. You can.
It's called Bill. Right?
Yeah, we've been hitting the IRA accounts all day long. I have to be, quite frankly, IRA accounts are typically boring. I mean, let's be.
You can still do.
You can still.
You can. This is my own personal views here. If I was a young person, we've talked about this on the show before, and the tax advantages of an IRA account versus the buying power advantages of a margin account. They especially in a younger person who's maybe I wish was taking more risk than an older person.
Right.
For me it was easier when I didn't have children, cats, dogs, and responsibilities to take more risk when I was younger than when I'm older, a little easier. I might default to maybe opening a margin account than an IRA account. Now, I know we're trying to reach masses here with a lot of people who are a little bit older. Maybe that's for somebody's Nick age, that might be somebody who's like 45.
So a little younger. tiny
is
bit
a little
younger than
older
us
than me.
is what you're saying. 4 or 5 years younger than us.
Oh,
Right.
But if you're middle-aged,
Well,
you
but
know,
you
now
can-
that I'm
and they
60,
also
middle-age
can-
seems to be around 58. You know, you might want to default to an IRA
take it.
account.
But it teaches them how to use wings too on their, teaches them different.
Look at my man. Since I've
More
making fun of him
silver.
a little bit here, he's
More
got-
silver for him, right?
No, not more
Oh,
silver. He's been
no,
good. He's
full.
been good there.
full silver, no more silver.
That's it. You're done.
That's the
Adobe. He's
Broken
done
Wing
it.
Butterfly. I did it for basically nothing, for 3 cents.
Three
Credit.
cent
We're gonna play.
credit. It's got earnings. He's
Yeah,
got a
it's
little bit of a small earnings play.
He's young. You know what I mean? He's young. He's
He
able
is young.
to do that.
He knows what he does not know what he's doing right now. He doesn't know the harm that he's causing himself.
You know what?
No, he's been hitting out of. Listen, I've got some great feedback from you. I mean, I haven't heard anything really negative. Been great feedback on how you've been carrying the show. So
Yeah, well,
good
we
job,
just
buddy.
we screen the negative ones. Only positives here.
Same thing we do.
Never
with phone
screen
calls.
anything. All of our calls never screened. Nothing.
Nothing off
Emails.
limits. Yeah,
Nobody.
with our phone calls and
Yeah.
stuff. Yeah, for sure.
Twitter. Never. We're fully transparent.
So we let Marty on the show. I mean, we'll let
only
anybody on the
positive
show.
stuff, right? That's
Yeah.
a just positive.
Yes.
Right?
Yes.
So are you ready for this, or?
Yeah.
Yeah,
let's
yeah,
go.
give us
Let's
the top
go.
20.
Bring it on. Bring it on.
All right,
Bring it
at
on your
number
list.
20, we have Apple at 3% vol. 19, we have MU at 61. At 18, we have AMD at 23. Michael Jordan will appreciate that. 17, Intel at a 30. We have Chewy at 16 at 21%. We got MSTR at 15 at 32. 14 GME at 4. 13 GEV at a 9. 12 SoFi at 12%. 11 iBit at 46%. 10, top 10, GLD 35. Netflix at a 26. Meta coming in at number 8 at 5%. Number 7, SLV, which you're out of trading now,
Yeah.
right?
Choking on.
Right, at 65%. At number 6, Oracle at 82. There's some vol. Number 5, NVIDIA, 9. Top 4, Microsoft at a 16. Number 3, Amazon at 11. Number 2, dropped out of the top spot. Who would have thunk? Tesla, 6%. And number 1, Palantir at a 3% vol, which...
Yeah, well, Palantir
Jump in with both hands on that one, right?
got some movement to it today. That's why
Yeah,
it's taking.
right.
What do you think for today, Marty? What's your feel on this?
I think that they'll probably do what they, they'll.
Yeah, market move though. What are you thinking? Up,
I think
down,
it's going to go
sideways?
higher.
Higher?
Yeah.
No, it seems like it's been.
I don't.
See, I'm
I don't know
usually
what's
the
going
higher
to.
guy.
Yeah, you are usually the higher.
I'm usually
guy.
the higher guy, and I feel like I'm on the.
You're on the
this
bubble?
seat has made me more bearish.
What do you think?
Sad that
I
that's
know.
the only thing that happened. I mean, but we can talk about that another time.
What are you thinking?
What was the year? Was it 2023 where we had the rally into the end of the year and then we sold off quickly after January? I think
We did
that's
that.
my.
wasn't it?
I mean, we had that this year too. I mean,
Yeah.
April this year. That
I think that's my. I think that's
Everything is awesome. You know what I mean?
I know, but I
Everything
hate
is-
it when everybody is like this. I mean, hopefully we can meander around. We got our end of the year picks that we got to go.
Oh, yeah,
through, too.
SPX, our
Yeah, for
SPX.
SPX, we should look at that because
I will look those.
I always feel too like whenever you hear, whether it's clients, customers, and they're looking for this
I
correction.
hate it when the boat's full to one side, right?
Right,
We usually list
they're
to that.
looking
Yeah.
for
Do you think
this.
it's more bearish? I
think that everybody's thinking that the bottom's going to fall out or whatever's going to happen.
Well, look, who cares what
It's-
everybody thinks? Let's look at volatility.
Right.
O/VX down near its lows, 1930 and change. Telling you that it seems like everything is complacent. Now, we've done
6805 is your guess. Not bad.
for SPX, right? That was
Yeah, it's right here.
that was the SPX.
I haven't looked at the
Mikey
E-mini
Butler's.
chart for a minute.
And we're 68.41 right now, so 68.05. Good call out of the bat.
Katie 6888. Shout out to Miss.
She's got a little bit of a rally going. I've got a little bit of a small move lower. Nothing.
It won't be an inside day in the E-minis. That's not. I don't
Today?
Think so?
You don't think?
No.
Well,
when was the last time that you had a full inside day?
Well, inside the expected move was around $40, $45. So we'll see if that comes to fruition. So we've had about a $29 move top to bottom all night into today.
Right.
So we'll see if we go outside of that on
It'll be like a gentleman's bet. It'll be, well, if I'm right, you'll get me a haircut, and then if you're right, I'll have to get you one.
Yeah, fair deal.
You'll have to find someone to make scissor sounds.
Popeye and Ludo back in the day. Cartoons. We just caught a small bid. Even the S&P's up a buck and change.
They're gonna chop here. We're
gonna chop.
68.50. We've been within 20 points of this all December. It's decision day.
Yeah. What'd you say? My call was 68.05. Wow, I'm pretty good.
Yeah, not too bad. I'm surprised. I mean, usually.
Where was yours?
Usually the old guys like you are always bearish and 1,000 points off. You've learned something over the
Youth is wasted on the young, isn't it?
I'm saving my best for last.
I know. I'm only at 65.38.
Oof.
Katie's up. Katie and Mike are on the upside. Vecchio, 68.50.
Oh, right there.
Right there.
68.47 right now.
This is SPX though. Tom's at 5,300.
Oh, I was looking at yes. You're right.
If we get like 1,500 points to the downside, Tom will be right there.
Yeah. SPX is just a couple handles off of that. Yeah. All right. Good job out of you, Marty. Stay right there. We're gonna say goodbye to the viewers.
Okay.
I appreciate you coming on the show today. Even the S&Ps are only down 2 and change. Really a mixed market here. Even the S&P's, Nasdaq's slightly lower. Right. Russell, Dow slightly higher. Volatility anemic. Bonds are up 10. I think we're in a holding pattern. I agree with you. Fade the first move is typically how I like to look at it. Well, even intraday, like just as the first move, we get a significant move lower. I like to fade it. If we get a significant move higher, I like to fade that. Take it off quickly just for a scalp.
Like
that's
a true trader. Like
that's just my own thing. I think the first move is something that gets wrong. And then you really got to wait about 24 to 48 hours before you're going to fade any extended move on the close into the next day, at least from our research.
Yeah.
We'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next from the floor of the Chicago Board Options.
It's always electric.
When the ladies are alive from the SIBO.
Always
I actually hate when she does that. Peace.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Eso no es nada, tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada, tú y yo vamos a quiquear. Pégate, motívate, prepárate, que lo vamos a hacer hoy. Llégale, no lo pienses, ya lo decidí, que contigo me voy. Dale, baby, que hoy te sale, tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales, pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito, dale de comerte huerfanito, no me dejen visto, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada, tú y yo vamos a quiquear. Ahí, ma, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. We get caught up, we lose the time. We get lost, we get out of our minds. But let's focus our rosy eyes. Why don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to. Can't get a better view. On this spring and summer right through. All the way I told you. Can't get a better view. 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 Cruising upstate and cooling down, pulling over to fool around. It's high time to get out of town. Close our eyes and get lost in the sound, yeah. Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to. Can't get a better view. On this spring and summer right through. All the way I told you. Can't get a better view. Can't get a better view. Can't get a better view. I'll be right beside you. All I ever want to. Can't get a better view. On this spring and summer right through. All the way I told you. Can't get a better view. Can't get a better view. Can't get a better view. Can't get a better view.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful burned out to the left of me is Jenny Andrews. It's been a crazy, I mean, we say this, I feel like I say this every Wednesday, but it's kind of a crazy day.
It is. It does feel like a little bit of a crazy morning here. When we walked in and spoos were unchanged and the crowd was in a roar.
Yeah, so Jenny and I immediately, our heads whip in each direction because that's your, that's my board.
I know. We look at the boards to see what's going on and the spoos were unchanged. Now we're spoos down 11. It's a little bit busy, and I thought we would just be sitting and holding until the rate announcement later
I thought
today.
we'd hear a pin drop until the rate announcement, but you can see the natives are a little bit on the restless side today, so we'll see what's happening ahead of the amazing announcement. Now, I do think everything that we've heard, I'm not an economist, says that they're going to lower rates, but it's what the guidance is going forward. Now, Jenny has graciously agreed to watch the entire...
well, okay. I agreed yesterday before I committed to something else. You're not going to believe this. This is take a good look at me today. this is the first day of the rest of my life, Liz. I signed up for, she's not going to believe this because I'm not a big fan of working out. I signed up for a tonal group fitness class.
I call bullshit.
It starts today at 3 o'clock.
I call bullshit.
I walked in.
No, I love my tonal. You don't have a tonal.
No. It's a room of tonals.
Okay.
It's a fitness class full of tonals where there's an actual instructor there and you're on your own machine and everyone's doing the tonal at once. It's 3 o'clock on Wednesdays. Right now is what I have signed up.
Pictures or it didn't happen, right, Mikey? We want pictures.
So basically, my daughter had to go to this fitness place for something unrelated.
Did you just sign up like right now?
Last night.
Well, you told me earlier you're gonna eat your popcorn. Like 5 minutes ago, you said
I forgot. I already forgot about my fitness class. So my daughter.
She's gonna forget about her fitness class a lot.
So my daughter had to go there for something, and I see the class going on. Everyone on their tonals, and they were trying.
I do love my tonal.
I know you do. So they were trying to get me to sign up for the class, and I said, well, I'm going to Mexico the end of January. Can you change this between now and the end of January? And they said,
well, I'm telling you, I think personally, and this is an amazing segment for
tonal.
I think weightlifting is the only way to change your body. It's my personal opinion.
Well, we'll see. They guaranteed results if I come 3 times a week between now and the end of January.
You are going to be done after 2 sessions.
Do you think so?
Oh yeah. Well, I do love the tonal, and it's like you put it. If I sign in as me, it's my body weight, and it'll increase it. You know, it doesn't. We don't have to do anything. Until the one time, my son was down there screwing around, and then I almost got pinned underneath the bar because he was lifting like 200 pounds or whatever.
Well, don't you log in as yourself?
Yeah, but he logged in under me.
Oh, I see that.
I was like, oh my God, I'm gonna die.
Well, I'm ready for it. I got the tonal app, downloaded the tonal app, and then at this place, like if there are cool down periods in tonal, then you're on something else. You go like during the cool down periods into something. Anyway, I'm not a big workout.
You're going 2 times.
I'm not a big workout person. I'm gonna commit to 3 times a week from now until the Mexico trip, and then it's over. Then I quit. I'm going to show up. We have 14 girls going on the Mexico trip. I'm going to show up, and they're going to say,
who is that?
Where's Jenny? That's my big news.
So you weren't on the last Mexico trip that we went to, but the last time there was maybe like 11 of us that went, and I made them all work out. They were so mad at me.
On the vacation?
On the vacation. I made them all go to the gym. Well, except for 2 of them. 2 of them laid at the pool.
I'm not. I'll be at the pool. Anyway, how was your big party last night?
It was awesome. I had 1 glass of Prosecco. The place was called Prosecco. There was never an empty drink on the table. I mean, it was insane. So at one point I looked over. There was like another person sitting next to me, and he was drinking red wine. And he's like, "What is happening?" I was like,
because someone kept refilling and refilling and
Oh,
refilling.
just
so everyone
refilling?
had their original glass.
Refilling and refilling, and there was never. And I was like, that's my style. I liked it.
Yeah, but then you don't know how many drinks you're drinking. I like to know. I've got like a 3-drink limit at a restaurant.
Well, and then people, because I like Prosecco, kept trying to give me like drinks, like Prosecco drinks with Prosecco in it. I was like, I'm a purist.
Well, I'm sure it was a beautiful place.
It was awesome. It was fun. Yeah.
Oh, that's good. And you made it. She made it. There was bets on if you'd make it today.
Make it today. I'm a professional.
Oh, I've got a story for you that I think you'll appreciate. So, our friend Mandy went to a grab bag last night.
Okay.
Grab bag. She plays tennis. It was her group of tennis ladies grab bag, all ages. The hottest, you know how you got you could trade and fight for and try to get gifts. The hottest item at this grab bag that everyone was fighting for was physical silver.
What?
Yes. Someone brought, now the lady who brought this is like a very smart PhD physicist from Abbott Labs. And
remember when we would travel for not the he said, she said tour?
That was the physical gold.
Yeah, it was he said, she said tour. We would travel with physical gold. Yeah.
So she brought coins. It was like a handful of silver coins, and each piece, like silver coin was worth $5. And then it was a handful of silver coins. Maybe she put them in a little bag like in the olden days when they would carry their coins in a bag. But that was the hottest item, and everyone fought for it because she like told a story when they opened up the silver about how one day in the not so distant future, you're gonna need this. You're gonna need this physical silver, and you're actually gonna need it to get something.
Do you know who's gonna be loaded in the not so distant
Your brother.
future? My brother. My brother's got a safe that's about the size of this room, filled with silver.
well, he's ahead of the game. So that was the most coveted gift at the grab bag last night.
I like it.
I knew you would like that.
I do like it.
Yeah.
Let's take a look what silver's doing. Let's pop in the platform.
Okay. I have it
You're
up.
on it.
Yeah, I'm on it. I'm on it. Silver. Look at yesterday's move. That was crazy.
Yeah.
So it's giving back, 10 cents of yesterday's move?
Well, let's take a look at our silver gold pair because we did get filled yesterday. We have the the old 2x14.
The old
silver gold ratio.
All right.
Down $3.
Silver's down
$4.
$3. It's down $4.
Okay.
It's fine. It's like a nothing burger right now. You know what? So today's Wednesday. We are doing a few things. We're taking live tweets, number one.
There is no SPX study this week. Jacob, maybe still on vacation? I don't know.
I don't know where Jacob is. I hope he's all right.
We've had last week I talked to him. I knew he was on vacation last week.
Maybe he's still on vacation.
But it's radio silence from Jacob, so no 0DT SPX piece. Hopefully we'll pick that back up next week.
But that's all right because I saw and then the Women of Tasty Trade on Facebook. And if you're not on the Women of Tasty Trade on Facebook and you're a woman, sign up. It's great. It's a great resource. And I saw a request on the Women of Facebook.
They are getting loud.
A request for the Delta Buster, to go over the Delta Buster.
Oh, Annie, we're talking to you.
So I said, yeah, sure, let's go over the Delta Buster. So we're going over the Delta Buster. We're taking live tweets. We've got what's your assumption if we have time for it. And
I did promise Patty we're going to show how to butterfly something off, too.
Yes,
Okay.
yes. Okay. So we've got lots of stuff.
Yes,
Lots of stuff.
We do.
Do you want to actually, sell an SPX put spread and then put in the other side to butterfly it off? I know it's not the time, but let's just make it baby $5 wide just to show.
Okay, perfect. So this is exactly what we do. Now I typically do mine around 9 a.m. I think today I did it at 9:10. And the reason we do that is Jacob studies have shown 9 o'clock is the time to place the trades, not the open to place these put spreads, but give or take 10 minutes. And Jacob's done a great job with these 0DTs.
So. And I did mine this morning too.
That's not bad. 410. Just do that one.
No, that's not bad. Okay, so 415 on this put spread. It's a $10 wide put spread.
You're not going to get filled. You got to hit it quick.
Hold on.
Go 405. I'm fine with it.
I know anything over $4 for the.
There you go. You're filled 410.
No, it's still working.
No,
it's still working.
You sure?
Yeah, it's not here.
Oh, you cancel. Just
come
go 405.
Come on.
You got to be quicker. Press the button. Cancel, replace.
Dang it. Now it's $4.
I know.
Jeez.
Come on, down. You gotta go. You gotta move faster.
405.
Don't hit the mid price. Go 1 penny.
Oh,
there you go.
Okay. All right. Now we can demonstrate butterflying off this put spread.
Okay, so let's walk through what she did. So what we do at 9 o'clock is I take the just underneath the line, which is basically the monies. It's like a 50 delta. Sometimes it's a 48 delta. Here it's a 49.
Yeah,
you sell that, skip a strike, buy one. You've got a $10 wide put spread. You've collected 405.
Now, what I usually like to collect on this, and what I usually collect on it is somewhere around 380, 390.
That's why I was shocked.
380, 390. So when we saw 410, we're like, 410? Do it. We do this for 380.
Yeah.
So 410.
Then she got so flustered. She's like, I can't hit the button. But it was shocking for 4 o'clock. For 410.
Yeah, because usually we're getting like 380.
Yes.
So anyway, we got 410 on that. So if we want to lock in, and we could even say, well, we're just going to lock in $50. You could decide. You can lock in $50. You can lock in $100. You could.
Well, things have to go according to plan to lock it in, but we're going to show you how to place the order. Now, I also want to be very clear. When we say we butterfly it off, she's doing it right now. You cannot buy the insurance when the house is on fire, right? So
no, you can't do it later.
You can't do it later. You can't say, oh, I'm down. Now I'm going to butterfly it off and take my risk off. That doesn't work. You can put the order in now to complete the butterfly.
So basically here, I sold this $10 wide put spread for $405. If I want to lock in $100, I would have to complete the butterfly and pay $305 to complete the butterfly, then I'd be locking in $100.
And this is the study that I have Jacob looking at next week, which I thought we were getting today, which maybe we're going to get the following week. I gave him all the details about this. $10 wide, butterfly it off, see how many times it pins. He doesn't have it closing it.
It doesn't even, because like so many times you'll close it in the middle of the day and it won't be quite for, it's not at the end of the day, but at some point in the middle of the day where it closes for a decent
And this
profit.
is where it's danger Will Robinson if you close this butterfly, because then your pattern day trading rule. If you butterfly this off and close it,
There's
1,
no-
2, 3.
There's no pattern. If you close it, so you just have to leave it. If you're under $25,000.
That's what I'm saying. 1, 2, 3, because you're putting it in as 2 orders and you're closing it.
Okay, so then to butterfly this off, to create the butterfly, a butterfly is, long 1, short 2, long 1. So if this is going to be my short 2, I have to sell another one of those. And then to have a symmetrical butterfly, long 1, short 2, long 1.
Buy that one.
I'm just going to
But you
buy this put
you
spread.
got to change it. So remember, we collected 405. We understand it's not going to happen right now, but if you put in an order to buy this for 305, you will have this butterfly on for a $100 credit, and if it pins 68.40, you get another 1,000.
So now I'm going to work that order, and basically we need a bounce. We need a bounce and spooze for that to fill.
Yes.
And a decent bounce.
I mean, I've done this quite a bit, and that's where I was high-fiving when I was in Vegas, because I pinned it, meaning it hit the dead center strike at expiration. But I've been doing this, and you do need a move. You need a bigger move than if you were going to take it off for $100. You probably could take it off for about $150.
Oh, to butterfly it off.
Yes.
But you don't have to leave it. There's been so many days where, okay, you locked in $100, and then later in the day, it's trading near this butterfly, and it's worth $200 or $300 or $400. So you don't have to let it sit to the end of the day, unless your account's below $25,000 and you're worried about that PDT rule.
Yes.
But if you don't worry about the PDT rule, you could take it off if you see a bigger profit.
Do you know who was a wealth of information about the PDT rule while I was at Tasty all day?
Who?
Nick Batista.
Oh.
He knew all the nuances, all the ins and all the outs. Maybe we'll have him on the show.
Yeah. All right, so that's working. But again, we need a bounce. Like that put spread we're trying to buy right now is working 475, and we're trying to buy it for 305. So we need a real bounce. We need a real bounce.
Honestly, these zero DTEs have been. I said this yesterday, and I'll say it again, and not on air, but in my mind, the biggest game changer that I've seen in the last 2 years in options trading.
Oh yeah. Oh,
and so
definitely.
we were talking about this at the table. So it's hot right now. Do you think it's a passing fad?
No.
Or do you think this is around to stay?
No, it's around to stay. Look at this. Look at Twitter. Here's Jack Tucker. And Fed Day, I had kind of said to myself, it's Fed Day. I'm not going to do anything crazy in SPX today because it's the Fed announcement.
But I wouldn't argue that's crazy what you did.
No, but look at this. Jack Tucker, Fed Day, expecting an inside day even after Uncle Jerome starts speaking.
Look at that guy.
Getting wide on the iron condors, 2 double tranches, 0 DTE SPX collected, $21,400 in premium. So when I said I'm not going to get crazy on the Fed Day, Jack Tucker is getting crazy on a Fed Day.
And I got to finish it. I'll be watching this one today and the show. We love you, Jack Tucker.
We love you, Jack Tucker. So he is...
And Jenny has changed your name to JT. I'm going to do a JT style.
He's not afraid. He's not afraid of the Fed announcement. He's looking inside day. He's not afraid of the Fed announcement.
He's not afraid.
So this is actually like looking at this, I started sweating.
If I had a napkin, I'd like this to your forehead.
Anyway, is this just a fad? I don't think so.
No, they were saying people at the table, the big table that I was talking to, were like, no, it's gonna end at some point. And I was like, I don't think so.
I don't think so.
I really don't.
I think it's going to get bigger and bigger and more people and more people.
I said we've just, and I was like, I get on my soapbox. I was like, we've just scratched the surface.
Yeah, wait till I go.
We have just scratched the surface.
I mean, I'm going to go talk to the high school kids on Friday, and not this week. I'm not going to teach them the SPX, but that's the agenda for next time.
I know, but you need them to be 18.
They're all turning 18. Like, they're all 17, going to be turning 18. By the time they turn 18, they're going to be
16, going on 17.
So once they're 18, they can open their accounts.
True story.
Yeah. Okay. Next, in Twitter, Bob on Fire. Oracle, Adobe, I don't know what SNPS is. SNPS, I don't know what that is. PL What is it, Sienna?
I feel like we're losing our touch on the earnings trades because I think Sienna, and Manu.
I don't know what that is either.
Manchester United?
Oh, let's see.
Is it?
It might be. It might be. You might be right. You might be onto something. MANU. It is, Liz. Look at you. Sharp. Out all night.
Sharp as attack. I get sharper the more Prosecco I drink.
The more she drinks, the sharper she can be. You thrive. I know. Christmas party. It was a Christmas party. I wish I were. It
was awesome. I know. Yeah. I must have told, because we were at a restaurant called Prosecco, my husband told the story about me getting refunded for the 90 bottles of Prosecco like 4 times.
Oh my God.
Yeah. Well,
I heard we might actually have a Tasty Trade Christmas party.
What?
Yeah. New
regime?
New man in charge. There might be a Christmas party. I don't know.
New regime? We're celebrating Christmas again?
I don't know. Okay, so it is Manchester United. I don't think we're going to trade it. I think it's wide markets. But I do want to look at some earnings from yesterday and see what happened.
Do you know what I have been failing on? Is my job. Hold on. Let me.
Oh, pushing trades out to the follow page.
I'll do it. I'm on it. We've only got filled on one.
Okay. Chewy. Oh, it's up now. It was down. Look. Whoa,
that's up.
I know, but I thought I heard someone saying it was down $1.
Okay, no, if you were listening to Tony Batista, he said down every time he meant up for like 6 stocks this morning. And I'm not kidding.
And was he at the party last
night? And I'm not kidding, because I remember being like, now, I opened up my platform and I saw that Marvell was up a couple dollars, and he kept running through things, and he's like, Marvell's down to this is down to that. And I was like, okay, he might be right. But he said down for everything, and I bet it was him.
Yeah, he sat down. It was him. I was in the shower, had him on in the background, and I heard Chewy down $1.
Correct. Did he say Marvell down too?
Yeah.
Because it was up.
It was up.
Yeah.
Okay. All right. That makes sense. So,
no fault. I mean, hey, we misspeak all the time. There's no shame.
All right. So Chewy's up. What else was on? Was there anything else we looked at yesterday? I don't think so.
No, I don't think so either.
Here's one thing I got into today, because if you take a look at 6J. The yen is back down to its, near its low levels.
Ooh.
So,
and do you know what else is down today? Bloom Energy, and we got out of ours yesterday.
Oh, we can get back in?
Yeah. Okay, but let's do this first.
Sorry,
I got distracted.
We're going to sell a put spread in 6J, and then we'll get back into Bloom Energy. Who's up 6? I wonder if I'm curious. I want to see. I'm going to see.
I don't think it gets. I personally don't think that they don't get butterflied off until about 11:15.
Because I sold my put spread when SPOOs were down 6. So I sold, and now they're up 6. So I sold my put spread when SPOOs were down 6. Now they're up 6. My put spread is $100 winner, but it's still not butterflied off.
No, it's not.
It's still not butterflied off, which people might say, well, that doesn't make sense if you're trying to lock in $100. It doesn't work that way.
It doesn't work that way.
So it's still not butterflied off, and I could see I'm trying to pay $280, and it's working $345. So even with a 12-point SPOO move, it's still not.
You
off.
still need time to pass. Like that's what I'm saying. It usually happens.
Yeah.
It usually happens around 11, right
so
after.
So anyway, you gotta wait. Wait for
it.
But you can see that our trade that we put on is a $60 winner, $50 winner.
Now you can take there's no shame in butterflying off a $55 winner. Do it.
No, there isn't. Yeah, you're right. Yeah,
Lock it in.
No, but we're not going to lock in $55. We're not going to lock in $55.
Oh, I see what you're saying. Sorry.
It's $425.
Yes. I'm
we
sorry.
Collected, we collected $405.
So in order to lock it in,
you'd be paying $20.
So you'd have to change it to
lock in $50, we'd have to change it to $355.
Change it to $355. Just because.
Okay. Yeah, just so if we can get it on our show, we can get it on our show.
Yeah. So this would be locking in $50 and butterflying it off. Now we're still 60 cents away.
Yeah, but then at least we did it. If it happens, who's up 650? We probably need a few more SPOO points. Okay, back to 6J. 6J. I don't know. The yen. I just went to the 30-day. I know there's also. Then you move into a different.
No, they're not the same. They're not different. The 30-day, the 58-day, and the 86-day are all the same.
They're all the same.
Because there's 3.
Like I said, out all night, sharpest attack.
It's weird. Seeing moves 3, 4 in advance.
Okay, so 6J, I got aggressive. I got pretty aggressive, and I sold. Yeah, this looks about right.
For 0.000223.
Yes,
Yeah,
yes.
that looks
I collected 0.0000230.
That looks good.
And it's max profit $287, max loss $337.
I think that looks fantastic, and I'm doing it right now.
Okay. What, are you in your account?
Done.
I hope you didn't carp me.
I just carped your market.
No, I'm filled too. Push that out on the follow page. Okay, so that's in. So now we're in 6J. I was trying to clean up the account, and Liz, if you don't have
A full
scrolling
page?
pages,
Then you're not a real trader.
If you don't have scrolling page of positions,
You're not a real trader. If you don't have a full page, you're not a real trader.
well, we have pages.
Yeah.
But like, I just don't. I like to get rid of things that
I'll allow RSX to be removed. That's the only one I'll allow to be removed.
Well, what about this VOYG, one share that we bought at $61?
I would like a timestamp on that, please. Like, when did we put that?
Wait, here, let's go back. I would just, some things like this bother me.
I mean, go.
It's been longer than 120
That's what
days.
I'm saying. We've been with this for years.
And now I want to get rid of it.
And today's the day you want to close it.
I don't know. Okay.
Can we take a look at Bloom Energy?
Yes, we can. Bloom Energy. Is it just what is it? BLM? What is it? What's the symbol?
BE.
Oh, BE.
Sorry.
Go Bears.
I've seen so many people in Bears sweatshirts today. I don't know if you heard that. He yelled, "Go Bears."
Can't miss
I've
it.
seen so many people in Bears. When do they play this weekend?
I don't
Or are
know.
they playing tonight? Are they playing Thursday night? When are they playing? Why
I
do
don't
people
know.
yell, "Go Bears"?
I don't know, but I know they changed the Bears-Packers game to my husband's birthday on the 20th.
Well, that one's at home. They just lost the Packers.
I know, it was supposed to be Sunday, and then they moved it to
if
Saturday.
you're out there and you're on Twitter, if you send a tweet, and I'm going to get back to Bloom Energy, but if you send a tweet, you have to include hashtag LAZJNY. Anyone who has any football knowledge, I need a lock. I have to submit my fantasy team tomorrow, and I came in last place the last 2 weeks.
And this really bothers her, so give her a lock.
I need a lock. If you've got a lock, like a player who's a lock, I need it. I don't know how every player I picked this week was ice cold.
It happens. Get back into Bloom Energy.
Down 760.
That's what I'm saying. We got out yesterday for a 12%.
Look at that move.
Yeah.
Look at this. Down. So let's
pop
see what
out
we
the side.
did. We sold the 80 put for 410 and then bought it back for 360. This is a January 80 put. Let's see what the January 80 put is worth now. 480.
Yeah.
485.
Yeah.
Back in.
Not bad. Let's get back in.
We could do that, or we could move it to the 75.
Yeah, but take a look at that return on capital. That's really good. Even at the 80 level, you're getting 480 and you're putting up $800. That's it.
No, not bad at all. It's it's nice margin.
The Bears played the Browns on Sunday.
Sunday.
Now,
I did take
Thank you,
Caleb
Frank.
Williams as my quarterback over the weekend, and he was my highest scoring player. He had 15 points on my fantasy team, which is not a lot of points, but I had nothing good. So if you have any, again, I need a lock, hashtag LAZJNY to Twitter. I'll take any tips.
Press that button on the Bloom Energy.
All right, do you want to move it to the 75 put?
No.
The 80 you want to
Because look, our break even is 75.
Yeah, sure.
And then we'll get out for $50 again.
Okay, we're in.
And honestly, let me ask you this, Jenny. We're putting up $800 to do it. We collected a decent chunk. Bloom Energy, because it's got the high 116% implied volatility and a 64 rank, is a mover. You've seen it.
Oh yeah, for
so
sure.
let's put in an order to close it for $50, 50 to $100.
No, because this could be up $8, and we can come in and say, oh, we could have made $150 on this, and we had that GTC to take only $50
that's
out
true.
of it. Let's just try to get more out of it. Or we could put in a GTC for 50%, but if we come in and it's not quite as good, we can change it.
There you go.
I want big bucks, no whammies.
I'm in.
I would like to make more than $50.
I do too, but I'm just saying, I know you were afraid of Bloom Energy before.
I'm not.
And now she's not afraid at all.
No. I'm not afraid of Bloom Energy. It's just not one of the products I have been participating in this year.
Gotcha.
I'm not afraid of it. It's not one that, it's not on the top of my list. I mean, I think all year I've had maybe 2 trades in Bloom Energy.
And this is breaking news too. Nike and American Express lead the pack as Dow on the Dow rises ahead of the Fed decision.
Are we going to, two things? Nike's up 2.5%.
So honestly, it's
and what else?
American Express, AXP.
Oh. I don't know what, forgot all symbols. I didn't get enough sleep last night.
You did forget all symbols.
I didn't get enough sleep last night. And I binged the entire season of
Sullivan's Crossing.
Very good. My aunt and uncle told me to watch it.
This tracks.
Hey, I'm going to see him at Christmas. I wanted to be able to say, it was great.
Oh, there's some activity behind this.
Okay. AXP, yeah, look at that.
Yeah.
American Express.
I mean, like I said, it was just breaking news that popped up on my phone, but I don't necessarily know that it's...
Well, you see the Dow is up 0.5%, so that's the biggest mover today.
So let me ask you this, and I would like to know how you answer this. How much... This is a question I was asked the other day. How much does news impact what you do?
Well, you know me. I don't listen to the news or watch the news. Now I do. Now I kind of do. But I used to never listen to the news.
Well, and I
trade. I trade every day, and I don't listen to the news.
And this is what I said. I go, it doesn't matter, unless it's tradable news, I don't care. And we're not a news, we're not going to get it in advance. No one's given me this stuff before it comes out to try to trade on it. So everything we get is after the fact. So if it changes the implied volatility, I'm in. Or if it changes some type of direction in the stock, I'm in. But if it's just news, I don't care.
And the news is priced in, right? The way the world is and everything moves so fast, news comes out, it's priced in. It happens immediately, right? It gets priced into these products immediately. So if I'm trading, I could assume that if I'm trading American Express at 371, all the news is already priced into this stock.
Yeah. And I gave these guys a lot of props when I was asked that question. I was like, so when we film in front of the SPX pit, we're doing a live show, we're talking to the camera, we're talking to each other. When you hear something, sometimes you'll see both of our heads glance to see if there's been a big market move, and then we'll say why. We're not trying to jump ahead of it. We're not trying to beat it.
No, because you're not going to beat the news.
You can't.
Everything's too fast.
And you can't beat the market.
Right.
Yeah.
So no, do I worry about news? No, it's all priced in.
Yeah.
And we've been trading for since the 90s, and we've never been people to study the news and then make our trading decisions.
Oh God, no.
No.
You
don't need it. You don't need to. Forget about it.
Okay.
All right, so we're in Bloom Energy. Yes, we're in Bloom Energy.
Okay, let me push that out.
So far today, just to make sure you're pushing our trades out.
Oh, hold on. Just give me a second. A little slow.
No, I'm not going to go look at it.
No, the only thing I haven't pushed out is Bloom Energy. Everything else is pushed out.
We put on our SPX, and we're still trying to butterfly that off. We sold a put spread in 6J, and we sold a put in Bloom Energy.
Check my work. Go to that little people page. Do a little down a little bit, down a little. There you go.
And here we are. SPX, 6J, Bloom Energy. Oh, what did Fazia do? That was a closing order.
Yep.
Look at the bats. 6J. So they're trading 6J
bats
too.
Are trying to be like us to share a box.
They bought a vertical. We sold a vertical. What's the rank in 6J? 33. I think we're fine with selling a vertical. Now, I know we have this order in to butterfly this off, but should we take the win on it?
I say we take it at the end of the day.
At the end of the show?
End of the show, not day, sorry.
End of the show.
End of the show.
Okay. Because I hate to leave it. We're going to be off the show, and then we're just going to leave it, and if we butterflied it off, we'd probably be wanting to close it and not just, let it go.
I know, I hear you. Okay.
I don't know.
That being said, what time is it? 10:34. Today is the portion of the show.
Diagonals. We can't forget the Delta Buster.
Delta Buster and our IRAs.
On the third day of trading, my
trader gave to me how to trade a lizard in an IRA.
Excellent singing, Liz. Excellent singing. Okay, let's go. I think this is a good segment. I've said this yesterday. Tasty Trade is amazing because you can trade options in an IRA. which is great. Great.
It is.
Because of some places, all you can do is, put it in a fund or buy SPY. And I figured this out yesterday. I did the math on this yesterday. When my son turned 18, we put $5,000 into a trading account for him. Let's say he took that $5,000 and put it in SPY.
Which is still, so I will tell you. So some people trade like that and they're going to leave it in there, and it's still better than it's still better than putting it under your mattress.
Right. But I did the math yesterday. Do you remember what the numbers were?
Yes. So he put 5,000 and he would have had like 7,800 or something if he just...
like if he just took that 5,000 and put it in
Which
SPY.
is great. That's a great
Today, and then he was 18 and now he's going to be 22 or 21. He's 21 turning 22. He'd have like almost 8,000.
Yeah, so you got to figure he's turning 22, so almost 4 years.
Yeah, and maybe it's gone up more than that. But I did the math
it was
on
it was $7,800.
Like,
that makes sense. And then TP and I have talked about this before, not your son's account, but
I don't know if that counts the dividends. So then you figure there's some dividends. Say he's a little over 8,000, whatever. Yeah. And if you just left it, great, that's what he'd have. But he has 3 times that right now because he's trading options. So the ability to trade options is such a benefit.
Than just buying and holding it. And I loved trying to explain this, and I think you explained this to Logan, so I think I tried to explain it to JD. It hasn't really sunk in yet. But so say you bought $5,000 and you want to buy SPY. If you buy one share of SPY, it's $683. In order to make $50 on that position, it's got to go to like $725.
Hey, we just spent like $800 to sell one put in Bloom Energy for $400.
Correct.
We spent $800 to make $400.
Correct.
And that can happen between now and January.
Correct. And so what that just did is when you get that, what you realize is that you have the ability to use less capital. So let's use SPY as the example and talk about the Delta Buster, okay? So and I know I do a lot of zebras in my IRA, and we'll do segments like that before, and everybody knows what a zebra is, but we're talking about Delta Busters, and this is something you can put into an IRA.
Right. So let's say your IRA is mostly bullish, which I would say 99%, 100% of IRAs probably are mostly bullish. And you want to add some bearish delta to an IRA. Here's a Delta Buster. Now, you could lose on the Delta Buster, and if you do, great, because your IRA is winning. Right. It could be some sort of a hedge if you want.
I agree.
Okay. So Delta Buster, I'm going out in SPY, 37 days till expiration. A Delta Buster is buying a put spread. So I'm going to buy a $10 wide put spread. It's usually how we set them up. 683, 673. So it's a $10 wide put spread. And we're going to sell a $10 wide call spread to pay for that put spread. And then,
so you're going to be using about $1,000.
Yeah, this trade's going to go in for like even, because you're going to sell a call spread to pay for a put spread. It's going to go in for even. But the thing about skew is that skew allows you to buy a $10 wide at the money put spread and sell a call spread and give yourself some room. So I'm going to go the 35 delta here and sell a $10 wide call spread, 695, 705. And I'm taking in a credit to put this trade on. So I bought $10 wide put spread that could be worth $1,000, went all the way up to the 36 delta, sold a $10 wide call spread, and I'm taking in a credit to put this trade on.
Meaning, so you will make money. This is a bearish trade, I will tell you that. And a lot of times, I think Jenny already said this, but
we must have something else.
If you're trying to do the opposite, we just did a diagonal in there yesterday.
Hold on.
We did the bullish diagonal.
Yeah, I'm taking that off. Huh. There it is. Okay, so here's a Delta Buster, which is a way to add some short delta or a type of a hedge to an IRA.
Yes, and like I said, Jenny, this takes advantage of all skew because everybody tries to do it to the opposite way to make money if it goes up and limit your risk to the downside. With put skew, it doesn't necessarily work that way because what you're doing here is you know what I mean? You're buying the least expensive put option. No, it's the call option.
Because of skew, that put spreads trade here. Put spreads trade cheap, call spreads you trade more expensive. Because if you buy a put spread, that put spread was only $3, $10 wide at the money. And then that call spread going way up, you're selling that call, 35 delta call, and then you're buying that $10 higher call. That's the lowest volatility that you're buying. Versus on that put spread, you're buying the at the money put and you're selling that $10 out of the money put, which is the highest implied volatility.
So I like this. I don't mind putting one in. We can put a Delta Buster in. We're just showing how to do it.
We're not like trading in our IRA. This is not an IRA. We're not trying to hedge a long portfolio.
No.
But this gives you a way to, I can make $1,000 in Jan expiration if we're down. but I have room for the market to go up before I would lose.
And I want to show this so that I want to flip the cards over and show why, if you're trying to make money if it goes up and define your risk to the downside, it's not as good looking.
No, it does. So here I can make $1,000 or risk $1,000, but I have from, to where am I here? What price?
If you go to the trade page, it's easier to see. Table page.
Yeah. Okay. So I have from 683 all the way up to 695 before it would hit my short call.
And you could zoom in. That didn't look that big in the visualness, but that's just it. Is you have that much room to be wrong.
You're right.
Do you know what I mean?
I could have zoomed in on my.
You don't have that's a decent chunk of room to be wrong.
Yeah. Right. Hold on.
Yes. There you go.
There you go.
That's even in 250 wide increments, but that makes it look better. You were just pretty zoomed in, so it didn't look that good visually. But that's what this is. It's giving you room to be wrong. You make money, it picks up to the downside immediately, but you have room to the upside before you start losing money.
Now, you wanted to see...
I just want to show how it doesn't look as good to the upside.
No, because if I buy a $10 right call spread, 684, 694, it's 534, and the put spread was 300, right? And that's skew. That's skew, right?
Yes.
And then if I try to sell a put spread for 533, good luck. I'm not going to get.
You're going to be right on top.
That was $3.
Yeah, you're right.
That you can't. You'd have to sell like two or a $15 wide or whatever. Like it just doesn't work.
That's why the Delta Buster is. We turned to the Delta Buster because it's how do you get short when the market is already down, and that's what we would have done because it gives you room to the upside. It's how you get short when the market's already down.
But hey, if someone wants some kind of hedge in an IRA, this is an option. I know TP came on long ago and said, what kind of hedges can we talked about hedges in an IRA, and he would just sell SPY call spreads. But this is a little more oomph. Like you sell the SPY call spreads and you use that credit to buy put spreads.
Yes. And this is why options, and especially in an IRA, are amazing. Now, I do trade. I trade my margin account, my husband's margin account, my IRA. I have like lots of different accounts, and I trade them all differently.
Sure, depending on the kind of account they are.
Correct. And what I was going to say is it was so easy for me to transfer my money from my old IRA into Tasty. And in my IRA, this is something that I don't do anywhere else. You know how we see keep some capital on the sidelines, keep your powder dry. I make sure I use every ounce of buying power in my IRA.
Because if it's not at use in something, you at least have it in like T-bill or...
BILL or BOX or BLL.
Right, if whatever's not at use.
Yes, correct.
Sure.
So, but I will tell you, in my IRA, you will never see me buy a stock and you will never see me sell a put because it doesn't make any sense. So, like, let's look at, just open up the January expiration. So, say I wanted to get long SPY and I was going to sell a put, just go to like the 670 put. So if you're trading in an IRA, take a look at this. It's going to use $66,000 as my buying power effect because in an IRA, there's no margining in here. So if I'm ever selling a put, I'm going down and buying something. So watch how you can just mimic $12,000 in buying power. So a margin account is $12,000 in buying power. So
you can go wherever you want it, whatever you want to spend.
You just go to like the 645.
So you take $400 instead of $7, but you're using $2,000.
Yes. So no matter what in my IRA, I'm using options to spread it off because in my mind, you can go down and get something that's pretty cheap if you wanted to.
So I like collars. I do. I like collars, like long stock, and if you have a collar around it, you have the upside potential, but you have some protection to the downside. And I do. And
they don't have those in IRAs.
You can mimic a collar in an IRA.
You can mimic it.
You can mimic a collar in an IRA. So let's say you have 100 shares of SPY. Let's say you had 100 shares of SPY, or you wanted upside profit potential but downside protection. And a collar here would be, okay, I'm going to buy the.
No, you got to go farther.
Yeah, you got to go farther. I'll buy the 670. I'll give myself some protection. I'll buy the 670 put. So if the market falls, I'm protected below 670. And then I'll sell a call to cover that cost. I can go up and sell the 693. So this has profit potential for SPY to go up to 693, but I'm protected below 670. How do I mimic this collar that costs $34,000 in an IRA? I can mimic this collar by, I keep that long put, and long stock short call is just that short put. So if I sell this put and eliminate the stock, I got to eliminate. It's the 693, 670. I've got to eliminate the stock.
You got to eliminate the stock, but you also have to buy something.
693, 670. This is it. This is the collar. this trade is the collar for
This trade is the collar.
$1,400.
Yeah, but you have to understand your synthetics to be able to do it. But that's why trading in an IRA is so much fun when you learn your synthetics.
Once you learn synthetics,
It
you
is
could do
so
whatever
much
you
fun.
want to do. So I just took a trade that was $34,000, turned it into a trade that's $1,400, same profit potential.
Well, and it's so funny because the regulators are like, well, you can't do that, but you can do this. Like, you don't have enough money to do that, but you can do this.
This is why it's like here's the
It
problem
is
with the
so
option
much
world.
fun when you understand it.
I know. But the problem with the option world is like you have people, regulators, and people out there trying to make rules who don't really understand options.
Okay, let me just tell you a little story, Jenny Andrews. A long, long time ago, young Liz was on the market reg team. And I didn't know anything.
And you were on market reg.
I was a market reg. Market regulation, how can I help you?
Right, we know a lot more now than we did when we were young.
Yes.
Yeah.
Yes.
But it's hard. It's a lot of people don't take. There's just Tasty Nation. We're the smartest people out there in the options world. We really
agree.
are.
I agree.
We really are. Okay, 10:45. So we went over the Delta Buster, went over trading in an IRA. I'm gonna check Twitter.
Yeah, please check Twitter. What time is it?
Because there's some I didn't get to. Look at Eric's. Happy Wednesday. IV rank flat at 16. Reverse iron condor. So he's looking for a move.
Oh, I like it.
Yeah. And Frank, Stevo's option volume on Tuesday. Let's see what it was. Calls leading puts 13-9.
It's always calls over puts.
Yeah.
Oh, no, this was from before.
Okay,
Now go top down. 'Cause it's
I'm
pretty funny,
hoping
Mikey.
that if you're opposed to selling puts in the IRA, what about a synthetic one, maybe 50-point
No,
wide?
that's exactly what I was saying. I'm never just going to sell a put because Hibachi, we're here.
You sent this before she finished, then she buys a put.
Yeah, and so usually I talk faster than that. I'll try to wrap up my sentences faster for you.
All right, Florida 7. If your son's count has tripled in 4 years, he needs to be on the follow page. No, more than tripled, like tripled what he would have if he would have, yeah. I mean, his account is like 5 times what it was when he was 18.
Yeah, it is.
But he owes it all to the two of
The
us.
one time, my favorite was, I love having his account because remember the one time on the train where you're like, we're just going to close all. And it was the most fun I've had in my entire life. I couldn't do it in my account because you have to go through. There's no close all button. We're talking to the team about it because if there was a plunge where you just like,
and you know what? He's young, so he can take some. Like, he makes bigger percentages every year than I do.
Oh, you have to with a small account.
With a small account, yeah, because he takes bigger risks.
Yeah.
Like, it's different. It's different. His percent at the end of the year is always bigger than mine.
Yeah. But I will tell you, he's great, he's super smart, but he's not like very, I get what you're saying on the follow page, but a lot of it's sit and hold.
No, and he's got a lot of little like puts, 50-cent puts. But if for the small account, that adds up a lot more, right?
Yeah.
That adds up a lot more.
Yeah. And then Mikey.
Happy Hump Day, ladies. Welcome to Team Butterfly.
We need some
my
shirts
gosh, look at that guy.
We for sure need a secret handshake.
Okay, here, nobody is helping me. Nobody sent me a lock for my fantasy team. I need one.
Because there is no locks.
I cannot be last again.
You're going to be.
And I'm knocked out of the playoffs in our league.
Already?
Yeah.
It's over?
Well, they do this like playoff bracket, and I'm knocked out of that. All right. So, number 1, this is Florida 7. I want one of those Christmas cards you talked about on last call.
So Florida 7, when we get the pictures, I'm literally going to make like 20 of them and send them to our friends, and you're one of our friends. So.
All right, and second, if you leg into a butterfly as demonstrated and close in the same day, it's 2 trades, not 3.
Thank you.
7.
Thank you, Florida 7. I appreciate you. Okay, so leg in and close, that's 2. So 1, 2, and then just closing them, so that's 1.
I'm going to trust. I'm going to trust Florida 7.
I think he's on
it. Trust Florida 7. All right, look at this. Chicken guts kicked in after watching the reverse theta eat me up. So legged out.
Oh, the reverse theta, because he was the.
Yeah.
Okay.
All right, bump it up. Who knows? I love the sunglasses.
Wait, all of a sudden
it's got silent.
No, quiet.
Silent.
Everybody be quiet.
And
Swooze are only up 3. Let's take a look at our
10:48. We have a small amount of time. We didn't get to what's your assumption.
We don't get to it that much anymore. We've got a lot of stuff to do usually.
No, because it used to be, here's the thing, when it was Tom and Tony on what's your assumption, they just sold strangles, right?
Yes.
And now that it's Nikki on there, they do a lot of trades similar to like what we would do.
So it was a big differentiator to see, and I said this, he said, she said, they would do a lot of different
Right.
They would do a lot of different things. Oh, they're heating up back there. They would do a lot of different things than we do. So we haven't really kind of leaned into what's your assumption in a while.
Right.
Yeah.
Yeah. So because if it's the similar type of trade, we're not going to do it. And honestly,
there's no added benefit if it's the same trade.
Right. I looked through what's your assumption today, and many of the positions we already have, like long IBIT, most of those we have. What we don't have right now is Netflix, and that's been a
hot topic. Well, that's because the whole merger.
So Netflix down, and I don't mind. Why don't we sell puts in Netflix?
We can. I don't know what's going to happen if they don't get the bid, though.
Well, it's all priced in, Liz. This news is all priced in.
Well, they're actually fighting with another company right now.
but I'm just saying, like the options. If there's more risk, if people feel there's more risk with the, these options should be priced into
What's the implied volatility?
So you've got a rank of 25. You've got an implied volatility of 37. You can go really far. I mean,
this has Jade Lizard written all over it.
Netflix has fallen recently from like 109 to 94, and we could go for Jade Lizard, get our put all the way down to the 84.
The only reason I would say Jade Lizard in this situation, and once again, I know nothing, and I'm not an economist. All I know is that if Netflix wins, it could come screeching up, and I don't want to lose the upside.
I was never going to sell a naked call.
Oh, thank the Lord.
Yeah, I was just going to sell puts.
I thought she was going to get all crazy and sell a strangle.
No, I was going to sell puts in Netflix, and I was going to get a little more aggressive. I think I sold the 90 puts in here.
I like the Jade Lizard here. I really do. Look how wide the range is.
And you know what? So look at this. The 90 puts use $1,400.
Yeah, but when
those 84 puts use only $800.
Yeah.
So that's a 10% return on capital if you made the full amount. If you're getting $80 using $800, 10% return on capital in 37 days.
In 37 days. So even if you get a 5% return on capital in 37 days, that's pretty darn good.
But I will do a Jade Lizard for you. So there's the 84 puts.
You might need to bring it up a half a strike depending.
And the 102, 103 call spread. There's the Jade Lizard.
Beautiful.
But in Netflix, I chose just to sell puts because if it does bounce back, then I don't want it bouncing back through my.
I thought you were going to get crazy and give yourself a certified badass options trading card.
I was just going to sell puts. All I really do is sell puts. It's just look at my account.
Because in the words of one black-haired Thomas Preston, puts are neutral too.
Puts are neutral too. But I'll sell a Jade Lizard. We added on the call spread, giving our puts a little oomph, so we're getting $1.
And the markets are pretty tight. It's 97 at 105. That's not bad.
This is what a Jade Lizard looks like.
Oh, look at that.
Whoops, what am I doing? Oh, it was moving this. It was moving this.
You got to go back in.
No, I got it. I have to, there it is. What?
No, you have to just go to the trade page.
Wait. There it is. It just moved it accidentally. Here we go, 101. This is what the Jade Lizard looks like. I was gonna, doesn't this, here we go. So anywhere between 83 and 102, we would make $102 at expiration. We have no risk to the upside, and our risk is to the downside, getting along 100 shares of Netflix at 83.
Yeah, that's not bad.
Where did it, after the split, where did it open after the split?
100 something, 120 maybe?
120.
I don't remember.
So anyway,
it's been down.
It's been down
since the split. It's been down for sure.
Okay, so we're using $900 to make 102. I'm sending this Netflix order.
I hope we get filled. Maybe take it just to maybe take it to 100 or to $1.
And what is crypto doing? Because I keep getting alerts on my phone. Bitcoin 92,000. It got up to 94,000.
It did?
Yes.
I missed that move.
Last night. You were out.
I had my unlimited glass of Prosecco in front of me.
All right, $1. $1 on that Netflix Jade Lizard.
Wait, hold on, Jenny, just for a second. Only because, you know how when you go to the curve view, it just shows those weird blocks? I don't like that.
I don't like that either.
Who looks at that?
That's like an old Doe thing, I think.
Oh, okay.
Okay, so I want to go to BTC. We have 2 minutes. And take a look. See if it did. I'm not sure, but I thought it hit 94 last night. 94,950, 50 points away from 95. You slept right through it.
I drank through it. I didn't think I was sleeping.
Oh, geez. Yeah. So Bitcoin. Is Bitcoin going to rally the rest of the year?
Yeah.
Although that woman who gave out the silver coins, she was very anti.
Well, she sounds like she's collecting silver coins for the future.
She was very convincing too, I heard. Very convincing.
Mandy's right in there with this, though.
Everyone fought over the silver coins.
I mean, it's cool to have silver coins. Because what else are you going to fight over? Like a bath bomb?
I know, right?
Yeah.
Yeah, Mandy got some hand lotion. She wanted the silver coins.
It's so fun. You're walking out with a bag of silver or, hand lotion.
I'm watching Robin Hood right now. It's actually a really good series. And that's how they carry their money around. Just, coins in the bag.
Sacks.
Yeah, sacks of coins. All right, that's it. I'm going to make sure we got to every last tweet. I'll refresh my Twitter. Nothing. No locks for my fantasy team. I'm going to be last place again.
Yeah. Well, you can't blame our viewers. Okay. So. All right, we have to close up shop because we've got Option Trading Concepts live immediately following us. Stay on there. It's always a great show. And everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Hopefully, I'm here tomorrow after my tonal class today.
Oh, yes.
See you tomorrow, everybody.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro. yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Contigo quiero una indecencia, por eso te quiero desacatar. Te estoy esperando en la fila, yo que tengo tanta paciencia. Contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear.
Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and Glenn. Glenn. It is a glorious day in the markets. Yes, immediate applause. How do you like that?
I think it's well deserved.
Really?
Yeah, no, this is my Super Bowl today. Happy Fed Day.
Oh, yeah,
It is.
sure it is, yeah.
Woohoo!
All rejoice.
What's the feeling on the desk over there? Is it?
We just want Mr. Chair Jerome Powell to speak with his heart today.
Oh.
We'd like
say it with your chest. Like that kind of thing?
Exactly. He doesn't have many of these left, so we'd like to hear what he actually is thinking. That'd be great. And a purple tie as always.
What does the purple tie mean again? I forget.
At this point, it just means status quo. If he shows up in anything else,
Well, you know what red and blue mixed together make.
What would that be?
Purple.
No.
I feel like they go around Northwestern telling that joke all the time. You know what I mean? Like it's purple there. I mean, I'm sure it's a thing.
Go Cats.
I feel like you know this already.
Always got the purple on me.
You're just so ready today. You got it all.
I mean, listen, look, when you talk about colors, sometimes there's certain colors that It's a little hard to wear unless you're on campus. I mean, I don't imagine you buy a lot of gear. You love your school, but it's kind of hard to fit purple into the wardrobe, bro. Like,
it's definitely harder. But yeah, we usually have.
I've had problems with with Wisconsin for sure.
White, black, and gray with little splashes of purple is probably the best. But it could be worse. I feel like Illinois is tough. Bright orange.
I would agree. Yeah.
What else? Like even Notre Dame.
Yeah.
If you go too heavy on the gold.
It's nice to smile when I talk about Notre Dame now. I'm a huge Miami fan.
Knew somebody was going to be mad.
I'm laughing these days.
It's good. I'm in a conference.
I am. Yeah, I am. It's fun.
Notre Dame. That was It was actually kind of funny that they withdrew. But everyone was like, you're not coming anyways.
Well, my favorite was all the memes about the seniors on the team that are not going to the NFL finding out that they've already played their last game. What the hell?
Yeah, that's no good. It's not a good look.
It's fun. It's a really fun time.
How was Japan?
Japan was amazing. I actually have a little something for you. It rhymes with den.
That's weird. Matcha Kit Kat does not rhyme with that. Or strawberry cheesecake.
I do.
Kit Kat.
I have both of those.
Love the strawberry cheesecake one.
But I brought you back some. I need to see what you're missing because I've got some various yen coins.
I have no yen coins.
Oh, golden.
There you go.
Yeah.
Wait, various yen coins? What do you mean, like
just
years?
like leftover coins.
Okay.
From.
Oh, gotcha. Different.
Yeah.
I thought you were like getting ones from like 10 years ago or something. Like
I have the buffalo yen. Yeah. The centennial yen.
You know what I mean?
But yeah, I've got a little yen piece for you.
It'll go great next to my Sluggers coin.
Perfect. Beautiful. But yeah, markets aren't really doing much, which is why we haven't spent 1 second talking about the markets in the last 6 minutes. E-minis flat, NASDAQ pretty much flat, Bitcoin catching a little bit, down 800 points, but it feels like this is a market of waiting and seeing until 1 o'clock hits. And that really is, if you look at all of the futures that we have, and you look at some stocks as well, of course there's always going to be stocks that are flying around, but from a futures standpoint, there's only 2 products that are down more than 1%. One of them is wheat, and then you've got XRP and platinum futures. To the upside, there's literally nothing that's up over 1%. So this is truly just an inside day. I'm sure some of these will change once we get the Fed decision and some Fed speak. But until that happens, we are seeing basically nothing, like super low volume. Not much is moving around here. So
yeah, quiet.
We'll see. But as Glenn alluded to, we do have the Fed decision at 1 o'clock Central, and then some Fed speak at 1:30, I believe. But as of right now, 90% chance we get that 25 basis point cut, which would bring us to 350, 375. I would be shocked if they didn't do that, because they almost always will lean towards the probabilities there. And from a Tasty FX standpoint, we are seeing an inside day as well. Not much going on there.
Yep, a little bit of a consolidation. Would have expected or would have liked the dollar, U.S. dollar, Canadian dollar to have been the big mover of the morning after a Bank of Canada interest rate decision today. We'll get into some slides in a little bit just on global interest rates, but a little bit of volatility it was right after U.S. market open that we had this Canada decision, a hold, but a little bit of back and forth, but a really tight range. Nothing to really fade unless you are really quick and not a lot of momentum to hop on board. So the Fed decision seems to be ruling all, at least for now. No major news out of Canada. Later on the interest rate calendar, got the Swiss National Bank meeting overnight as well. So a heavy hitter. Heavy week for interest rate decisions. Had the RBA, Reserve Bank of Australia, stay at their interest rate at 3.6% on Monday night. But other than that, just some dollar softness heading into this FOMC decision. Mover of the day, maybe USD JPY to the downside, just falling from its highs hit yesterday, and perhaps just some slight risk-off sentiment heading into what could be very, I don't know, what's the other word form for catalyst? Not catastrophic. Consequential meeting this afternoon. Because, as we all know, heading into these decisions, like Mikey just called out, the rate prediction for today, all but televised, mapped out, telephoned. What we're really looking at is 2026 already. I think markets are pricing in 2 cuts in the near future.
Yeah.
Over the next few months, or
if we get the one today.
Yep.
Yeah.
So that actually has been a bit deflated from recent expectations. Markets pricing in a slightly higher neutral rate there.
You said you had like a slide with the global rates or something like that?
Oh, yeah.
Okay, so yeah, I'm not going to ask them. I'll wait. But
should we get into it?
I mean, we might as well.
All right. Put together this little slide deck for you based on global interest rate and the U.S. dollar implications, because we've had a strong week. We're in the middle of a strong week for central bank decisions, and this landscape is always changing, and it has very consequential implications for the U.S. dollar and all of the spot FX pairs that are available for trading through TastyFX. So let's go to the next slide and just give you this global policy rate snapshot right away. All the major central banks here, a lot of numbers, but wanted to try and break it down for you how I thought most interesting, looking at each central bank, where they're currently priced for their overnight rate. And this, as we know in theory, is the kind of trickle-down rate set from these central banks that have implications on all rates across commercial and otherwise, and in the spot FX world, directly commands what the overnight financing charges will be for holding these currencies and for financing using these currencies. We'll get into it in a little bit, just how that can result in direct benefit or costs to your overnight positions. But here we're looking at, I also added the peaks this cycle because I thought this was interesting. From where are all of these banks falling from? Because we had in 2023 was around the consensus peak for a lot of these major currencies. Inflation rising after that stimulus fallout from the pandemic. Now we're all coming down. A lot of these central banks were in the same place coming down from 2023, but now we're getting a little bit of divergence as we settle on if countries or central banks are already at their more neutral rate, and we tend to see it. I broke it down, the consensus bias right now, at least for what is expected over the coming months and even 2026 as a whole, however people can map it. But we'll break it down by region. But right now, anything surprise to you guys? Just this week we've had, the Bank of Canada this morning, their easing cycle is over. Staying where they are, their next move most likely a hike, and similarly the Reserve Bank of Australia, Australian dollar getting a lift Monday night after they pointed to a hike next most likely as well. And then we have, of course, the ECB and the Bank of England that traditionally track the Fed. Right now is where we get to that most interesting space that we'll cover in a second, of just when we get around the same at the end of the cutting cycle, just where do rates settle? That could be different for each region. And then the ultra low of the Swiss National Bank and the Bank of Japan, which are expected, a hike expected from the Bank of Japan, but what would that be to maybe max 1%. This is the highest it's been in a long, long time. So this is the current snapshot. Jamal, anything to note?
Yeah, I mean, I got a lot. I had to go. I was literally, before we started the show, I was just going back. I've done this before, but it's been a while. I was just going back and looking at like interest rates across time, just for us. In my life trading lifetime, if you will, since 2006. I tell you, I mean, things were just moving around so much when I was learning to trade. I had no idea what was going on. I mean, when we had Fed meetings, and I had to look back to try and remember and see if it made sense. But I started trading in July of 2006. Interest rates were 5.25 at the time. If you would have asked me that at the time, I wouldn't have remembered. I really wouldn't have thought about it. And they stayed flat basically until August of 2007. And I do remember that time because at that point I had my own book. And that's when every single Fed meeting they come out and they'd cut 25 basis points, markets would go nuts to the upside. Wild. And that happened, of course, and then 2008 and all this other stuff. And so the last time, obviously, we were going to cut right now, right? We're going to cut to 3.5 to 3 in 3 orders. And that's essentially the same as, December of 2022, November of 2022, but also equivalent to like January of 2008, just looking across times. And it's just interesting to see how different markets react now to, like I said, I mean, I'm telling you, every time they cut 25 basis points, markets would go nuts, man. Like I felt like 3 to 4%, like to the upside. It was crazy. You knew it. I mean, you knew it was coming. Like once it happened in July, and once it happened in August, like of 2007, then July, like September was the same thing. October was the same thing. And you were able to position yourself and easily make money. It was wild. And that's just not the case anymore. Like it's different. As we sit here, we wait. You just have no idea what's coming. It's a totally different time period. So just that was interesting to look back. But then across what's happened over the last couple of years, I mean, when you look at like your slide here, which is a great slide, by the way, the peak cycle on some of these, we went as high as obviously 5.25, and like you mentioned, I mean, Bank of Canada. I'm sorry, we went to as high as 5.5, but like you said, Bank of Canada, Bank of England, a lot of our major partners, like they basically had to do the same thing. They had the same problems, as they always say. A lot of these countries, when one sneezes, the other catches a cold, and that's what we basically had to deal with, right? I mean, they all had to go up because we all went up. But it's been interesting watching them as we've been coming down. Like you just said, look at a couple of these. They're going to have to possibly race because they went down probably a little too fast. And we know how much heat the Fed has been taking over a while here as far as like their cadence. But I think it's been appropriate. I really do. I mean, I think you can see. As a matter of fact, I remember a year ago this time, I did not think they were going to cut 50 basis points last year when they did.
Right.
Chris and I used to talk about this all the time on Fed Futures Power Hour. I'm like, no way they're going to cut 50. Like, why would they do that? And they did. And it was like, wow, that's weird. That's interesting. I still don't understand why we did that. But okay, I guess it worked out well. So it's been an interesting ride here. And look, all of this is, I'm telling all these thoughts of that I got because prior to 2022, I really didn't understand the Fed that much in bonds. And as much as I traded options, I really didn't pay a whole ton of attention to it because it didn't move much. And I always say you learn so much about these things when they move a lot. And I think now we all have a really great grasp on it. And until we get to a point where, I don't know, interest rates don't move a whole ton again, but they've really moved a lot over these last 3 years. I don't know about you guys, but I've learned a ton.
Yeah. I mean, same, absolutely. And to your point of, now it's so much more so on expectations, on trying to price the future, which leaves us a lot of times just like the Fed and the other central banks in a wait-and-see environment as opposed to reactive to actual changes, right? Because a lot of those are already priced in. But I wanted to break this down in 3 buckets because these rates are so consequential for FX trading, not only for the actual, cost to carry overnight financing charges, but also just because you were saying, what is 5%? What was 5% to us in 2007? What is it now? All of these numbers don't exist in a vacuum. When you're trading the exchange rate itself, these are all relative, and so it matters what each is doing and what each will do. So first, on the next slide, I wanted to take a look at who's moving with the U.S. right now, and that we talked about is the ECB and the Bank of England. Traditionally, they are a lot, when we sneezed, what was it? When we sneeze, they cough.
One of them sneezes, the other one's catch a cold.
When we go low, they go low.
One of them sneezes, the other catch a cold. Yeah, you like that one.
I do. I like that.
Feel free to use it. Use it.
You know what?
Use it.
I'm 0 for 1 right now on using it, so I got to tighten it up. But yeah, I mean, we've come up together, we've come down together, but now we're at this interesting inflection point where us and the Bank of England are at the same rate, and so right now in terms of spot FX rates, you get this perhaps increased sensitivity around what 1 or 2 cuts might be, because one cut from 5%, is that consequential? Sure, but more cuts are coming. But as we get to this kind of neutral rate, keep an eye out on that euro dollar and that pound dollar to be even more sensitive to data releases or speakers that tell you, perhaps clues as to if 1 cut is coming, if 2 cuts are coming. I mean, the ECB right now is looking at a long hold, not expected to cut in the near future, whereas the Bank of England is slightly closer to us in terms of more cuts are coming. But that isn't to say that, the Fed is already priced in this cut, and so they might be, from a market's perspective, already at a standstill of a long hold with only 1 or 2 more cuts coming. And so you can even look to that euro pound market for divergences there if you aren't seeing it in the pound dollar market. But it presents some interesting opportunity. But those are the ones most like the U.S. So keeping track of what the Fed is doing will give you a lot of the input for what those countries are doing. On the next slide, we have very interestingly the traditional commodity currencies and their corresponding central banks, the Bank of Canada and the Reserve Bank of Australia, which are now switching back to hiking, albeit not right now. Bank of Canada saying they'll hold with more likely than not a hike than another cut, whereas the Reserve Bank of Australia is more so looking at a hike next. And Jamal, you brought this up, that did they overshoot it? Is that kind of the narrative for them right now for these currencies? It's actually not the case of worry that they've overshot it, but particularly in the Australian region, they're now in a great spot where they can react to data releases and say, okay, our growth is positive enough to hike rates back. So not necessarily a bad picture there, but I'm looking most closely at some of those things like those inflation data releases for some idiosyncratic currency risk on that side to the upside. Traditionally, higher rates will bolster that currency, especially when it's on the backdrop of they're doing this in reaction to higher growth and better performance for that economy. So looking to those two currencies to move in tandem, and they also have a relationship with each other in terms of kind of risk sentiment that's been commanding a lot of this narrative so far in 2025. We had the tariff rulings that shocked the Australian dollar the most out of the major currency pairs that I look at, and Canadian dollar as well. Very sensitive to some of those tariff news and developments. And then lastly, switching over to, on the next slide, switching to the players that don't want to play. They don't want to play the rise and falls because they can't, or because they've established themselves, like the Bank of Japan, as this player in the global financing landscape, where these will sit. A Japan hike is expected maybe in early 2026, maybe as soon as December. Markets, of course, will react to that, but in terms of interest rate differentials, they're not going to get above 1% anytime soon, if ever. They're coming from zero. The Swiss National Bank did the same kind of hiking and cutting cycle that other European banks did, but to the tune of from negative interest rates to almost 2% and now back to zero. So there's a risk here that this Swiss National Bank may have to go negative again, but for the time being just sitting around zero. And this when we're talking about interest rate differentials, presents the one of the most popular and interesting trade dynamics for these spot FX pairs in the terms of the carry trade, because we have the U.S. still sitting at 4%, and these ultra low banks sitting near zero, and so a bit of a discrepancy there that can yield in the spot market a positive overnight carry to your position if you are on the right side of that trade. Of course, the actual directional risk can many times outweigh this dynamic, because you're only getting pennies in front of a steamroller in most cases, but still an interesting dynamic nevertheless. And we've looked this whole time at U.S. dollar as the front runner for that long position, the one you want to be holding that's yielding the most. But if we keep cutting, maybe something like the euro becomes that highest yielding major currency to hold, and that presents some potential opportunity in pairs like the euro franc, which are historically a lot less volatile because they are so correlated both geographically and economically. And so if you're looking for a low volatility trade, euro staying at 4%, Swiss is staying at 0, then that could potentially present another opportunity that doesn't have any dollar risk as we continue falling. So those are the main things, kicking it over the takeaways. Why I'm looking at a lot of these things.
I have 2 comments and 1 question before you get to
100%.
First of all, the Swiss S&P is currently at 0%, right? Like I mean, that's like literally the definition of Switzerland, right? I mean, it's like no feeling. And it's so fun. It's so interesting. Like the Bank of Japan, I mean, they're just like the honey badger. They do whatever they want. They totally doing different things different. Final is a question. I had 0 idea. I'm going to tell you right now. CHF. Do you know what that means? The franc?
It is the something Helvetica.
Ah, nice. I had no idea, bro.
It's Latin.
It's like,
Latin
Confederado Helvetica franc.
Obviously.
Yeah. I never knew that. Never knew that. It's so crazy.
I never knew it before Nick Batista berated me time and time again of how am I supposed to know what these symbols are? I can't see it in the platform. So, yeah, a lot of good call-outs, but a lot of interesting implications for monitoring this landscape as it pertains to which economic data releases should I be looking at, which pairs potentially present a positive carry that could work in my favor, and how will that change over the next 12 months? Does the U.S. dollar not become that major currency in demand as rates keep falling? That's what I'm looking at here on this FOMC Wednesday. Interest rate picture looking funky and fresh for 2026.
Love to see it. Yeah, I'm looking at the euro franc right now. If you buy this pair,
let's go back in the platform.
You get a nice swap ask, and it's actually still near the bottom of the range here if we zoom all the way out, but seeing a nice sell-off today. I do have the dollar franc as my only position remaining, as it is not green yet, so it will stay in this portfolio. But this one is a nice, same thing. You get paid to hold this if you are long the dollar pair here, dollar franc. So big red day today, relatively speaking, but we will see how these things pan out in about an hour and a half here.
Yes, sir. Yeah, and it's very interesting. U.S. dollar, Japanese yen, the most popular carry trade, and has benefited thus far from a major rise in exchange rate, because the positive carry would be going long U.S. dollar against the Japanese yen. So if you had that position at any point in the past, really, past 2 years, 3 years, you're most likely green on that from a directional standpoint, and the ability to garner some of that positive overnight carry. But this one margined at 5% for retail traders right now, at least. The highest positive carry from major currency pairs would actually be that dollar Swiss franc, not because of anything of the interest rate differential being wider per se, But just because the dollar Swiss franc is margined at 3%, so you're getting a higher leverage, so your overall position is getting more interest in theory, as well as the current exchange rate. All of our trading settles in US dollars. This at a historic low also gives you, with the same amount of capital, a higher return overnight. But again, yeah, that trading near the top of its range right now, it's still very historically low if we're zooming out years, but for very active traders, perhaps both don't present as enticing a long US dollar position just from a structural standpoint. But who knows, that could all change in an hour and a half. Very excited to get some euro dollar volatility back in the market. That one has been compressed like no other over recent weeks, not moving at all.
I just
like the market.
I just bought the euro franc pair to get more short the franc, but get away from the dollar.
There you go.
A little bit.
Next level diversification.
Hey, that's what we're here for, right? Any other spicy pairs you're looking at before we send you off to lunch?
It's it's a dollar day, so I'm not. I got to keep my eyes on the prize. But yeah, I mean, all yen pairs are in play. Those are still pinned near all-time yen weakness. So you still have, if we get the dollar shooting up today, there's still the intervention risk at play. But at least we're coming into the meeting off of those highs. In terms of emerging pairs, I mean, the dollar South African rand is still pinned near its lows. Nick Batista was able to get a little pop out of that. Dollar peso also very low, back at July 2024 levels, but not sure if this is the right time to be dabbling into those emerging US dollars. Pre-meeting, might have to wait for a reaction there.
Yeah, maybe you stick to the majors if you're trading it. But yeah, very interested to see what happens at 1 o'clock, and of course the narrative, the Fed speak at 1:30. Maybe he just shows up with the tie a little bit loose.
Yeah.
You know?
Peace out, Girl Scout.
Yeah.
Go get them.
Yeah.
One team, one dream.
One time, one dream. That's it. Thank you, Glenn.
Thank you, guys.
As always, if you want to follow Glenn on Twitter, he's at Glenn Freibarger with an A. But you are free to go. Enjoy your lunch. Woohoo! Thank you again.
Thanks, guys.
Yeah, man.
E-minis haven't changed at all. Still flat. NASDAQ down a little bit. Dow and the Russell are green on the day. Bitcoin literally hasn't changed since we gave the overview about a half an hour ago. But if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas, questions along the right-hand side chat. But yeah, as of right now, I've got 2 short franc positions. One's long the dollar franc and then long the euro franc. We'll see what happens with those. But those are super small positions. I can hold them. Both of them are positive carry, which is nice. And yeah.
The franc.
The franc. Have you traded anything today? You looking at anything outside of the currency space?
No, I have not. I mean, it's one of those days, man.
Yeah.
I
mean, there's like literally nothing's moving.
Yeah, literally nothing's moving. The last trade I have up here is one. The last trade I posted was yesterday. I literally did a iron fly at the 68 half strike with the idea that we don't move. And then I realized like I could literally start putting on a whole bunch of trades for a bunch of scenarios, and I have no idea what's about to happen. And I'm like, I'm just gonna chill and wait, and like kind of what Glenn kind of alluded to right before he left, the idea of waiting to see the reaction, I think is always pretty good too. But I just wanted one trade in case we absolutely really did nothing. I did that for 612. I did it 68.50 short the straddle there, and then $25 wings on each side. But yeah, outside of that, I mean, I spent Monday and Tuesday kind of cleaning up positions, and That's kind of how it's been. And again, I got that iron condor for Friday, but I also have the position we put on, which is the calendar spread from Friday to Monday, the 69.25, in case we do make a move to the upside. And I also have a downside situation in SPX as well. I have the bearish Delta Buster, short the 6,900, 69.10 call spread, and long the 6,800, 67.90 put spread, and that's in the DEES 19 expiration, so regular DEES. So those are my SPX trades right now.
Love it. Yeah, I'm in a similar boat. I've got the same exact calendar spread that you have on. So long the 5-day, short the 2-day, 69.25. That was a $3.80 debit, $380, basically flat. It's not going to move until after this announcement. They'll zap that premium in the 2-day later today, I would assume, regardless of the movement. But yeah, then I have an iron condor on. I closed the other one from yesterday. I closed the one yesterday that was from a couple weeks ago from the SIBO floor. That was a nice winner. But someone in the YouTube chat was looking at a new iron condor, so I used the same strikes, 6,500, 7,100, defined risk 10 points wide, classic, collect 1/3 the width. I collected $330 for that one. So that kind of plays into sort of a neutral to bullish stance. If we get up to 7,000 by the end of the year, it'll still be a decent trade. So,
what kind of luck will we have? It's been 3 days of barely nothing, maybe even longer, honestly, when you look at the average moves, the average ranges. What kind of luck would we have if we go to the floor tomorrow and we get a crazy day?
I mean, that would
it's like
4 for 4.
Come on, that would be wild, dude. That would be wild.
I don't think we've seen a realized move less than 100 points on the days that we've been at the SIBO. So. Maybe that's what's required. Maybe. We just need to be there for some volatility.
Yeah.
But yeah, we will be broadcasting from SIBO tomorrow, so check it out. But yeah, it's going to be very interesting to see if the markets move at all. I mean, yesterday we had an ominously low implied move, only 45 points. And this is what you can see this here. Like the same time yesterday we looked at this, it was 45 points. Now, 24 hours later, it's 37 points. So, like, this is a great example of premium is not going to come out until after this binary event, and the market is pricing that in. So some people were asking, should I wait for AVGO and some of these other products that are announcing earnings, Adobe?
Lulu's later in the week, but I think specifically tonight is Adobe and Oracle.
Oracle, sure. Yeah. So, yeah, Adobe, Oracle, AVGO's tomorrow, but... question was, should I wait until after the announcement? And it's like, yeah, I mean, this market could fly around, even though it's not projected to. It could still fly around based on what's said and what's reported here, and that could push and pull a lot of these equities. So, if you're trying to create neutral strategies, or you're trying to, go to a specific region like at the expected move, I think waiting until after the announcement and getting closer to that 2:30, 3 o'clock range certainly helps you out with that.
For sure, because everything we do is based on numbers and probabilities. And again, if you're trying to base the expected move off of where the stock currently is, like Mikey said, stock could be $10 higher or lower by the end of the day here. Speaking of higher or lower, VIX 1D. VIX 1D keeps climbing into the day here. And it's kind of how this thing works, right? When you think about how VIX works, and it's using, they always say options between a 37 and 52-day window or something along those lines. I mean, this thing is literally using some of today, some of tomorrow. So it's interesting that it's climbing here. It keeps moving higher.
Yeah. And
14 and change, I looked a little while ago.
Yeah. And yeah, this is probably a reflection of not necessarily volatility itself increasing. Like when you look, and this is where the difference is, like when you look at the VIX, you're not looking at VIX 1 day because you're looking at 30 days. But the VIX 1 day, I would imagine that this is climbing because premium is staying bid as time passes, and that's just going to inflate the VIX 1 day until this announcement happens. But it is a great call out, and I think it will be very interesting to see how this moves 2 hours from now. Or an hour from now, really.
Yep.
I would imagine that it crushes unless we get a big move to the downside. But we shall see. So all that to say, if you're still trying to trade 0-day stuff, it's still totally in play with the VIX 1 day staying elevated and a lot of this premium in even our SPX positions. Like the E-minis are green a little bit, but these positions haven't really moved at all. The calendar spread in particular. So we will see what happens, but we're both looking for a nice little rally here. That would be great for these calendar spreads, especially as we get closer to December 12th, which gives us all of that extrinsic value premium that we collected. All right, popping over to the YouTube chat now. Let us know if you've got any trade ideas or questions. I've got the Tasty FX link pinned at the top of the YouTube chat. You can check out that realm of the world. But let's see. Oracle 250 call calendar, short the weekly options and long Jan for 375 debit. Let's check it out. 250. So just outside of the expected move on the upside in the 2-day. And in Jan, yeah, I mean, this is, I'm actually surprised that this is such a cost basis reduction.
Right? I would think this would be actually more expensive. I was actually a little surprised.
Yeah. Because you're with 2 days to go, you're collecting $300, and with 37 days to go, you're only paying $600 and change for that long call. So I really like the way this sets up. If you're upside bias or downside bias, I think this is a great cost basis reduction. And these are the types of trades where you could make more than your debit paid. Like you could make $500 on this calendar spread if you get a rally. Mm-hmm. Just because you're collecting so much in the 2-day, and that's all going to zero. And the 37-day, yes, that will realize a little vol crush. It's at 61%, and the back months here are in the low 50s. But still, strong cost basis reduction either way. Even if Oracle sells off and you see losses on this position, you would have already reduced your cost basis by 50% on that long call. And then you can just get rid of the 2-day, lean long with the long call, or roll it into December, reduce basis a little bit more. I kind of like this.
I was undecided as to whether to trade Oracle. I'm trying to buy it right now. I'm trying to do the same one for $375.
Yeah.
Don't let me in, but I'm sure at some point. Yeah, I like it.
Yeah, I'm going to keep my eye on this, and I'll place this closer to the end of the day, see what the markets do. But the nice thing is, if you believe that the markets will react positively to the Fed announcement and Oracle reverses the sell-off today, you could take it off for a small winner prior to earnings if that happens. But yeah.
I totally agree. And you're right. I mean, I'm totally contradicting myself by putting this on, but the only reason why I don't mind as much is because we're buying Jan, which is far enough out anyway. I mean, you know, is what it is.
Yeah. I mean, you can, and that's kind of the thing. Like if you're doing earnings trades with a near-term calendar, like a long 9-day, short 2-day, I would wait till after the announcement so you can get closer to where that price is. But yeah, to your point, Jan is far enough away. It's likely not going to move too much, even if Oracle sells off more or rallies a little bit. You really are banking on that short volatility from the 2-day going to zero after the announcement, after the earnings announcement for Oracle, I should say.
It's going to get hard to get filled on most things at this point in the trading day.
Yeah.
Like it's just kind of how it's going to be. Things are going to start to widen out. That's one of the things I do remember from my time when first learning the trade during the Fed meeting. Things used to widen out. It was hard to get filled on anything. I wouldn't be surprised if I don't get filled on this thing until after the meeting happens.
Yeah. Yep. What is your plan for the SPX Iron Fly?
I don't have one. No, I'm just kidding. Look, when I put on an Iron Fly, for the most part, I mean, I'm just waiting till expiration. If for somehow or another, this thing gives me an opportunity. Again, I got 2 days to go with this. And on the other side of the meeting here, I mean, look, I fully expect that this thing is either going to be way out of the money to the downside or the upside. That's kind of how I feel. If I'm lucky enough where this thing is trading, say right here by tomorrow, and I'm making, I don't know, say I'm making like $500 on it somehow, I would probably take it off.
Yeah.
It just depends on the fashion, too, in which the market is still moving. If the market is still moving within these tight ranges that we've had over the last several days, guys, if the Fed doesn't make us move bigger than the average trading range that we've had over the last 9 days or so of trading, then I'm just going to take it like we're just not going to move until the end of the week. And that's literally why I put this thing on. So, yeah, if for some reason we're trading here tomorrow, I'm probably not going to do it. For the most part, when I put an iron condor on, especially one like this that only costs $250, which again is 1% of the portfolio, I mean, I just put it on for expiration for the most part. And SPX, that's why we do SPX, because it's cash settled. So, it's not a ton of money. I'm cool.
Yeah, you can hold it. And because you can hold it all the way to expiration and you're only risking 1/10 of your max profit, really, you can get nice returns if you are right and you pin that.
I was about to say, you have the one for today.
So
I was like, is that mine right now? I'm not up that much money. Okay.
So this was another point I was going to make, is that like, even though it's 25 points wide, it's still relatively narrow compared to SPX's price point, which is why you're collecting $2,200 on $250 of risk. But if you look at the 0 day, you might expect to see this be worth a lot less, but it's not. Right. So to your point, like if you're trying to get $600, $700, $800 out of this thing, you're going to have to hold it till Friday, and it's got to be like 2 o'clock. Because otherwise, even with a vol crush, it's going to hold on to a lot of value unless you get a massive vol crush and you're pinning 68.50. But yeah, with these strategies, if you're trying to get close to max profit on it, you're going to have to hold it close to expiration, like literal expiration. But yeah, you could easily see $200, $300 tomorrow if you're at 68.50 with the vol crush that we're expecting.
Mm-hmm. Adobe has earnings. You looking to do anything in there? I was thinking
Adobe.
I
don't know. Adobe scares me.
I know, right? Like, I know. I looked at DocuSign, who had earnings on the 4th, and they went lower after. I think they had on the 4th after the close. You can see what happened on the 5th, and so it's almost like, do I even bother to play this? I told myself a while ago, I'm only going to play the ones where I think actually is going to move to the upside. I'm just going to stick in the calendar call spreads. When I start trying to pick sides, it doesn't always work. I mean, maybe that's a reason to just stay away from this one. Whatever.
Yeah, I mean, Adobe is tough. If we look at the year for Adobe, it's down significantly. It's had multiple gap downs. The first one was actually late last year, but gap down from 580 all the way down to 440, and its sell-off here kind of flattened out, and then gap down again in March from 450 down to 360. So that was a 100-point sell-off, and now we're sitting at 340. So like this thing hasn't caught a bid at all over the past couple of days. Yes, it's seen a nice rally from the lows, but that could be just short covering, honestly.
Yeah.
So it's tough. I mean, we're looking at a 24-point implied move with 2 days to go relative to 35 and change and 40 and change if we go to Jan and Feb respectively. But Adobe is just one of those companies that I have a hard time seeing really recovering. Because it's like, if you consider that AI is changing everything, Adobe is probably one of those companies that's going to be hurt the most by it. Because now you can just go to ChatGPT and be like, make me this animation or do whatever, and give me a 90, 60, or 90%, 10% blue tint relative to red. Like, you can do everything and just have a computer do it for you.
Yeah.
So
yeah, it almost renders Photoshop useless in a way. I remember when I was in grad school, we used to use Photoshop for like these microscopic images and try to like draw, like fix them up and make them look better and stuff. And I mean now, like, and that took like, I mean, it took hours. Like, it took hours to do. And like you said, now it's just like that. They can do something like that. So you're right.
And that's a single use case. But when you think of other companies that are affected by AI.
Okay, I decided to buy a calendar call.
Which one?
I bought the 320 calendar call. Calendar put.
Oh, okay.
Calendar
downside.
put spread. I bought the downside. Yeah, calendar put spread, 320. Yeah, why not?
Like it.
We'll see what happens.
Yeah, I mean, if Adobe rallies, so be it. But same scenario, you can still hold it and see if you get a reversal.
Yeah, it's $1.40.
But yeah, I think when it comes to Oracle, I would much rather play Oracle to the upside versus something like Adobe. And then what was the other one we were looking at?
Earnings wise,
Yeah.
well, like you said, it's a couple of days, but ABGO is days
ABGO.
out. Wait, is there another one in the morning? Yeah, not really. Sienna. I haven't played Sienna in forever.
Yeah, we're looking at Costco.
Oh yeah,
That's
Costco.
tomorrow.
It's tomorrow, huh?
Wow, Costco's under 900. So much changes when you leave the country.
I know. I was actually I was talking about this on the last call with Nikki on Monday. Yeah, I was like, this. I don't understand this actually. This is probably one of the things I understand the least.
Why? Because Costco's the most magical place on earth, and it's at the bottom of the annual range.
That place prints money. I just don't understand.
Yeah.
And they have a lot of private label products, and I just don't understand. I don't understand.
Didn't they? I think maybe it's weren't they suing?
They are suing. Yeah. They are suing.
The tariff stuff.
That's true. Yeah.
So maybe that's it. Maybe it's just a liquidation. Like people fear of more to come on that to the downside. But.
Yeah. So you know what? That does make this an interesting trade, and I think over the next several sessions we should figure out how to do a longer term trade in here that's cost that just makes sense, because when you put it that way, it is kind of a binary trade in an interesting way. I mean, this thing could really take off to the upside. I think this is undervalued. I know you do too. Not to put words in your mouth, but I already know how you feel about this stock. This thing is undervalued, and it's been struggling this year. And I know they just are suing behind the tariffs, but I don't know. I think this could be an interesting trade for sure.
Yeah, especially for earnings. Even the shorter term one, like the 900 strike, long the 9-day, short the 2-day, $300. This is another one that you can make $500, $600, $700 on this easily, just because of the cost basis. You're selling that 900 strike for $700 and change. You're buying the 9-day for $10 and change. And if you get the rally towards the strike, and you get all that extrinsic value out of the option from the 2-day cycle, that long option is going to hold on to a ton of value. So I think that's probably where I'll land, is an upside 9-day, 2-day calendar, just because we're still at a high price point in Costco. It's hard to do anything else from a dynamic implied volatility exposure standpoint, where you're going with a calendar spread or a diagonal spread. It's just really expensive if you go to January or February. So I like the idea of doing a pure implied volatility, pure earnings trade, buying the 9-day, selling the 2-day. But I'll do that tomorrow, since this is after the close tomorrow, and we'll have more clarity around the markets after the Fed announcement today.
Yeah, I'm going to be looking at this thing. There's got to be a nice little trade. I would like to find a trade where you could participate to the upside for like somewhere around 1,000 to 1,500, just being realistic about it. But yeah. I don't know. We'll see.
Grumpy Mike has a good point. Many companies are doing that in terms of the lawsuits. I think this is one of the bigger ones that has come out and said that they're doing that. But yeah, good point.
I'll put this on the watch list.
A couple of minutes left. SPX implied move for the rest of the day. Still stay in bid, 37 points. I don't know. It feels light, but maybe not. I actually do think that there is something to be said about J-Pow's narrative meaning less now, because in just a couple of announcements, we're going to see someone else on the stand. Really?
Yeah, I know, right?
So it's like, he can give his personal subjective and objective take on what's happening, but yeah, I mean, the market's expecting a 25 basis point cut. We are likely going to get a 25 basis point cut. I think if you see the market move outside of the implied move of 37, 38 points, it would have to be due to some kind of wording being digested in a weird way. I would imagine he's going to be very, we'll let the data tell us what we're going to do next. But I think if he leans a certain way with confidence, maybe that's when you see the markets move in a pretty big way. But
yeah, I think you're right. And also, I mean, I wonder how much. I don't know how much I think bonds are going to move, if at all. I mean, they've had, like the bond talking about bond prices here, just how much they've fallen over, the last week or so. I wonder if they reclaim some of that, or if they just kind of stay where they are. Maybe they've already perfectly priced. Gold and silver as well. Gold looks like it's on a launch pad to me. It's been consolidating, much like the markets have been over the last couple of trading sessions here. Of course, we've already seen the big move by silver. So I think you definitely, watch those to see if there's any interesting moves. And don't forget about Bitcoin as well. I don't know. I just, the dollar's already making its move down here as we're cutting. And I wonder if this causes this to fly back up. I don't know. That's the cool thing about the holding pattern. Like, there's all these different questions.
Yeah.
And we'll soon get answered in the next couple of hours.
Ominous times. But yeah, I think based on what we're seeing in the markets, a lot of nothing is projected. 40 points to the upside or downside is still, a decent move, but it's nothing crazy. I think if we see something that's 80 points, 100 points or more, that's when you know that realized volatility is outpacing implied volatility, and you'll see implied volatility itself, both in the VIX 1-day and the VIX, adjust accordingly. But yeah, if you're trading earnings, again, I think it might be smart to just wait till later today, see where the markets move. If nothing changes, the implied volatility of those earnings announcements isn't going to change much. You'll be fine. But you'd hate to see something be put on and then the markets go crazy in a different direction, unless you're comfortable taking that risk.
One last trade idea before we go. I know somebody has it, so I wanted to get to it. Selling, hey dudes, which is funny. Sell SLB calendar, the Jan 953 call. You're long the Jan 953 call and short the June call. That makes me nervous, to be honest with you. It's not upside, so there is that for it. But I personally don't like selling calendars because, again, just the way the vol works. Vol is, even with those, vol just kind of goes up higher for the back month. But, I'm not going to fully talk you out of the idea. I just don't know if it would be for me.
Yeah. It's kind of a way to sell premium in the back and define your delta risk in the front. The only situation I've done this for is for earnings trades with like Tesla, where I would sell the monthly and then buy the 1-day, but the 1-day would be like an iron condor setup where you're trying to bank on a vol crush, but you want to define your delta risk by just paying a couple pennies. Mm-hmm. But this is a different story because your long option is 37 days out. So, this can work.
It definitely can. Yeah, I think you're just relying on a lot of assumptions here that you just really don't know yet.
Yeah, and the buying power is pretty high. You're putting up $1,500 because even though your delta risk is defined with this long option, once it goes away, now you have undefined risk. So you're putting up the undefined risk buying power reduction for a trade that's likely not going to move too much in the near term. So I think we would go a different route and do something maybe more defined risk, do a traditional calendar where you're long the longer term one and short the short term one. And that would be much less buying power, similar profit potential. But yes, long dated vol is crazy high. I understand totally what you're doing there. Just got to be careful with your undefined risk potential once that long option falls off. And that's that. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. And, of course, Glenn is at Glenn Freiberger with an A. And you can follow TastyFX as well. I've got a link to the website pinned to the top of the YouTube chat. We got plenty more content coming your way, though, on the YouTube channel as well as tastylive.com, so stay tuned. We'll see you from the CBOE floor tomorrow with some more SPX trades and some other trades as well.
Oh, yeah.
We'll see you then. Have a great rest of your trading day. We'll see how the markets react to the Fed announcement in about an hour here. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. It is Fed Decision Day, which is always a fun one. That's obviously going to be the primary topic of conversation for today. But before we get into any of that, I'm joined as always by my wonderful co-host, Errol. Errol, how are we feeling? What's going on?
Feeling good, feeling great. Excited about the FOMC later today at 1 o'clock Central Time, 2 o'clock Eastern. Probably get a little bit more volatility there. Things have been a little bit slow heading up to it, but I'm excited. I mean, I think we're expecting a rate cut, so we'll see if we get things that are in line, but I'm excited for it.
Yeah, we definitely are firmly pricing in a rate cut. And that's really what I kind of think is the interesting topic for today. And this occurred to me, and I wrote a whole article about it this morning because I had this epiphany this morning that suddenly has begun to consume my mind a little bit, that I think it's very, very nice to be able to have these prediction markets, the poly markets and call sheets of the world, to let the efficient market, give a crowdsourced quantification of what we think the chances are. And in the days before these prediction markets, I guess predicted has kind of been around forever, and there was always some things like this offshore, but it was never the way that it is now, and therefore we're not as efficient. Mm-hmm. But yeah, in this day of these prediction markets, I don't even do anything to try to determine what I think the Fed is going to do anymore. I'll watch the meetings and listen to the commentary afterward, but I don't read any analyst stuff. I don't, I pretty much purely pull up Polymarket and see what the odds are, and those are the odds because markets are efficient. And I think that there's lots of other people who are in the same camp as me. And then it occurred to me, what happens in a world where these odds aren't right? Because all options traders know all too well that tail risk is very real, and it will come get you sometime.
Right.
And as it pertains to the efficiency of markets, the equivalency that I like to draw here is that from 1884 until 1940 in the United States, we were allowed to bet on presidential elections. People could book action on presidential elections, and then it was outlawed after the 1940 election. So there's 19 presidential elections in that time frame. And in 18 out of those 19, the betting market, the favorite at close in the betting market, won the election. The one exception is Woodrow Wilson, and that's in the 1912 presidential election. And the only reason that the betting markets happen to get that one wrong is because Woodrow Wilson in the 1912 election is the, how do I want to put this? It is the largest It's the most someone has ever lost the popular vote by and still won the Electoral College. The other candidate got 59% of the votes in the popular vote. It's never been that skewed before, and he still managed to win the Electoral College. So really, the efficient market was still correct there in saying this guy's going to get way more votes. The votes just didn't happen to plinko down the right way. However, the contrary to that is, in that sample size of 19 efficient market major events, there was one bit of tail risk. The tail risk came through one time.
Yeah.
You can have all the information, and sometimes the tail risk still comes through. And so the question I present is, what happens when one of these is wrong for one reason or another?
Right.
And I don't know. It's a scary thought.
Well, I mean, that tail risk will come through, and I think the way we kind of see some of those like anomaly events or black swan events kind of play out, there's so much uncertainty that surrounds them. So I feel like it's a little bit of a, when will it happen? I don't know, but how will it look like? It's impressive every time it happens, and then it happens like slightly differently whenever that tail risk, does come into the picture.
Yeah, and it's interesting too, because I also wonder if there is a confirmation bias or self-fulfilling prophecy sort of situation going on where.
Well, yeah. What do you mean by that?
You have people. Okay, so say I'm a trader in the stock market. I don't want to touch prediction markets.
Okay.
I go look at the prediction market and I see that there is a, let's say, 90% chance that the Fed is going to cut rates. So then I go over to the stock market and I place a bunch of trades that are contingent on the Fed cutting rates.
Right.
So then those markets move up.
Yes.
So then take somebody else who is a pure prediction market person and doesn't care about the stock market at all. They come swooping into that. They look at the stock market and they say, oh, the efficiency of the stock market really looks like the Fed are going to cut rates. So then they buy the 90% chance. It moves up to 91. And now the next me comes along, and the markets are already higher and says, oh, it's a 91% chance. I'm going to do this. And then this cycle could just turn over.
I mean, it does sound like we're aiding into a self-fulfilling prophecy.
Yeah, so I wonder if there's elements of that. And obviously both markets are efficient in their own right. That sort of effect could only have, maybe like 1% or 2% impact on the broader market. I don't think that you're ever going to see a situation where it's, this thing becomes so self-fulfilling that suddenly SPY is at 750 and we're like, what the heck is going on? But I do think that there's some of that confirmation bias, overlapping of data, self-fulfilling prophecy, whatever vernacular you want to use there. And I also, I really, really wonder what's going to happen the one of these times when we are 97% sure something is going to happen and then it doesn't.
3%
Yes, and especially something as consequential as a Fed rate decision, which, obviously has a tangible impact on the broader market.
Yeah, no, 100%. It kind of feels like those tail risk events is kind of like this large pullback that we've kind of been waiting for in the market. Should we even be waiting for, there's a conversation to be had around that too, but see how it plays out.
Yeah, it's fascinating to me, and it's shifted the whole dynamic of how these Fed meetings work, because in the week before, and especially in the day or two and the day of the meeting, all of the information becomes priced in because of how efficient these markets are and because of how, concrete we can feel that our information is. And so then the actual move that comes as a result of the Fed meeting is purely based on the future, which is really just a more efficient market when I outline it that way.
Yeah.
But I don't know what happens in the tail case. I don't know how much we collapse, how much the broader market is reliant on these prediction markets to give them this information. I'm certainly very reliant on them.
One move that would surprise me later today?
What?
That I don't think we've really considered is kind of like an inside kind of move. Maybe we get a little bit of that risk coming in later today. But one thing I don't think we've entertained too much is like, what if we kind of get an inside move on the day? What if we kind of stay within or near the range we've been trading in today? We've been talking about all this expansive moves to the upside or downside, but maybe we get an inside.
Immediate, yes, exactly, yes. It's really what he says and how he responds to questions now that it has more bearing on it. What's up to everybody in chat also? Bernardin, big deal, E-Media, Grumpy Mike, happy to see all of you.
What's going on, guys? How are we doing today?
Baloney shorts. I thought it was slacks. I thought I had baloney in my slacks. But I hope that's incorrect. Oh, I see. That was in response to some Elon stuff earlier. So I don't know. It's a fascinating thing, this era of prediction markets that we live in, and I think that it could potentially be a dangerous thing whenever we finally get the tail risk when the 2% is finally right. Although this isn't options trading. This is literally a efficient market. It's not like when you talk about the stock market being efficient, but if you want to determine what information the stock market is trying to give you, you have to attack it with some nuance and figure out what people are trying to price in. These prediction markets just straight up say, here's the chance that this will happen.
Agreed. Prediction markets and just the behavior we've seen around it and the growth of those just tells me that speculation is in our nature.
Yeah.
But that's what it's highlighting.
And inside information leaks into these prediction markets too.
Absolutely.
And that's the fascinating thing is, to my knowledge, and somebody in chat, please correct me if I'm wrong, but to my knowledge, I don't think Kalshi or Polymarket have any problem with insiders being on their platform. Those insiders own, employers or whoever might have an issue with it. But I think that Polymarket actually wants them. I think that helps with the efficiency of the markets.
Yeah. Absolutely.
Yeah, so I don't know. It's interesting. And the other example I always throw around is after the Challenger explosion, while the investigation was ongoing, Morton Thiokol tanked. The other two companies associated with Challenger didn't really move down that much, 5-8%. Morton Thiokol's down 40%. And then sure enough, the news comes out and it was Morton Thiokol's fault. And the market had that private information already priced in the entire time.
Yeah.
It just happened with Polymarket in the I could keep going, I guess, but it just happened with Polymarket in the MLB NL Rookie of the Year. The broader public, the betting market, the sports books all had Cade Horton as winning that award, and then suddenly 2 hours before the award is announced, suddenly the guy who actually wins it shoots up to an 85% chance on these prediction markets out of nowhere. Before the information is announced, and it's because some whale learned that information ahead of time and went in there and did that.
And it just self-fulfilling prophecy bleeds into the market, and then we see the data of it. Anyways. Getting into it, you want to check out some of the market for today? Some of toward the market, see where VIX is kind of at, headed up to FOMC. I'm excited for this afternoon. I'm not even excited to really do anything. I did place a couple more positions before that, just a little bit more short delta on QQQ. Of course, shoot me. I know. A little bit more short delta on QQQ, but I don't know. We'll see how this pans out as we get into the close. But we are about 50 minutes away, so looking forward to that, and we can. You want to jump straight into Tasty Trade here?
Yeah, let's take a look.
Yeah. Just a couple positions here. Nothing too exciting. A little bit of the micros today, which we can get into that here in a little bit, but sold some more out of the money call spreads on QQQ. This one for today that we sold, though, it expires in 9 days. If the market rips to the upside, honestly, today, I'm just going to take that one off. It's going to be maybe, $10, $15 loss on that one. I'd prefer to take that off just because I do have on 2 call spreads to the downside, so might as well just take off half the position, and I don't want to be, double leveraged to the upside when we have some short delta on, but that's all that's been exciting on my end. I have been paying a little bit more attention to the volatility index over here, and then keeping an eye on what you got going on in VIX there too, because if we get this downside move, Gus, I think the VIX is back into the picture for what we might want to get active with.
Yeah, VIX, I've actually been eyeing VIX a little bit today, deciding if I want to get short, just because I think that after this meeting, VIX will get crushed kind of no matter what. Well, I shouldn't say no matter what happens if they no change or increase, but I think provided that the cut actually comes through, that VIX will just collapse after this. But I don't know. I just don't know if it's high enough right now for me to justify something, because, it could collapse and just be 1650. And then I don't know. That would be really hard to extract much value out of that move without putting on an obscene amount of risk that I don't want to put on. So probably gonna lay off. But I am expecting some contraction in the VIX.
No, I hear you. I'm kind of in the same boat right there. I see Josh, you were saying just Google the Jay Powell meme about puts and calls and you'll know how to play with fire today. Yeah, no, days like this can really feel like you're playing with fire a little bit. I know I kind of felt that way with some of the trades that we placed today, but just getting closer to that announcement, I was like, we're gonna pause a little bit more here, just because that uncertainty also just bleeds into your thought process, and it just translates into your confidence, conviction, everything. So we can then go ahead and start jumping over to the TradingView platform over here, and then look at some of the metals, maybe some crypto ahead of FOMC. We don't talk too much about crypto and FOMC prior to that.
Yeah, no, that's true. Yeah, I haven't been super active today either. I did trim my Rivian shorts.
Okay, we got some Rivian shorts.
Yeah, that was this was me trying to get a little cute and play Rivian down inside my longs and all this. I just don't think that it's going to come to fruition. I would need it below 16 by Friday, and this confirmed breakout just seems to keep confirming. So I decided to take a little bit of risk off on those shorts. I left 2 on because I knew that if I took all 4 off, then it would just crash tomorrow and I would have to kick myself. I'm leaving 2 on just to have a little bit of short side exposure. Maybe if we get some broader market downward action after this FOMC today for whatever reason, these could come back within reason a little bit. But that's I think that's going to be a loser for me.
I was just looking at Rivian. These EVs were popping in 2020, 2021, 2022. I mean, they were popping. I mean, I think Rivian was trading at around $100 something dollars at the time, and it's been kind of dead over the last year or two.
Yeah, it was way higher than that. I mean, Rivian. Yeah,
it was a fun one to trade.
Yeah, it's been up close to 180 and stuff before Rivian. Yeah.
Yeah.
It's had some moves. Which, again, though, I'm sitting here like complaining that these shorts are going to lose, but all this means is that my leaps are printing. I'm still very much up, and even if I eat a max loss on these shorts, I will still be very much up. So yeah, I am still long bias on Rivian. I just thought I could get cute, and there was no reason to do that.
No, I like it. What's the hot puts and calls on SPY today? Didn't do anything in SPY today. Did some stuff in QQQ today, big deal. But in terms of the indices, we traded a little bit of the micro NASDAQ today. If we can get the right ticker in there. A little bit of the micro NASDAQ in there today. And it's been kind of an anticlimactic kind of day, to be honest. I mean, we snagged a pretty decent short opportunity after an initial stop out. So we'll get into that. Let's go down to a smaller time frame here. Something tells me Jerry Powell laughs diabolically about the meme late at night. I'm sure he laughs at every single meme that he sees. I mean,
I'm sure.
Little did Jerome Powell know that he would become such a trading figure, especially with the younger generation, you know, when it comes down to memes and things like that. I'm sure he didn't think that would come with the job.
Yes. Well, yeah, I mean, because he has kind of been the Fed chair as, you know.
Yeah, he's become a personality, though.
Yeah.
It's crazy.
Well, yeah, because, like, I shouldn't say that meme culture wasn't present when he became Fed chair. That's not true. But like, finance social media was not really a thing at all when he became Fed chair. Like this meme culture within finance and the way that everybody talks.
Short form content.
Yeah,
maybe that boosted it. Really?
Yeah, sure. So yeah, stuff like that. And yeah, and I think just the broader financial space. I mean, really, if you want to talk like finance culture, I think 2020 did wonders. I think a double whammy. I mean, because of the Black Swan event with GME, brought a lot of eyes to the stock market, a lot of get rich quick happening there, and a lot of people thinking that they can, you know, dive in and do the same thing. And then beyond that, also, I think just a lot of people, myself included, were bored with COVID and started trading. and that was how I got into trading in the first place.
Well, I mean, the stars really did align, right? I know we had the stimulus checks coming out around that time. Yes. If you're a young person, you got an extra couple grand, you take 500 of that. Yeah. Whatever it is. So, I mean, the stars really aligned around that time period. Good Lord.
Yes, exactly. And yeah, the stimulus checks, showed up, especially everybody in the 1820 ballpark that's still living with their parents, which was the camp that I fell into. I did $1,200 drops into my lap. I got no overhead. I was like, we're chilling. We're chilling. I'm rich.
My
bank account has a comma in it.
Right. No, facts. No, with that being said, we have about 45 minutes left till Jerome Powell surprisingly got a couple decent opportunities today. I was a little bit surprised by the volatility. Sometimes we get some BS price action, some stuff that doesn't even make any sense. So I was kind of surprised that the market even gave us any type of clean moves prior to the announcement. But anyways, today, we tried to look to take a short near our value area high. Are our value areas correct on here? Let's double check. Short, that was looking to get long there. Let's see.
They seem to coincide with your trades here.
I believe so. I had to adjust. I was doing some.
And by the way, I meant to say this earlier. Big Deal was talking like what like on the SPY options chain is getting lit up right now.
What on the SPY options chain? Gotcha.
And then he said, 25,640 NQ is a hot put.
I gotcha.
Which I guess that's just at the money at this point.
Yeah. We'll circle back around to there. I know I've been neglecting SPY a little bit. I know we've been talking so much QQQ, NASDAQ. It's a little bit more volatile. It's a little bit more of a fun product. You know, we got to give a little bit of love to SPY and ES here, there too. So.
I usually lean SPY.
I know, that's me.
Yeah, if I want like broader market stuff.
Yeah.
But I think it's really all the same.
Cool.
It's just in terms of like specific levels.
Yeah.
It can get confusing.
Definitely. With that being said, we took a few trades today, guys. We stopped out here for 10 points. Stopped out over here for about break even. It says +1, but what I'm going to start doing for the break even trades, I mean, or we can keep it exact if we want to, but for break even trades, what I want to start doing is just put a 0, because that indicates break even, and I think that also outside of what the result was, I think that speaks to the trade psychologically. Like, okay, that's a break even trade, and I think there's some psychology at play there too, because originally with certain trades like this, I mean, we can even just dive straight into it. We're going to skip right to the second trade over here. So we get short initially right here in the morning. And what I was looking to target this morning low. So that's why this trade came back against me, and I stopped out at break even. If we had more contracts on, maybe we would have scaled out some here. At this first swing low, and then maybe the morning low. And then if we have enough contracts on, maybe trying to swing for the fences all the way to the next level of value is kind of nice. But we didn't get that. I got stopped out. But the psychology at play there was this trade already worked in your favor. So I didn't think there's certain trades that I feel like is not too smart. Like if you're 50%, if you have 50% of return on capital already in a trade, it's like, do you really want that trade to come back against you and take a loss? It's like you can decide how you'll feel after that. But because the trade went in our favor, those are the trades where I really like to stop at break even, because I think that can affect your psychology a little bit. I'm projecting a little bit. If it affects my psychology, that's why I choose to stop out at break even. But just see what you like to do with your process. And how you want to manage that. But anyways,
I will share as well.
Yeah,
I like to do a disproportionate deal with your price target and loss target. Like if you want to have hard numbers, like you could do like a 2-to-1. Like I will stop out at a 20% loss or a 40% profit sort of situation.
True.
But you just have to be really careful with doing that, because if you were to just like back test that strategy, you would lose a lot more than you would win, because the move is tighter to the downside. 100%. So you're going to have to take some exits inside 40% in that regard as well. But you can do it that way.
That is true.
If you like to.
Great point. Especially with percentages, because percentages, it's a percentage, so it's a little bit more. No, but with that being said, we stopped out of that trade. We needed to break even on that one. The market
and trailing stop losses on the way up. Sorry,
trailing stop losses on the way up. Absolutely. Anyways, we trade back to our value area high, right, and then we look to get short. And we look to get short around 25,649. This one I was thinking about holding towards the morning low, not really holding all the way towards the value area low. The reason being for that and just taking it off right away is because I only got one contract on. This could sweep the morning low. That's a valid trade. And then this thing can come all the way back against me to the morning high, as we see it did later on in the day. But because we only had one contract on, that's why I just took it at like the first swing low, highest profit target. I'm not going to go all the way to the next level of value and squeeze out an extra 5 or 10 points or whatever it is. Now, right after that, at first I was just going to sit on the hands and just wait for the FOMC announcement, but we started to trade right down to this value area low. Took a couple paper cuts, which was a very annoying trades to take, because although we're ending green on the day, maybe plus 30-something points, I think there are certain trades where you can kind of negotiate with yourself and save you an extra 20 points here, an extra 15 points there. And I think it matters, after you take 20 trades in a week or 30 trades in a week, whatever it is. But those are the only opportunities we got today. Just getting stopped out at the value area high, repositioned for the short back to the downside, and then just sitting on the hands from there. Still paying attention to this range of value right now. So, we can see the market's rejecting this value area high. But again, yeah, we could take that trade. Yeah, we could be in it right now. Yeah, we could be making money. But there's just so much uncertainty with FOMC 40 minutes away. So if you can't take the trade with confidence, it's a tough one to pull.
Yeah,
it's a tough one to pull.
Yeah, well put.
That's all I got to say about that one. Other than that, let's take a quick look at Bitcoin.
Yeah,
sure. What crypto's been up to.
Yeah, we can pop over. My MicroStrategy position is outperforming my
how is
Bitcoin
MSTR?
position. So shout out. I don't remember who put me on that yesterday. I don't think it was eMedia. I don't remember. I'm sorry, whoever gave me the MicroStrategy trade yesterday, that your name is escaping me. Speak now, and I will happily shout you out.
No, Bitcoin. Bitcoin is a really slow mover. I know we talked about before. This one is not as volatile as something like a NASDAQ. Kind of been trading around this range from 93,500-ish and 84,000-ish range on Bitcoin. We've been trading there for the last, week and a half. So kind of just still in the queue there on Bitcoin. I don't even have any level of conviction really here.
That's QUEUE.
QUE. Q. There we go. Well put.
Not me, says eMedia. All right. eMedia, I apologize for falsely accusing you of giving me a good trade. I don't know who it was. And the funniest part is I can see the profile picture in my brain right now. Like it's white with some orange in it. Anyway, who's on the soundboard? That is our wonderful production team outside. I actually don't know who by name is on the soundboard. Whoever it is, if you'd like to pop in right now and tell us who it is, that would be fine. And then this question from Soul Train. Thought I heard somebody was going to pop in. This question from Soul Train is an interesting one. Could AV beat Palantir in the midterm, long up 2 years? Now, the question being could, I think the answer is absolutely yes. And I would broaden out to say I actually think a lot of things could beat Palantir in the next 2 years. I think the steam might be running out on the triple-digit gain years for Palantir. But yeah, I mean, could it? Like, if it, like, reframing the question, are you asking me, are you sure that Palantir will outperform AV in the next 2 years? Absolutely not. Absolutely not. I think that's a great line of logic. And AV definitely has the same parabolic upside potential to it if you're willing to sustain some drawdowns like the one that it's in right now. Well put. Good pun. No pun intended, but thank you. I'm just catching that. 67.50 for a bounce.
25. What is that for the bounce?
Who's calling me?
67.50 for the bounce. We can look at ES right here. Big deal.
It's spam.
5,055. Yeah, it's Powell, brother.
It's J Powell.
It's J Powell, brother.
It's a
yes.
Chicago area code. I don't know. They'll leave a voicemail.
What is Chicago's area code again?
312.
Is it 312?
Yes.
Gotcha.
There's others as well. There's not only one. Actually, I've been here too long to not know all the area codes off the top of my head. I'll have to look into that.
That's how you know Gus just knows everything, bro. I've been here too long not to know every area code.
Well, like Houston. Like I can tell Houston.
I've been alive too long to
all
not.
4 area codes. Yeah. I don't know what the. I got to figure out what order they came in too. Like that's a thing in Houston is the 713 area code is like the OG very first area code. So people, if you got a 713, it's cool.
I know
713, 281, 832, 346 in that order is Houston for those at home.
On Call of Duty growing up, we were running our area code as our gamer tag, and that was our clan.
Oh yeah.
Like, so we had a whole lobby 719. That was Colorado Springs, and it was like 12 guys. You know, everybody thought they were so hard, like 719 clan.
Thanks. Close enough for me, says Soul Train.
Close enough. Welcome back. Welcome back. Now, just taking a quick look at ES over here, too. No big deal was on, 67.50? So we're feeling a little bullish there, 67.50. Oh, that's to the downside, actually.
Yeah.
So we're feeling a little bearish, and that's how I kind of felt all week on NASDAQ.
Yeah, that coincides with the volume profile that you just drew as well. That's basically the 67.50 level.
Oh, yeah, very close, actually. Very, very close. No, I mean, in terms of the overall market and the overall narrative of the market, it has seemed like the market has wanted to push lower, but it doesn't seem like the market wants to do it. So whenever the market makes a new low or tries to sell it very quickly, from an order flow perspective, it looks like a bunch of people are, jumping into the short side of the market, and a lot are getting trapped right now. Maybe it pans out and, shorts won't be underwater, but whenever we are making new lows, we do, see a lot of short bias traders jumping in.
Yeah.
To the downside. But with that being said, we'll see what we get for the rest of the day. We got J Powell coming up in about 34 minutes. That'll be exciting. We'll manage our positions and see how the market digests the rate cuts.
Yes, we have.
I don't know what's going to happen.
Yeah. Or
potential
whatever
rate cuts,
happens.
or whatever happens.
We'll see how the market digests. Yes, our scheduling team is brilliant for putting Futures Power Hour smack across the J Powell announcement. So yeah, you guys hang out with Chris Vecchio for that next. Do you have any closing remarks for the people?
Nope, that'll be all for me.
I do have one more thing I wanted to hit here. Grumpy Mike, you got plausible deniability, man. Go buy the bottle. That's what I say. All right. Thanks so much, everybody, for watching. We dearly appreciate you guys all taking the time out of your day. We seriously never take it for granted. Ariel and I'll be back here, same time, same place tomorrow, 12 o'clock p.m. Central Standard Time. Be sure to hang out with Chris Vecchio for Futures Power Hour coming on next, right through the J Powell meeting. And we'll see you guys tomorrow.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control. Step into the futures arena with Tasty Trade's Active Trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Pégate, motívate, prepárate, que lo vamos a hacer hoy. Llégale, no lo pienses, ya lo decidí, que contigo me voy. Dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear.
We're back. It's Wednesday, December 10th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's Fed Day.
Ooh,
that's the good news.
Here we go. The good news, he says. Well, we'll just have to see.
The bad news is that the richest owner in baseball apparently can't afford Pete Alonso. I need to go to therapy for my Mets and Jets fandom, Ilya. At least I have the New York. But, you know, it's Wednesday here where the market's quiet going into a Fed meeting, which thanks to the new structure of Futures Power Hour, this is going to be the first time we're on air when the Fed actually releases its decision.
Yes.
So we'll carry that live at 2 Eastern, 1 Central time. We'll then transition at the end of the show when we get the press conference started with Fed Chair Powell. You and I will be back. I'll be back for last call, and then you and I have overtime today. So a lot of Fed discussion here in the second half of today's session. But what will the market get? Yesterday, we said it was twas the night before Fedmas, and we did a little singing here at the top of the program. I'm not going to subject people to that again here today, Ilya, but Josh, we can go right
wise
to the
you are.
Yeah, this voice is not what people want to listen to.
Yeah, I mean, unless folks would like a bad Tom Waits rendition of something Fed related. Let's spare everybody.
What will we get? Coal or cuts? Well, we wanted cuts. The market is probably not going to get everything that it wants here today. I know that we looked at this at the start of yesterday's show with our little rhyme there. but we do need to look at the CME FedWatch tool once again, not just because CME loves to sponsor this little podcast and other things on the network, but because it's the most important thing that you could look at on a day like today. So first things first, a cut is happening, 89% chance. It's not 100, but for what it's worth, the tradable contract on our platform, the SR3Z5, is already fully priced there. So don't think that you'll squeeze a few points out of today's move. The bigger picture, of course, is what's going to happen around the corner. Will we have shiny new rate cut toys to play with after the holidays, Ilya? And the market right now is basically saying no, because at a 66% chance of seeing a cut through the rest of Powell's tenure, this is not a market that is hoped up or hyped up on a significant amount of easing coming. And yet there still may be some discrepancy, because the Fed at their September policy meeting told us that they would give us one cut for 2026 in their summary of economic projections, a new summary of economic projections that we'll see here today. Granted, we don't have much economic data for the Fed to look at because all of it's coming out next week. So, Ilya, volatility intraday has been fairly quiet, even though VVIX has been rising. What's the sweet spot for the market where we're not going to walk away disappointed at 2 Eastern? Powell is another story unto himself, but 2 Eastern rolls around, right? Top of the hour.
Yeah.
Do we need to see 2 cuts in that summary of economic projections for the market to not start to panic?
That seems to be the ante that the market has put on the table here. So last week, and really for months and months going back to mid-year, the market was convinced that we're going to get some version of 2 cuts with a decent probability for a third. And we've seen that decent probability for a third go up, go down, wax, wane. But at no point was the market saying, yeah, we're only getting the 2. That was a foregone conclusion back in June. And we're at about 50 basis points on the nose right now, looking at Fed funds futures for what's baked into next year. And so if the Fed comes out and says, look, we see you, you've lowered the bar, fine, here, and meets the markets exactly where they are. And where we go on the outlook for 2026 is, let's say, a boost from 3.4 on the median rate to 3.1, which the Fed now has going out into 2027. So if that happens, okay, the markets and the Fed are in alignment, and then we'll turn to what Chair Powell has to say. And we'll see what kind of varnish we're going to put on this. Now, there's also the obvious other scenario where the Fed says, you know what, we've been telling you for months that we don't want to rush anything without the benefit of knowing where we're going and what we're doing, because the data is just not there. So here, we'll put 1 cut on the board so that you know where we want to go. And as far as magnitude and timing, we'll get back to you. And I don't think the market is going to like that.
If that's the case, heading into this rate decision itself, Ilya, and I suppose we're going to do kind of a different futures power hour today. We have 23 minutes until the Fed decision itself. We're going to touch on all of these assets classes. There's 5 of them, so about 4 minutes each, a little bit more time on equities, of course. We're then going to look at the Fed rate decision. We'll then go through the different asset class reactions and then queue up what we think we should be looking at for the rest of the day when Powell speaks. Arguably, Ilya, I think that's probably going to be the bigger mover than whatever the Fed says in its rate decision itself, because if Powell comes out and says, listen, we're done cutting during my tenure as Fed chair, you got to squeeze out rate cut expectations for the first quarter and April, which April is currently priced to be that month for the next cut. If Powell comes out and says, listen, if the data are where we think it is right now, or the data are where we think they are right now, then we probably will cut again sometime in the first quarter. But we just don't have the data at our fingertips, so we can't make that kind of projection right now with any degree of certitude. It's a totally different world from 2:30 Eastern onward. So I'm much less concerned with what the actual rate decision itself is. I think that given the dots and the shifting composition of the FOMC voters, right, All of a sudden, what will those dots look like come March? There could be a dramatic shift.
They could be very different.
Come June, there could be an even bigger shift. So getting too worked up over the short-term path, to me, I don't think makes a lot of sense. But right now, it's a market where at least technically the table is set for the S&P 500, not looking the prettiest. The past few days, we marked off that 4-hour doji-ish candle on Friday, December 5th, the low at 6856.75 is more or less a line in the sand. And ever since we broke through it on Monday, it's been an area that we've struggled to get through even over the past 24 hours overnight in Asian trading. Here this morning, we can't really get back above 68.60. So the market is a little bit tenuous going into this right now. I think you can make on a short-term basis, you lose 68.30. You probably have another % or so drop, a little bit of a flush in the short term. It's not the greatest looking setup right now going into the Fed, but maybe I've been talking a lot here, so I'll give it to you in a second. But in like a Sosnofian sense, would you rather as a bull have the markets going into the Fed strong or weak? And weaker would probably be the preferred outcome there because it means people aren't over their skis just yet.
Yeah, I mean, I think you can go back into a daily chart and whether it be the S&P or NASDAQ, you can see very clearly this sort of interesting spot where we find ourselves. Look at the gray line that you have at the top of the range there. And that, of course, is the spot where the markets make their decision about what to do with Powell's admonition at the last Fed meeting. That top in the market, that hammer looking candle there on October the 29th, the markets think about what to do with that over the course of the subsequent 24 hours, and they establish this line in the sand. We've since retested it once and failed. We're retesting it again. So it is as though we've reset the table to go, okay, the last time versus this time, the stock market has done nothing. It is basically where we were when the market digested the last Fed decision. Notably, it has not returned to the high. The Russell has, but it's stuck there. And that's perhaps because the Russell has a little bit more to benefit from rate cuts in a visceral way because those banks that sit in KRE need some rates relief on their portfolios. But from a sentiment perspective, S&P, NASDAQ, where much more depends on how the markets feel and what risk appetite looks like and whether everybody wants to continue to spin the AI hopium wheel, we don't have a return to the highs. We have a return to the spot where the markets made their decision about the Fed's intent and how much the markets like it last time. So call it a kind of circuitous back and forth, but we're back to where the Fed made a call on this before. And the markets don't have conviction to go any further unless and until.
In the short term right now, we've seen volatility over the course of the day. It did pop up. It started to come back in. It's now green again, 17.17 handle there. I know that VVIX was starting to go a little bit awry earlier. I would point out, if you look along the curve, we can go out to the VXM26 contract. There's a little bit of, as I've seen some people flag, there's a little bit of unique trading options volume or flow out. And when you look at various volatility products, maybe just a rebalancing of books. I've seen some people say that VVIX is up today. I don't know if that's something we're hanging our hat on going into the Fed. Either way, though, Ilya, going into a Fed meeting with a 17 VIX is a hell of a lot different than going into it with a 15 handle, like where we were heading towards the end of last week. So there is that bona fide. But just dissecting how the market's behaving today, looking at the sector performance, looking at the breadth all day long had been good until maybe in the past hour or so. You do see that the equal weighted NASDAQ is outperforming the main index, the market cap weighted. Same thing for RSP here. RSP is up nearly 0.5%, whereas the headline index is down by 0.03. And we are coming on the tail of the best performance for the average tech stock in the S&P compared to the Mag 7 names. The best 10-day performance that we've seen going back to some of the lows that we had in 2008, I believe. So there's some stuff to like, there's some stuff not to like as the table set. In terms of the sectors that we track here on Futures Power Hour, we look at 25, 19 of the 25 are in the green. So it's not a terrible day by any stretch. It's not like some of the big green names, the leaderboards or the commodity sector ETFs like your GDX or SLV or GLD, right? It's XTL, it's home construction, it's the banks, it's a lot of the rate sensitive stuff, which I can't.
Stuff that likes the rate hike at face, or the rate cut rather, at face value.
Right. And so that is, you can see this bifurcation. The indexes and risk appetite generally is not getting hopped up on the hopes of a rate cut. But when you look beneath the surface, traders are saying almost like, yeah, well, if it does come, they do signal it. I do want exposure to the most interest rate sensitive things. Those are probably going to have the highest convexity on a day like today. And you have your regional banks testing a potential breakout level. We've been watching this. This is a hell of a place for it to find resistance and get disappointed today, by the way.
Yeah. If ever you were going to be disappointed and you wanted to see technical, sort of a textbook technical reversal, what a place.
Yeah, if you're of the mindset that why are regional banks up more than 10% from the lows at the end of November? This is too far, too fast. Couldn't think of a better technical place to try to turn and call a top right now.
Yeah.
That's not my trading style, Ilya.
No.
But
not mine.
When we look through the various components of what has taken this market to the highs, semiconductors today quietly would be putting in an all-time high close. So there are little seeds here that show that the rally still has some meat on the bones and traders aren't backing off. But with that participation level being so low on a day like today, 729,000 contracts traded, nowhere close to what we want to see. It's clearly that everyone's waiting for the Fed, and whatever price action we've had thus far, Wednesday to date, immaterial.
Yeah, I mean, probably the most interesting chart on the board here might be what's going on with ZB. At the long end of the curve, you're going to have
good time as ever to go into bonds because we have 15 minutes until the Fed meeting.
That's right. That's right. This is a really interesting setup here. And what you have, I mean, you can see it on the screen here. There was a break of kind of internal range support. If you look at the range in the long end that has really prevailed since the beginning of September, it's sitting somewhere around 115. And you have a kind of local internal range bottom, maybe just over 160. You broke through that, and now we're seemingly inclined to try to retest it. This is another one of those things where if ever there was a spot for there to be a short here, this is a real auspicious one. And that doesn't mean that this is going to necessarily happen, of course. But when this break occurred a couple days ago, I got out of my TLT calls. I've also, by the way, I've taken profit on silver overnight, taken profit on gold overnight, and just generally backed up here. I'm still a little bit long dollars, still a little bit short risk with a piece in S&P and a piece in Bitcoin. Bitcoin piece obviously very small after I took most of those profits a week and a half ago. So I'm going into this with a little bit of a trimmed book, as it were, because this could go a variety of different ways.
Sure.
But the bonds here are at a very, very interesting spot. We know what's going to happen at the front end because the Fed's going to cut. The larger issue is what happens here. And this is going to be a really big tell whether the markets are going to find this and say, the long end cares about risk aversion, buy the bonds, versus the long end is going to bake in a Fed that's not in any kind of hurry.
This is not the trend line that we've had drawn, because I always think the most recent test is the one to work off of, right?
Yes.
And so it looked like a few days ago, you get your neckline in a head and shoulders pattern. You get a move below 116, the uptrend from the lows, May, July, September. It's broken. Good time to be short.
Yeah.
Let's just entertain a world where we have to draw ourselves off of the July low.
Now, do we see here, folks, why I like horizontal lines? Because these types of shenanigans can't happen with horizontal lines.
Maybe.
You can work yourself. You can work yourself mad trying to figure out the precise slope of these things.
I would point out that some of the swing highs that we had at the end of August through here, you want to talk about horizontal levels?
Yes. This might hold.
This is a false bearish breakdown scenario. Yep. And then that would mean it's time to get back long bonds again, despite flipping over them last week. That would be a Morningstar.
And if you look at the active contract rather than the continuous, it's even more compelling.
That's a nice little bottoming effort there. So a Fed that comes out and says, no, sorry, we can't cut because we don't know anything. Then, again, last September, the Fed tells us that they can cut by 50 and yields shoot up, reflation.
Mm-hmm. Mm-hmm. Because the markets say, whoa, you've gone too far.
And if the market thinks, the market thinks the Fed like, oh, you're just going to give us this one and done. Oh, like growth needs it. So we got to price in lower growth and inflation moving forward if we're not going to get the cuts that we want. You have a spot for the long end to rally, perhaps a touch. I would look over into notes, which has very low IVR. The way that I'm operating is that I just need this thing to move. I don't really care if it goes up or down. And maybe that's the prudent thing to do with ZB. But right now at a 3 IVR, the reverse iron fly trade that was put on yesterday at 72 DTE seems compelling. I am also thinking that while I'm at 44 for this bearish position, something at like 2, something at like long 116, 115, is it worth maybe taking a little roll of the dice here with the 2 DTE in case the other position is wrong? Like, am I willing to risk paying $47 in insurance so that the longer dated position doesn't get smacked around? Yeah, of course. What if this thing bounces today violently because the Fed says no cuts are coming?
Could be.
Little roll of the dice, risking 1 to make 9, 10. Okay, insurance on the bigger ZB position. ZN I'm not going to touch, but I think that's an appropriate counterweight. Ilya, we have 9 minutes left, so let's go over to metals, which have been staying bid, or they were. Not sure what happened in silver prices there in the last few minutes. Because
they took a little...
they came in.
They took a little haircut.
Taking a little bit of a haircut here. I'm still up by 0.06% today. Gold prices, they continue to coil like a spring in that triangle, off by 0.31%. The sideways meandering has not stopped. We can go kick this out to the next few days, but the past several sessions, maybe week plus, Ilya, you've had this winnowing, this narrowing. Maybe it's a new triangle. Either way, though, what's the path forward here for gold and silver? Do they need these cuts? Because it seems like once we got the December cut price back in, both were able to stage a rally from the end of November onwards.
It seems like it's not something that hurts, but I don't think it's required. The longer term narrative in gold and some extent in silver appears to be more a sentiment driven narrative and appears to be a kind of speculative narrative onto itself. We're used to having a single speculative narrative, probably going back to 2008 or so, where the markets go risk on and then this group of assets goes up and that group of assets goes down, or risk off and the opposite occurs. But that's actually not normal. What's much more normal is that the markets are normal in terms of history. Markets are more bifurcated, less correlated, and you get a variety of speculative narratives at the same time. And gold and silver seem to have had a speculative narrative onto themselves, separate from stocks, and uncorrelated for the most part, and also separate from the usual catalysts for precious metals, dollar, yields, really since the beginning of the year. So it seems like what you have here probably doesn't require the Fed to be aggressively dovish in order for the uptrend to continue, but also because these things are creatures of sentiment, if there is a broader risk-off disappointment with the Fed, they're probably vulnerable, at least in an episodic way. So
yeah, short term.
Yeah. So I could see that. I could see that giving a discount and offering up a better spot to get long.
I'm just thinking back 2-3 years ago, silver would move a quarter and you'd be like, oh my gosh, a full percent. Now it moves a quarter and you're like, okay, yeah, whatever. It's like 0.4%, not a big deal. The contract size is still the same, of course, but I would note here that if this is indeed the way that this market's evolving, we've done these kind of extensions before on silver. It served us well in this calendar year. Maybe it does for next. I see a target of $67 and change. So I would welcome, if there is a vol crush today, if there's a big pullback in silver, I start looking out to like 106 days. I start sizing up. What does some exposure look like? I know these are big contracts, but what is a move? Can I give myself 3+ months for silver to go up to $67 from 61? Hell, it's done $6 in the last, 2 weeks?
It's been glorious. I mean, you and I got on this boat together. I followed your lead. I finally took it off today, but it's been great. It's been a trade that's worked very well.
Energy stabilizing here. Headline across the Bloomberg terminal: U.S. seizes oil tanker off coast of Venezuela. So, is that related to narco?
Better than bombing boats or worse?
I don't know. It just goes to show that this new security arrangement that we have in the Caribbean isn't dissipating anytime soon. I know there's a case to be made that this is part of a new Monroe Doctrine type of effort. I
mean, I've been making that case.
Not the way that I would go about it, but it is the headline that you kind of want to see for someone who has been raising concerns that oil probably has some geopolitical risk that's not being accounted for thanks to what's happening in South America. Nevertheless, rallies here haven't been sticking. 61, 62 has been a ceiling for weeks. 56,
what a
57
terribly annoying grind lower. I mean, I've been holding it short, and it's been going down, but the fits and starts have been absolutely infuriating. Just get there already.
Right. And if you have a headline like this today, and that's the direction we're moving in, and it's not doing much to move the market higher, it goes to show that you really do need that escalation for the upside catalyst, which, underscoring a previous point we've made here and elsewhere, this is not like a Strait of Hormuz situation. You don't have 20 million barrels plus of oil per day moving around the Venezuelan Gulf. You have
a pivotal producer.
Million. Yeah. So like taking 1 million barrels offline a day is not great for any sort of supply situation, but it's not the kind of thing that leads to that $5, $6, $10 rally, like you saw with Israel and Iran.
Right.
Yeah. So right now, 17.5 IVR, directionally neutral stuff has served us well here. Same thing for natural gas. Where did we just get back to today prior to the Fed highs that we have in October, swing low that we have at the end of November? We bounce off of 450 today. Maybe things calm down a bit, but it's a 65.2 IVR. Ilya, we've been operating here directionally neutral as we are less than 3 minutes out from the Fed. I still see reasonable trading opportunities in natural gas, particularly because on the longer duration time scale, you're talking about something that's even further removed from the Fed. Right now, at the position that I'm in, which is still 48 DTE, effectively the short strikes are 90 cents wide of where we currently reside, and then the wings are 2 cents or 20 cents wider than that. It's still a 62% probability of profit. It's still looking for a max profit, better than 2-to-1 on the risk to reward. And the kicker here, which is I always love these kind of trades, whenever the max profit exceeds the buying power required to put on the position, it just check. So natural gas has had a crazy run the last few days, but directionally neutral has been working. You just have had to have some Tums or a various generic antacid by your desk while you're trading it.
I mean, you could always go the San Francisco route and invest in a case of Fernet. It's very helpful in these kinds of situations.
Talk to me about the US dollar here. No rate cuts coming, perhaps, but the dollar is down today. So square the circle. We have less than a minute, and then we need to kick into what's going on in equities and get everything ready for the Fed.
We've gone nowhere in the dollar for basically a week plus. We had a big sell-off around the Thanksgiving week recovery in sentiment, just to put the point here that the dollar is a creature of sentiment here. It's an anti-risk foil, seemingly. And since then, we've done nothing. We're sitting at the preceding low. I would say the uptrend broadly remains intact. It might need to get resloped here, but it is essentially in a consolidative state, and you're not really seeing much of anything. I mean, the yen is a little bit different than the rest because there's domestic considerations there, but the big ones, euro, pound, not a whole lot going on there. Aussie's very interesting. It's been outperforming. We'll see if that continues. They're actually slated for a rate hike next year.
They are slated for a rate hike next year, which is interesting. And they obviously have a ton of exposure to your base metals, to your energy products. Just going to slap up the 5-minute chart here because those FOMC projections are due out in about 10 seconds time. Again, we're looking at 1 cut for today, 2 cuts priced in for next year. They only projected 1 cut for next year in the September readout. So we should have that any moment. Ooh, even with a little bit of a
here we go.
And, now we get to play the fun game of when does it load on the Fed's website, which is always nice. 6847 here on the S&P 500 as we wait for the FOMC statement to come out. And there it is.
Boom. Okay.
Fed funds futures pricing was correct. We got our cut. 1/4 of a percentage point to 3.5 to 3 3/4.
Let's see. Dollar is not liking this. Gold is, which seems to suggest that there's a little bit of a dovishness here. Looking at nothing else other than the price action.
And there's the link for the projections, which we can pull up on stage screen here. Thank you, Fed. That link finally updated.
And we stay at 3.4.
So the Fed is telling us that we're going to get 1 cut. What is changing, though, that's telling us that we only need 1 more cut? They are a little bit more optimistic here on GDP.
Second revision in a row, by the way. We get upgrades to GDP.
No hurricanes in September.
Downgrades to inflation, too.
Ever since they changed it to Gulf of America, Ilya, there were no hurricanes. Change in real GDP.
Let the record show.
Okay, change in the unemployment rate projected to go a little bit lower. Inflation a little bit more manageable. Ilya, this is guiding us towards 1 cut for next year on much better grounds than it was described to us in September.
Although this was the direction of revision in September.
No, I just think this is nice. So you're telling it. So the Fed is telling the market, listen, we're going to still guide for 1 cut. It's not because we think that the economy is a mess and there's uncertainty. It's because actually things are going better than expected.
Yeah.
Has the stock market hated when we have expanding corporate earnings and strong growth?
I mean, it depends. It depends. October is a case in point. So is September. The markets want their cuts.
The markets do want their cuts. We see a little bounce here in stocks. We're going to stick to this 5-minute chart here. The Russell 2531 beforehand, 2537 now. Bitcoin futures, they were up and they've since come off a little bit because, again, maybe you do need that liquidity for Bitcoin and Ethereum, and those are off their highs. You mentioned gold before bouncing. It's a little bit out of the doldrums. It's off the lows by about $18, but not exactly filtering through. And we see silver here bouncing a bit, but not exactly screaming to the highs. I'm more interested in what's happening with bonds, which initially did trade higher here when we only see 1 cut come down the pipeline. But then again, the Fed says that there's going to be a little bit better growth, a little bit better growth. So bonds.
And ultimately, the magic number didn't move. The 2026 dot did not move. And when you look at the dot plot here, it is much more tight. But now the dot for 2026, which we can lovingly and respectfully, of course, call the Mirren dot. And the Mirren dot now is dripping and dribbling into 2026, whereas for this year, it's probably a little bit hemmed in versus where it was last time. But even with that dripping, dribbling dot there, we still only get one cut. Perhaps efforts to stack the Fed are ultimately falling afoul of voting reality. Even if we get a new Fed chair in May that very much wants to cut, as the president apparently just said in an interview. He was asked just over the past 24 hours whether it's a litmus test for the incoming Fed chair after Powell that rates are cut immediately. The president said yes, directly. But also that Fed chair can get outvoted. So there is not a foregone conclusion here that a chair Hassett can just will rates lower.
No, and right now the market response, by the way, as we take a look at the SR3 contract, you see an improved set of forecasts, Ilya, from the Federal Reserve, talking about what may happen, what may not happen. The SR3 contracts are pricing in a little bit more of a chance of a cut moving forward through the first quarter, not substantially, but a little bit more. The odds of a January cut, however, have dropped. There was a 30% chance of a January cut that's now sitting at 22%. I suppose the conspiracy that maybe the Trump administration hasn't been releasing data is because it's actually good, not bad. If it's bad, you're going to give the Fed a reason to cut. You want cuts, don't you? But if the data are good, then the Fed can't deliver those cuts. Atlanta Fed GDP now still sitting at 3.5%. And I think just when we think about the big macro numbers there, Ilya, if an economy is growing, let's call it 2 to 3.5, we'll give it a wide berth, okay, between the New York Fed nowcast and the Atlanta Fed. If inflation is sitting near 3% and the unemployment rate is still below 4.5%, that's not exactly an environment that's screaming rate cuts, regardless of whatever the fiscal noises or the politics are coming out of DC right now. Just on paper, if you were given an exam, you wouldn't say like the appropriate policy response is to cut rates there.
No.
I don't know. Is this a Goldilocks projection? Is this like the best kind of projection we could have gotten?
I mean, it certainly follows where the Fed has been leading. September had a very similar update, and the Fed came out and said probably what we're going to hear in a slightly different version today, which is, look, we gave you the maintenance cuts that we thought were warranted. We had two dissents to that end in this policy announcement on the hawkish side. Of course, Stephen Mirren dissented and wanted a 50 basis point cut. I know you're shocked and appalled. I am too. But we had two dissents in favor of no change. Jeff Schmidt and Austin Goolsbee dissented in that direction. Moreover, this could be much more fraught were the Fed not restarting a form of balance sheet expansion. An interesting new addition to the statement here. There's not really that many additions, but there's a new line here that says the committee judges that reserve balances have declined to ample levels and will initiate purchases of short-term Treasury securities as needed to maintain an ample supply of reserves on an ongoing basis. Now, this is not a commitment to restart QE in any kind of size, but it does say if credit markets get squirrely, the Fed will expand the balance sheet in response as needed. Now, the markets might read this to be, oh, goody, easing by another lever, if necessary. On the other hand, it could say the Fed doesn't know where we are, and it understands that the only way that it would perceive a crisis without data is if the markets lost their marbles. And so they are, in a sense, announcing ahead of time, hey, don't lose your marbles. If something is wrong, we have liquidity.
Yeah, the Fed. This reads like a risk management, like a maintenance rate cut.
Yeah.
Just at the margins, right? If you're saying that inflation is going to be slightly lower and growth is going to be higher and unemployment is going to be a bit better than we thought previously, and we're cutting rates, that's maintenance. Yeah. And maintenance cuts have been really good for the stock market. We've discussed a number of times what happens after cuts. We've got to update this. I'm just going to pull this up on the screen here like this. I need to update this for what happened after the September cut, but last time we did a check-in, the 12-month return was 15.7%, which is just in line with the average of 13.3%, historically speaking, going back to 1980. What happens in the next month? Not great things. The month can be choppy, although the seasonality here is actually fantastic. If we think about the market says, oh, the Fed's going to give us cuts and they're open-minded to more, but the economy's not going to fall apart. And Ilya, today is the seasonal peak for the stock market through December 16th. And then December 16th onwards, stocks tend to rally from basically flat on average in the month of December to closing out the month of December to a tune of plus 1.4% rally if you go back to 1950. So listen, maybe Santa comes a little bit early now. Maybe. I just have to be, I'm just forthright. My reaction's a little bit surprised because I did not see the Fed guiding higher on GDP and saying that we were going to have slower inflation. I mean, this is a pretty Goldilocks looking set of projections, given the information that they have available to them.
Which is not much.
No, but it's probably the most optimistic.
Which perhaps is why it's so Goldilocks.
Well, it's the most optimistic that they could have been. I can't imagine.
Yes.
You know, if President Trump said the economy's doing great, the Fed should come out and what would he say? They should be guiding for higher growth and lower inflation and lower unemployment. It's the best economy ever. It's the golden age of America. This is that.
We talked about this yesterday, right? Like if the president were minded to how these things actually work, he would be appreciative of the inconsistency in his statements. It cannot be both the time to cut rates aggressively and the best economy. It's one or the other. And that's not going to stop the president from pushing his line, which is why we have an independent central bank. Because it's not a dig at the president as such. We insulate monetary policy from the political whims of whatever may be expedient near term for this reason. Because we do not want a cheerleader on the political side to try to game this at the expense of monetary sanity. Now, will the president succeed in undermining that independence? We shall see. He's done more to push in that direction than anybody in recent memory. I mean, certainly there's been many a president, and I won't even go into Congress people, cabinet officers, they lambast the Fed all the time. But that's politics. That's normal. We've gone the farthest we've gone probably ever, certainly in the modern version of the Fed, to seeing the executive actually try to wrest power away from it and give it to himself. So we'll see, but this is why we have an independent Fed, because we do not want double talking politics to undermine the stability of our banking system, of our credit markets, as they did routinely, I might add, before there was a Fed.
You know, Ellie, I'm looking at these dots here right now, and I can't help but notice. So there are 19 Fed members.
Yeah.
Okay. 12 voting slots, 5 of the 12 regional Fed presidents vote at any given time. So you're going to see 19 dots here. 3, 7, 11, 15, 17, 18, 19. 7 of these 19 dots don't see any cuts next year.
Yeah. And that's how, even with the Mirren the mirror and hanger there, we end up with only one cut because he's kind of alone on an island here.
Well, it really depends what you're looking for, right? There's a lot of optionality, I think, within the Fed right now itself. And the NASDAQ here perking up, it's only up by 0.11% right now. It's staying in that trading range. We had a pullback to the bottom side of that December 5th doji on the 4-hour time frame. We bounced from there. We're back sitting in the middle of it. This market is telling you that it's not ready to commit until it hears what it wants to hear from Powell, which is effectively an open mind.
Basically gone anywhere.
The market's going to want to hear an open mind to more maintenance cuts.
Yeah.
Moving forward, because this is Ilya, I could argue that the Fed is right, that if we see an economy that produces 2 whatever change growth next year, okay, if we're looking at 2.3% growth with an unemployment rate that's going to end at 4.4% and inflation that's going to come down from 2.9 to 2.4, not a single dang cut's needed.
Yeah.
So the Fed's going to have to make the case that more maintenance cuts are feasible and necessary, and maybe that is what we'll hear in about 15 minutes time from Powell. The market reaction here still, though, ZB gets a little bit of a bounce, runs up towards 116.
There's the range.
Turns lower again.
That's
ZN,
the spot we were looking at.
ZN just needs to get away from 112 for me to make any money in this particular trade. Are other people trading notes and bonds similarly? Do you have any directional biases? Let us know in the chat. Gold and silver have perked back up here a little bit on the other side of the rate decision. You mentioned that they're going to have to start doing some balance sheet expansion again. Ooh, that's Goldbug's favorite term. So we have fiscal.
They're not committing to doing it. They're saying they would do it if they needed to do it.
We've always known that.
Yes.
Yeah. Yeah.
They do say that they believe that reserve balances, and I quote from the statement here, have declined to ample levels. That is, they've declined from being too big to now normal. So I suppose this is a place where the Fed feels like they could go bigger.
Maybe. Silver back
One
up
wonders what they're
by-
afraid of in making that statement. It seems almost rhetorical in terms of, again, telling markets, look, just because we don't have data doesn't mean we're not going to see some sort of economic crisis, because you all are going to tell us, just don't panic too hard. We've got liquidity facilities for you. We are paying attention. We will ride to the rescue as need be.
It's a healthy reminder. It was that reminder that the markets needed in December 2018, Ilya, right? When we had that sell-off going into Christmas. And then Steve Mnuchin, man, I miss Steve Mnuchin. Steve Mnuchin.
What a deft operator. Nobody lasted in that administration except Steve Mnuchin.
Except for the guy who was the producer for the Suicide Squad. Which
I still haven't seen that movie.
Well, that and Lego Batman, those are Steve Mnuchin movies.
Can't go wrong with Lego Batman, though. A crowd pleaser always makes money.
You know, I remember watching it with him like the Treasury. This is the Treasury Secretary's movie. Oh, okay. Yeah. Copper prices here on the up and up after the rate decision too. So sniffing some things out. Copper up, silver up. Crypto perking up a little bit more, right? Bitcoin is almost out of negative territory now, at least in the futures market. You can see that we've started to rebound. And I know you don't like those diagonals, Ilya, but off the October highs,
doesn't mean I don't look at him like a madman.
That's a nice little breakout holding trendline resistance rounding back into a little.
Well, and there's a horizontal level there. There's an internal range situation there as well. Not all is lost.
No, I think we have. I mean, I think going into the Fed meeting, right, there are lines in the sand that we've been outlining here that I think still hold. For Bitcoin, it's going to be 95K, right? If we get north of 95, we're feeling a little bit better out things. For the NASDAQ, if we're trading through 25,000, 900, 850, 900, you've made your way through a clear pivot area on the chart. For the S&P 500, it's a little bit more as well. You got to get through 6,900 or so. And you've really started to make that leap through technical resistance. The Russell is pretty dang close. And you can see here, we outlined this flag yesterday. starting to perk up and perk outside of its range. It works for me. I did take down a lot of my delta exposure in stocks, removing some of the short put spreads and single equity names. I'm still long MES throughout all of this. I'm still sitting long the call spread that's baked in around 7,000 in ES for a touch at the end of the month. Unless Powell tells me that we're all idiots and he's just going to turn the screws on the economy to spite President Trump from now through May, maybe it's because
we know he's not going to say all that.
Maybe it's because I was thinking of Edwin Diaz and Pete Alonso leaving the Mets that I've been in such a dour mood all day. Yeah, but this is far more optimistic than I could have hoped for from the Fed.
I wouldn't say that. I think the main variable here did not go the market's way, though the markets clearly sweetened the deal a little bit, or the Fed sweetened the deal a little bit with, hey, we have a liquidity facility here for you if you need it. So that's probably why you get the kind of response that you have here. But it'll be on Powell. This sort of dance that we got here in the statement, it'll be very much a conversation, I would think, as soon as the Q&A opens. You only have one cut. Do you think that's enough? Which opens up a conversation that the market doesn't like, as we saw in October. The Powell, nothing is a foregone conclusion. Look, we had two dissents. Look, we have a lively debate. Look, we don't have consensus. Look, we don't have data. What do you expect us to be doing with any kind of energy? So this is not a conversation that the market wants to hear, but it's probably a conversation that it's doomed to hear, because the Fed is telling us in these projections that it's not changed its mind at all from now and from now going back to September. It's moved around some of the variables on inflation and growth, and of course it did. These are medians again. These aren't official forecasts, and depending on who was polled, we of course have some folks there that skew the polling. You have some sort of a view, but ultimately rates projections don't go anywhere. And I think what the market wanted to see was some kind of a progress mark, and they didn't get it.
I find it fascinating that on the heels of this, I'm looking at the Fed cut odds going out across the curve, right? So this is the March expiry.
Yeah.
Fed cut odds are up. You go to June, cut odds are up, and not huge, but maybe we get a little bit more mid-year. You go to Z6, basically flat.
Yeah.
So there's almost this interpolation by the market right now that the Fed sees things going a little bit better than anticipated. There's a rebalancing occurring in the economy. Maybe the tariffs had their one-off price hike and it's still being passed on, but it's impacting a certain segment of consumers more than the others. And so net with whatever is going on in AI spend, we can still roll forward with stronger growth and maybe a little bit weaker inflation. So he himself did mention that, I say he himself, President Trump said yesterday, as you alluded to, he wants to see the next Fed chair commit to a cut at their first meeting as Fed chair.
Yeah.
So you see,
which, by the way, is not a commitment that anybody
can't promise that. Can't promise.
No, because
right?
you might get outvoted.
Right, but that's directionally the market saying, okay, maybe the Fed sees a better economy and it doesn't need to cut, so this is maintenance. And if it does do something else, it's maintenance. But if we're going to get more cuts, they're going to come mid-year. They're going to come.
This is the other thing, as you just said. The president doesn't seem to understand that if the Fed appears to be under duress, rates are going to go up. The Fed can cut.
The dollar here?
They'll still go up. We saw this in April. If the markets think that the policy-making apparatus is not credible, borrowing costs for the U.S. sovereign will go up.
Yeah. Ilya, dollar here took a little bit of a bath on this, despite no cuts coming. A little bit of a bath, like a splish splash.
Yeah.
But across the board, dollar is down. What do you read through on that? Even though, is this just a function of those cut odds marginally rising mid-year?
It doesn't look like we've had a really big change. I mean, if you look at the daily charts, they seem to generally follow what you're seeing in equities. But you're at the top of a range in euro, going back to the beginning of last week, at the top of a range in the pound, roughly going back to early last week. So nothing is really occurring here. It seems like we've had the cut, so an element of event risk has come off the board, and now the markets are really waiting to make up their mind about whether you're actually going to break out somewhere.
I got a question here for the yen. I'm just thinking about this. If the Fed isn't going to cut as much as the market thinks they will, and they just told us we're getting one for next year, couldn't that put a bigger wedge in dollar yen rate differentials moving forward? And to that point, even though it could mean a little bit more weakness in 6J or strength in dollar yen spot, the game that we should be playing is more about thinking about how policymakers respond with potential intervention around the corner now that we're getting through the Fed and into a more illiquid part of the year when the BOJ has historically and the Ministry of Finance have historically acted?
Yeah. I mean, I don't have any yen exposure. I was a little bit long as of last week going into this week. I took profits on it. That was a nice little pull up for the yen. Thank you very much. I was out in a hurry earlier this week at the start of this week. Once we sort of started to really move, I really didn't like the December 8th candle, and so that was good for me. I just took it off. So I would love for there to be some intervention here because I want to be a yen seller ultimately, because I think, and that's not a function of the Fed, that's a function of Takaichi Sanae and the very dovish perspective that she has on these things. I mean, she is a Shinzo Abe protege, if ever there was one. So we have a situation here where I want to be short yen for those reasons.
Right.
And if there's a discount, bring it on.
As we close this out, volatility coming back in here. VIX now below a 16 handle. High volatility on the board right now. Natural gas still at 72. Over in corn at 71. Here, silver up near 62. Otherwise, I'm seeing a lot of low volatility persist in the treasury market where it's not getting stirred whatsoever following this rate decision, Ilya. I'm looking at equity markets, really, really low vols here still. Powell's going to start speaking in about 3 minutes time or so. Purple tie, time to buy perhaps. But ultimately, today's a day where what he says matters more than the rate decision itself. So stick around, stay tuned. Ilya and I will be tweeting through it as one does during days like today, although my recent Twitter feed is mostly complaining about the Mets and the wealthiest owner in the sport not shelling out some buckaroos for favorite player. Tomorrow, jobless claims. That's about it. Nothing else really matters unless you're a balance of trade truther. Is that a thing? Ilya, we're done. I'll be back in an hour's time to talk.
What's a balance of trade truther? My God.
No idea. Those words have never been said before. We'll be back in an hour for Last Call with Nick. I'll be back again for Overtime with you, Ilya. But until then, you have Dr. Jim Schultz coming up next with From Theory to Practice. Stick around. You're watching Tasty Live.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the FOMC edition of what it is that we are trying to do, guys. I need it. I need it more than I've ever needed anything in my life. Give me a tie color in the chat, and I need it ASAP because I'm with you all. I'm speaking into the lens. I can't be watching the presser. I got to know from you guys what is going to move this market. I already know it's purple. I need hex colors. Right? I need RGB codes. Like, you guys got to hook a brother up. I'm counting on you big time. But thank you for being here, and thank you for being a part of the show. It is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live network, then bounce on over to YouTube. If you do it in real time, if you do it right around December 10th, 2:30 Eastern, give or take, you can join your brethren in the chat, and you can communicate with them, and you will learn the tie color firsthand. This is the only place that you can learn the tie color. So hop onto the YouTube channel immediately. So Josh, bring us into the market. Man, what's going on? We got a little something cooking out there. Whew, man, market reaction has been a little bit muted, I guess. But the metals just absolutely took a dive. Even the S&P is up 14. Risk-free instrument, also known as the NASDAQ futures, down 18. We got the boomers up 300. We got the Russell 2000 futures index up 2021. I see people in the chat. You guys are trolling me, man. I'm not going to believe this. You guys are saying hot pink. You guys are saying red. You guys are lying. You guys are lying your faces off. I know you are, but man, watch them bust out. Watch them bust out a neon green. Like, come on, man. Let me get a magenta Wednesday from Uncle Jay. Like, can we get a little magenta action from Uncle Jay? Man, that would really, really be something. That would be something indeed. And so let me know, though. I need to know for real. Like, for real. And so I see a number of purples in there, so I have to assume it is purple, of course. And yeah, I mean, why would it be anything other than that? It's like when you have this type of streak, right? I mean, all the greats had streaks like this. Cal Ripken had a streak like this. Brett Favre had a streak like this. Tom Brady had streaks like this. And Uncle Jay has his own streak just like this. You can't break it up now, especially not when Trump is kicking you to the curb in 6 weeks, 10 weeks, whatever it's going to be. You got to keep the streak intact. And so, yeah, we all knew it was going to be purple, but we weren't quite sure exactly what flavor purple it might be. So, all right, but I see you guys in the chat. I appreciate you guys. And don't forget, guys, right? The tie color stuff, what is it doing? It's giving the world the information it needs. Yes. What is it doing? It's giving me the information I need. Yes. But what is it mostly doing? It's pumping the algo. Right? We pump that algo. Red, hot pink, neon green, fire engine red. I don't care. The algo doesn't care. Just pump that thing up to the heavens. And so, all right, so market is now rallying, and so maybe he did go neon green, man. Maybe he changed like mid presser, like that would be something, because he's rocking clip on. He ain't got time to be tying ties. He can do a quick little change right there on the spot. And so, all right, markets look strong now. Everything is right in the world again. The metals are up. The market is up. Josh is saying he's shirtless like Ben Johnson. I didn't know Ben Johnson went shirtless, but that would be about right for the Chicago Bears head coach, I would say. They couldn't stand up to my Packers, man. I mean, it's just the way that it is. And so, all right, let's go in here. Let's take a look at a couple of things that are brewing in the portfolio, and then I want to see where the wind blows us. I mean, it's a Fed day. We're doing the presser. We're doing this and that, and so who knows what's going to happen today. Obviously, it could go in a myriad of directions. But we have this SPX butterfly. It's seen better days, right? I think we've maybe potentially been in a better spot a time or two in the past relative to where this butterfly currently sits at this very moment. And so if we look at this butterfly, if you happen to have a banana daiquiri on hand, then you might want to pour one out for this butterfly. If you happen to have a natty light ice on hand, then you might want to pour one out for this butterfly, because it ain't looking too good. So this guy playing it to the downside, of course. You've got the SPX currently at 68.70. We have a 68.40, 68.05, 67.70 butterfly on to the downside, of course. And so we were playing this thing lower. It is currently ripping higher. It's not like a crazy rip. This is a very modest rip, and we've just gotten started. It's only been 4 or 5 minutes, into the presser. And you guys know, once the tie color is known, that's the biggest source of uncertainty. Like, that's the biggest unknown. So that, of course, is going to be the market mover. But does that mean it's the only market mover? No, not necessarily, right? We could get a pause. We could get a certain inflection. We could get a certain tone of his voice that we don't exactly like. And that, of course, can sound the market moving too. And so now that the tie color is known, now we go on to these secondary market movers. And so maybe we get a little something to the downside in SPX. It's not looking too good. It looks like Santa maybe has come a little bit early here for FOMC Wednesday. I'm still a little bit shocked that we made it. I'm still a bit surprised that we're here together, because I don't recall ever having to have to go through live in the moment a more important FOMC print than the one that we are experiencing right now. And so maybe this is purgatory. Maybe this is kind of limbo. Maybe this is like lost season 5, lost season 6 type stuff. I mean, I'm not really sure. And so you guys let me know if you know more than I know. And so, all right, let's see here. If we go to, wow, look at so now the metals are down. Yeah, see? This is what I'm saying. Did he change mid-presser? Did he go fire engine red mid-presser? Did he come out purple and then call the audible like Philip Rivers? Homeboy's got a grandkid and he's going to be huddling up this weekend. That is amazing. That's the best thing. Have you guys seen the video? Have you guys seen the video of Philip Rivers when somebody asked him how much he weighs? And he's like, right now at this very second? Man, I have no idea. Man, it was so funny. If you want to laugh today, go find the Philip Rivers press conference where one of the reporters asked him how much he weighed. Oh, it's so funny. I was laughing so hard. It's like, our dad bod's got to unite. He's got I got the dad bod. He's got the granddad bod, right? Like, we're doing dad bods. My man's got the granddad bod, and he's going to be playing in an NFL game this weekend. That's absolutely amazing. But what's going on in this market? We got gold down 7 now. Got silver making its way lower. Josh is hooking it up, saying that Powell's saying some stuff about inflation. Nah, that doesn't matter, man. He changed his tie. It's the only way. That's the only way that the market would move this quickly in a short amount of time. And so SPX butterfly, let's sit tight. Let's see if something can't cook. We got it simmering a little bit there on the back burner. And now let's just kind of see. Let's just kind of see what happens next. And we'll kind of go from there. So, all right. I want to, man, where were we? I don't know. I see you guys in the chat. Look at Baker 46 in the house, man. Look at Mikos, Finn West, Andrew Fansler in the house, Wolf in the house. Man, I appreciate you guys so much. Where are you guys? Ash Finn in the house. Man, Stan Lucian in the house. E-Media's here. Soul Train's here. Big Deal Donuts here. Man, look at Zaworks here. Old Two-Face is here. I see Sergio. I see Anderson, Homestead. Man, I appreciate it. Brian Dowdy and so many people that I missed. I appreciate you guys, of course, as always. Let's take a look at hey, look at our Chewy, man. Look at this. Guys, this is it. Like, we talked about this again, right? From my own personal Chewy consumption, I was pretty confident the bottom line was going to look promising. I was pretty confident that the revenue numbers were going to meet or probably beat expectations. And so we just played it to the upside. It was very, very simple, very straightforward, 30% of the time. It works every time. So Chewy, CHWY, we we sold it for $1.49. And we're it's currently marking at 70 cents. So it looks like we're gonna buy this thing back for just a wee little bit over 50% of max profit. And that's gonna be that. So it looks like the metals are catching a little bit of a bid. The market's stabilizing a little bit. You've got, silver stabilizing a little bit. And so now you're getting a little bit of movement, right? Now you're getting a little bit of back and forth. And again, guys, don't forget the first 11 moves, those are suckers plays. The first 11 moves, that's what Josh is trading. Don't be like Josh, right? The 12th move is the move, right? We know that's the case every single FOMC day. And so right now, I'd say we're still on the 5th or 6th move. And so Josh is getting chewed up out there. So don't join him just yet. Wait another 10 or 15 minutes, and then you should be good. So Chewy, I think we just buy this thing back and we call it a day. And again, I'm no Julius Spina. I'm no Jacob Perlman. But this looks pretty good. I mean, this looks like we're right around 50% of max profit, maybe just a little bit over 50% of max profit. Let's close it down. Let's book the profits. And let's see if we can't, can we light a stack of cash on fire for Oracle earnings? I think we can, right? I think we have the ability. So we'll give it a go. 72 cents maybe. See if we can get filled. All right, so we got filled on Chewy. So there you go. So we're out of Chewy. Beautiful. It's like it never happened, other than the fact that we picked up a few shekels there along the road. So that's Chewy. The other thing we did yesterday, of course, was, I still have an eye on this SPX butterfly, which it's not interesting until it gets under 68.40. And so we're going to need another tie color change, maybe. I mean, if he went from if he walked out with purple, which obviously I didn't even need to ask you guys. I knew it was purple. You knew it was purple. Obviously, that's the case. But given the market move, I think there could have been an audible that's called. So maybe he changed to something that was more of a magenta. Like maybe he changed something that's, a little bit more of a maroon, right? And now all of a sudden, if you can get another change into maybe like a gray, maybe like a black, we could get another little something. Look, it's happening right now. Man, it might be happening as we speak. And so NASDAQ is now red. You've got EMI S&Ps, or at least the SPX index going down. And so, okay, all right, NASDAQ down 40. Okay, all right, so it's happening. It's happening, and you cannot stop it now. Gold down 17. You got silver down 15 cents. Man, things are moving and things are shaking. And so, all right, so let's go ahead and keeping an eye on the SPX butterfly. And let's look at our SLV strangle, though. So our SLV strangle, we put this guy in yesterday just trying to take advantage of, obviously inflated implied volatility. You've got a pretty high implied volatility rank right up there with SLV. And you've got the stock, or the index, I should say, at 54 and some change. And so we have a 50-63 strangle. And right now we're off to a really, really good start. And so we're up about 20, 25 cents on the trade. I'm going to sit tight. I'm not going to do anything just yet because I don't really see much of a reason to do anything just yet. It's finally working out. We're off to a good start. We've gotten a little bit of volatility coming in today with the number being out and the tie color being known. And all of these kind of uncertainties are coming to the surface to where it's like, okay, we have some closure on different things. And so let's just sit tight. Like there's no reason to do anything yet. This guy just got cooking. Let's not pull it off the old grill there a little bit too early. And so SLV is looking pretty good. And then the last thing I think I want to point out in the portfolio is just a quick scrape. Let's just scrape the few positions that are left because, man, look at this. NASDAQ down 80. Okay. All right. MES. This is our ratio spread. This guy's looking fine. I'm going to sit tight. No reason to do anything. MNQ short put. This guy's also looking fine, even with the NASDAQ down a little bit now. Still, we're 900 points away from the strike. So we sit tight. We do nothing and let it cook. Home Depot, we need to up a little bit. We have 9 days to go. Nothing to do there right now, in my opinion. And then SBUX, which is confusing because I also have SPX in the portfolio. But Starbucks, SBUX, we sit tight, we do nothing. This is our core position. And then that's going to be that. What I want to make sure we do today, though, I want to get to you guys in the chat because I appreciate you guys, man. I appreciate you guys so much. I see you guys. Man, look at you guys. Let's go to none other than Oracle earnings. So Oracle earnings. So we take a quick little gander at Oracle earnings. Oracle's down right now. You've got the NASDAQ rallying now. So, okay. Oracle's down. Think about this. Again, guys, if you want to look at charts, look at charts. If you want to look at financial statements, look at financial statements. I don't give a rip. But if you just back up, just zoom out a little bit and just use common sense and think about this. Oracle decided, when they could have decided and chosen any day, essentially, Oracle decided to put their earnings on the same day as FOMC. They decided to hide behind Powell's presser, to hide behind Powell's lilac tie. Does that necessarily invoke a lot of confidence in you around Oracle earnings? It doesn't for me. Does that tell you a company that wants to be front and center? Does that showcase a company that wants to be out there and they want everyone in the world to know what it is that they're doing? I don't think they want anyone to know what it is that they're doing because everyone, of course, is going to be focused on the Fed today. And so for Oracle here, given the fact that they chose an FOMC day, man, you got to play this thing to the downside. I'm looking at this thing and I'm seeing downside potential. So let's go in here. We've got Oracle. You got earnings today. I think we just go with, the tried and true, right? I mean, I think we just go with, I think the last time, when we got absolutely just blown to smithereens on the Oracle earnings from, 6 months ago or whatever, I think it was a short strangle. It was definitely something undefined risk because, man, it was brutal. It was super brutal. So this time I think let's maybe ease into this one a little bit. Maybe we do something defined risk. Maybe we take a shot directionally. If it works, it works. If it doesn't work, it doesn't work. And that's the great thing about defined risk strategies. I mean, are you going to make a ton of money over time? It might be a bit challenging, let's say, which I've been very open and honest about that on this show. I think undefined risk is going to be the thing that's going to be the most effective for most people. But when it comes to taking shots around earnings, you've got to kind of selectively, pick and choose your battles, right? So you don't necessarily want to be, just flying high with undefined risk across the board. I don't know that that's going to be a prudent way to approach, these potentially explosive binary events like earnings could go way up, could go way down. I mean, we saw this with Oracle just 6 or 8 months ago. And so I am thinking markets are green now, of course, because why wouldn't they be green? Why wouldn't they be green? And so I'm really thinking, though, let's go in here. Let's do an expected move butterfly to the downside. And let's see if we can't get just a little bit of something back from Oracle because Oracle still owes us a whole bunch of money. And so if I go to 217.5, 197.5, or wait a minute, 217.50, 197.50, 177.50, a $20 wide. Is it less than $5? It's exactly $5. Oh man, I really, I mean, it's one thing to talk about it. It's one thing to just espouse an idea and it's all just theoretical. It's all just whatever. But when you get to the trade bar, at least for me, I can smell the smoke in the air. I can't usually smell it before that. I'm just too focused on the analysis or maybe it hasn't started yet. But once you bring up the trade bar, it's okay, this is close now. Right? I hear the crackle of the flame. I smell the smoke. I know some things are about to happen. And so I need to be aware of how much I have risk, how much I have at risk on the trade because sometimes it doesn't work. Sometimes these things tend to, go in the other direction, let's say. But $5 is still very reasonable. Let me bring it in. I'm just going to bring it in a titch. Let me go to the 215 strike and then up to the 180 strike. Ooh, wow, that really helped a lot. Now it's only 386. Oh man, I'm definitely going to take that. Okay, so this is what we're going to settle on. 215, 197.5, 180 butterfly for Oracle. We're going to pay under $4 for it. So $3.80 is what it's marking at right now. So just in case this doesn't work, this is just over 1% of the account. I mean, that's, a good level to be at, in my opinion, when it comes to earnings trades. I mean, if you're around 1% of your account per earnings trade, I mean, I think that's probably going to be a good level for a lot of people. Some people will want to go less. Some people will want to go more. I'm going to use that as a reference point. It's not intended to be a hard and fast rule that needs to be followed by every single person. But I think 1% is not too bad. I mean, generally speaking, I like to be 1 to 3% for defined risk. But again, you're walking into the lion's den. Right, to take a chapter out of the book of Daniel, I'm walking into something that's okay, there's a lot of lions around, and so this could get really hairy really, really quickly. And so maybe I shrink my size down even more. Maybe I get even smaller on order entry because I'm not exactly sure how things are going to pan out. And I'm walking into a potentially, explosive binary event. So I like this setup here. We're going to play this thing to the downside, which again, if you've seen the show before, that cements an outlier move to the upside in Oracle again, right? It's going to happen again to us, it looks like. But this time, it will be defined risk. So that's obviously a good thing. So let's go in here, though. 384 on the mid price. let's give it a go, and then we can just we can move on. So no takers at 384. I'm going to try 390. I'm going to be excuse me, a little more aggressive with my price discovery, just so we can kind of get this guy cooking. Market's going back down now. Okay, so man, market's moving, things change. It really is true. Markets move and things change. And so 393, but also you can't trade the market that you want. You have to trade the market that you have. So I'm not exactly sure what that means altogether, but how do those two things work together? That doesn't make any sense. Anyway, somebody get back to me on that. So all right, let's go ahead. Man, where are you guys at? Man, let's go. I see you guys in the chat, man. You guys are doing some nice work in that chat, because I'll tell you what, the YouTube algo, it's not sure right now. Like when the show began, it's like, okay, we'll skip over this show. But now all of a sudden it's like, wait a minute, this could be something that other people might value from. And that's all because of you guys. And so get it in the chat, regular comments, real comments, for the love of the algo, man. I'll take whatever you got for me at this point in time. So thank you guys so much. But let me go ahead and let me surprise and delight somebody in the middle. Oh, Smack Levin said he went holiday festive purple with flecks of flare. No, he most certainly did not do that. If he did, though, that would have been a power move. That would have 100% been a power move. And so let's see. Oh, Ash Finn says, looks like Dr. Jim's Red Sox missed out on the Pete Alonso sweepstakes. Yeah, man. Nobody's front office is worse at what they do than the Red Sox front office. Nobody's. Like, ever since the Theo Epstein days, like, they have no idea what they're doing. No idea. They always talk a big game. They always say we're going to do these different things. We're a big market team. We're going to spend money. We're going to this, that, and the other thing. And then the next thing you know, we got a payroll that's the same as the Pittsburgh Pirates. It's the same story. For the last 20 years, it's been the exact same story. And so when we were talking about Schwarber and Alonso, I'm like, y'all are just, we're going to end up with Marco Scudero. Like, that's who we're going to end up with. We're getting Pokey Reese. Like, that's who we're going to end up with. Don't get your hopes up. I've seen this movie many, many times before. And so I'm not surprised, Ash Finn. I'm not surprised at all. But Pokey Reese is a decent ball player. And he actually won a ring with us. I think that was in 2013, if I'm not mistaken. So anyway, let me see if I can find somebody else. Oh, Mikos, here we go. Mikos says, can I just say how much fun that was to watch the guys talk through that FOMC stuff in real time rather than truth or skepticism? Man, I agree. Just getting to see, I mean, I love truth or skepticism, to be honest with you guys. But this is like a pivotal moment in the markets, right? And so you guys are getting, in my opinion, two of our best, if not our best, market commentaries when it comes to the macro picture and the different things that are happening with like inflation and like jobs and employment growth and full employment and dual mandates and whatever. You've got Chris and Ilya together when the number drops. And I don't know that you could get it any better than that. I really, really don't. I'm not sure you can find an uptick over and above that. And then, of course, when 230 rolls around, you get me, which is a huge downtick, and we just work through the tie color together. Like, that's what my job is to figure out, okay, what are the hex numbers? Where is my color wheel? So we can figure out exactly where this tie lands. And that's the value that only I can bring to you. And so you're welcome. You're very, very welcome. But let's go to, where are we at here? Let's go to the beginning. Let's go right back to the beginning. Okay, markets have found their footing now. So there you go. So we're back. Must be something positive in the Q&A. And you got NASDAQ up 46. You got EMI S&Ps up 32. It looks like our butterfly is going to go to zero. Which, I mean, come on. Was there ever a doubt? Like, for a second there, I had a doubt. Like, for a second there, I'm like, are we going to get a little something out of this butterfly? No, not at all. And so you could look at this and you could say, well, Jim, take it off and save your $1.77. I mean, that's no fun. I'm not going to do that either. Especially when, I'll get to the rest of you guys here in a second. Especially when it's SPX, right? Like, don't forget this is cash settled. Like, don't forget that we don't necessarily have to be there at the terminal when the market closes to make sure that we're shutting this thing down so that we don't take assignment in SPY or SPX or S&P 500, whatever. It's going to be cash settled. There's no assignment risk. I don't have to worry about, the final 3 minutes of the day or the final 90 seconds of the day in terms of closing that trade out. The spreads widen out, and I mean, the market makers are picking people off left and right. I mean, how do you think Vinny is going to have a good Christmas this year? He's picking people off left and right. You think Tony is playing for his presents? Absolutely not. I can assure you Vinny is having to buy his own presents for this coming Christmas. And of course, he's going to do that by picking people off in the various pits that we've looked at before that Vinny is responsible for. But anyway, I digress. So SPX, we'll sit tight. I'm not going to close it now. And that's going to be that. But let's go to the beginning and let's see where you guys are at. Ashvin in the house. What's going on there, Ashvin? I appreciate you. Orgdenu's in the house. What's going on there, Orgdenu? Whatever we are trying to do, I'm sure no one can do it as well as you. I don't know about that, man. I don't know about that at all, but thank you so much there, Orgdenu. And I got back to you via email just a little while ago. And so I appreciate you, my friend. So thank you for being here. And markets are showing a good amount of green now. And so, yeah, man, all is right in the world. Like, let's go. Let's go indeed. So scramble everything. Hey, Dr. Jim, it looks like your Starbucks position survived the most important FOMC meeting of our lives, only to feel like it has got the same chance of recovery that the Colts have with Phillip Rivers at QB. Nah, man, I am all in, right? So first of all, my Colts have had an amazing season. But with the Daniel Jones thing, I mean, that's a stick in the mud. Like, that's a bit of a plot twist. And I've been telling you guys about Daniel Jones for years now. And so the fact that we have to find a plan B, that's a little bit tricky. But man, Granddad Rivers, let's go. Man, I'm 100% ready. I've never been more ready than to watch him play this Sunday. I cannot wait. I will very, very likely miss the entire game. But I'm excited, man. I'm very, very excited. So Daniel Perkins in the house. What's going on there, Daniel Perkins? Hey, Dr. Jim, stacks of cash successfully incinerated. Yes, that is correct, my friend. Our SPX butterfly. Man, now it's up 40. Wow. And now I kind of feel like we should save our $1.38. I'm not going to, because these things can turn around real fast. And so it's only $1.48 or whatever. I'm gonna leave it be. But man, that did turn around in a hurry. I mean, we just had this thing was like almost in the money. The 68.40 was almost in the money, and now it's over. It's done. And so again, I mean, you guys are welcome, man. Like, I'm not sure how much more I can do for you. I really am not sure. I mean, I'm going to try to figure it out. Like, I am going to work my buns off to try to do more for you, but simply fading all of my directional trades sight unseen, I'm not sure we can get better than that. I am not sure that we're going to be able to improve it. I'm going to try. Like, I'm going to keep working at it. And so Big Deal Donuts in the house. What's up? Wolf in the house. What's up there, Wolf? Andrew Fansler in the house. Dr. J. What's going on there, Andrew Fansler? How about your prediction market on the Wolfpack versus your Memphis Tigers bowl game? How about some side bets like you had with Tom? Yeah. I'll tell you what. So the NC State Wolfpack, man, my Memphis Tigers made it to a bowl game. That's very, very surprising, because University of Memphis, that's where I went to grad school. That's where I earned my PhD in finance. Not typically known for football, a lot more known for basketball than football. And so I'm a little bit surprised that they even got into a bowl game. And so I'll probably sit this one out, my friend. But of course, I will be pulling for my Memphis Tigers because, again, I've been a fan since day one. And so why would I not pull for them? But I appreciate you there, Andrew fans. So Brian Dowdy, hey, hello, Dr. J. Looks like that butterfly is going to go off into the pastures, but maybe Powell can save you. I think he tried to save me, but then the Santa Claus rally is just too strong. Like, I think Powell tried to do what he could. I mean, I think the quick switch of route to the fire engine red, it gave us a little bit of a downtick there for a second, but it looks like it is indeed going to go out the pasture. And I'm sure some of you are screaming at the screen right now, like, dude, take that dollar and run. But I've seen this movie before too. And those 43 green points, they can very quickly become, 43 red points. And is it likely to happen? Of course not. But man, on days like today, he says something wrong at the tail end of the presser, which I'm sure is happening now. He's probably wrapping it up in the next 10 or 15 minutes. It's not that crazy that it turns around. And again, it's like, it's only $1 at this point. To me, I'd rather just leave it on and like, let's go ahead and roll the dice and see what happens. But Baker 46.16, Dr. J, why is IVR so low even when we know there was FOMC today? Yet another seemingly normal day, we see much higher IVR. What is the component of IVR that is driving that relative to other vol? Okay, why is IVR so low even when we know there was FOMC today? Yet other seemingly normal days, we see much higher IVR. What is the component of IVR that is driving that relative to other vol? Okay, so a couple of things going on in there. So number one, the reality is, I know I joke about it and we have a good time with it and whatnot, but a lot of times, like, when the Fed numbers are kind of known in advance, I mean, I say known, it's always probabilistic, right? But like when things seem to be a little bit more settled than maybe they are at other times, volatility isn't necessarily that high for the Fed day. And that's kind of been the case here. Like that's kind of been the case, with the Fed announcement right here, right now. So that would sort of explain why implied volatility rank itself just across the board was more muted for a day like today relative to maybe other FOMC announcements or even other, big data points. right? But then what is driving the implied volatility rank calculation? Well, the implied volatility rank calculation, it's a fairly simple calculation. It is just taking the distribution volatilities and so on and so forth. And so that's kind of, that's how I like to think about, the implied and so forth. And so that's kind of, that's how I like to think about, the implied volatility rank, because I think it's the easiest way to kind of grab onto it in that regard. And so when it comes to, is there something special that's pulling or pushing the implied volatility rank in one direction or the other? No, not really. I mean, it's a pretty straightforward calculation. And so, but the fact that it might be muted on some days and a little bit higher on other days, I mean, that is just a good example of the simple fact that volatility is a living and breathing thing. Like volatility is a living and breathing thing. Like it is going to respond to market forces the same way that market prices respond to market forces, right? And if you think about, it could be an index, it could be an individual stock, right? Just think about like when something happens in the world or in the market or the economy, right? The stock or the index responds, but oftentimes it doesn't respond in the way that you think it should or the way that you thought it would, right? Sometimes it's doing its own thing. It's a lot more random. It's a lot more unpredictable, right? And so market volatility is the same thing, right? It is also responding to market forces in a different way, of course, because it's a completely different metric, but the same story still applies. It's not necessarily going to behave the way that you or me or anyone else might think it should behave. And so that would be the best answer I have for why you might see more muted volatility now when you kind of expect it to maybe be a little bit higher. So hopefully that helps a little bit. But let's see, Miko's in the house. Miko says, can I just say, oh, there we go. I already got that one. That was one of the surprises and delights. Finn West in the house. Good morning, Dr. Jim. Good to be with you today. Man, it's good to be with you too, my friend. So thank you so much for being here. E-Media, Dr. J's got the spotted tie. Yeah, there you go. Matt Charlene said purple. Zawork said time for some B-. Yes, B- fill in the blank. Value, humor, pretty much all the above. Old Two-Face gave me the actual hex code. There you go, 800080. So that's some good stuff, man. You know what's cool? You know what's funny about that with AI and stuff now? Like you could probably just like take a picture with your phone and it would tell you like what the hex code is. And I bet you it would be pretty close. And by pretty close, I mean, it'd be pretty far off. But at least it gives you something that we couldn't do, 4 years ago or 7 years ago or whatever, even if it is dead wrong. And so Anderson Homestead, hot pink tie. Yeah, that's funny. HVO, I see you. Purple tie, time to buy. I mean, that's right. That's right. TJ Jones said it's red. No, it definitely wasn't red. Ashfin or Denu, it's so purple it looks green. That's pretty funny. Matt Charlin, Big Deal Donuts. E-Media says his white shirt looks sharp. And so maybe it was pretty sharp there on the presser. Big Deal Donut says fuchsia. Yeah, fuchsia would be a power move for sure. Lavender. There we go. Soul Train says gold and silver, Dr. Jim. And so, I mean, they've really been moving. I mean, what are they doing now? Oh, they're up again. So gold is up 8, and I would imagine the Hunt Brothers are, 61.47. The Hunt Brothers are crushing it. And so, gold and silver looking good. Man, that's crazy. How low did silver get a few seconds ago? I feel like it made quite a dive there for a minute, right? Did it not? Yeah, I mean, it was all the way down to, that thing was all the way down to 60.58. So it was $1 lower, and then gold did something similar, I think. Right? Yeah, gold was all the way down to, the low there was, it looks like, 42.07. It's now 42.47. And so that is quite a run indeed for the metals. And again, they just run it down there, and what do? They sweep out all the stops, and then they run it back up. And now what are they going to do up here? They're going to sweep out all those stops, and then they're going to run it back down. And so just welcome to just good old-fashioned market manipulation. And so let's see the I don't know if that's what's happening, but it's probably what's happening. So the Sana Nakone, things are going to hit off when the conference ends. Maybe so. You might be right. And so that's probably happening here in the next couple of minutes. Smack Lovin', Holiday Festive Purple. Yeah, that's funny. Stan Lucian, it had a metal flare to it, silver platinum. Yeah, that would really be something. Let's see. Ace Singh says, my short puts are stacking up. Yep, there you go. Short puts looking good right now for sure. Even S&P's up 50. NASDAQ up 125. And all is right in the world for sure. And let's see. There's the Pete Alonso stuff. Yeah, again, I mean, God, I was not excited about that. Not for a second. Not for a single second. Not at all. Let's see. Asing 25 Delta Short puts in SPX now at 7.2. Added some more. This is wonderful. There you go, man. There you go. Oh, another hex code 4B0082. And so I don't know which one I should believe. Those look very different from each other. But I appreciate you guys. You guys are stepping up. You guys are 100% stepping up. And so let's see. Asing says, who was on last call today? I don't know, actually. Because everybody's pitching in. You might even see me one day. And so everybody's chipping in now. So I don't know who's on the rotation today, but I have no doubt that it's going to be amazing. And so let's see. Gold just took another leg higher. Wow, look at that. Nice. Oh, Josh says it's Nick and Chris. Yeah, there you go. Nice. Silver just ran up another 20 cents, right? You've got gold just ran up, another $6 or $7. And so whatever Powell just said, like, people are liking it. The market's up. I mean, everybody's excited. I mean, there it is, man. Like, let's go. 1,000,000%. Let's see. E-Media says there should be a prediction market for that, meaning a prediction market for who's on last call. That'd be pretty funny. If you saw that on like Kalshi and like Polymarket, that would be pretty funny. That'd be some good stuff. And so let's see, everything going crazy now. And let's see, I see BDH. What's going on there? BDH, appreciate you, my friend. Soul Train. The economy is more like The Walking Dead season 3. I never saw The Walking Dead. I heard it was a great program, though. I heard it was a really, really successful show. And so maybe that's something we should put in the old hopper there. But Ash Fan, got to hit that like button for Jim's algo boost. Yes, please do. Hit the like button if you haven't done so already. Like the stream, subscribe to the channel. If you subscribe to the channel while you're on this stream, then that's obviously a really positive thing. So definitely do that if you haven't done so already. And again, if you're looking for, active management when it comes to your portfolio, you're in the right space, man. You are 100% in the right space. And so that's what we're trying to do. And so let's see. Money Zen in the house. What's up there, Money Zen? Stephen Bivens still freezing his bottom biscuit in Michigan. That's a brutal draw for sure. And so Smack Lovin says a magnificent parlay for those looking to play the return of Phillip Rivers. Over 2 TD passes parlayed with over 200 passing yards at plus 757. Man, I love it. I love it. Granddad Bods Unite. I 100% love it. And BD8 says Walking Dead season 3, or maybe even back to Lost later seasons. That's what I'm saying. Big Deal Donuts, nice Casa, Ash Fan. Chewed off a nice winner there, Dr. J. I did, and I see what you've done there. Yes, our Chewy trade was rather nice. It was rather nice indeed. So we got about 50% of max profit on the Chewy trade. It's gone from the portfolio now, but we took it off about 15 or 20 minutes ago. And so let's see, TJ Jones, move on a 1 minute time frame. Yeah, man, those are some Errol Coleman settings. Like, again, guys, if you go to your charts, the instrument doesn't matter. But if you click on a 2 minute chart or a 1 minute chart, those are the Errol Coleman settings. I know the developers are working on just a button where you can just push Errol Coleman settings, and then it immediately populates side-by-side charts. You got the 1 minute, you got the 2 minute. And whenever you look at these charts, he gets a royalty. Like, he 100% gets a royalty. And so that's gonna be some good stuff. And so let's see. Emmett Morrison, Dr. Jim, looks like we survived Uncle Jay and the clown show known as the Fed. Next up, NFP on Tuesday. Yes, that's gonna be next Tuesday. So that's gonna be in 6 days. And so let's see. Old Two-Face, Sam. Oh, Sam L in the house. What's going on there, Sam L? I appreciate you, my friend. Thank you for being here very, very much. Says, sorry, Doc, I'm late for the algo. You're never late. Definitely not. Sam L says, Doc, welcome to the only stand-up comedy show disguised as a finance stream. You officially cracked me with the cats and the Chewy story. That's A+ humor right there, man. I appreciate you so much, my friend. You are part of the core position. I appreciate you very, very much. And so, yeah, we got to do something. We got to do something to get the people coming back to the show. And the finance content's not going to do it. Like the trading content's not going to do it. Again, of course, unless you fade all of my trades, then you're probably going to be in a fine spot. But thank you, my friend. I appreciate you. Emma says you're never too late for the algo. That's correct. Dan Ducarn, Dr. Jim will play a bullish play on Oracle. No, definitely not, man. Got to play it to the downside. Again, just use common sense. Just use common sense, right? Now, you got to blaze your own trail. You got to make up your own mind. I can't make up your mind for you. But again, just thinking about this, right? They're tucking their earnings trade away, or their earnings announcement, I should say. They're tucking it in behind the Fed. They're tucking it in right behind Uncle Jay and his presser. Do you really think they want the world to know? Do you really think they want all eyes on them? I don't think so. Now, maybe you read those tea leaves differently, and that's what makes a market, man. Like, that's 100% what makes a market. And so let's see, the Sana Kone, I know I'm not saying that right, but that feels right to me. Just got with Lulu earnings, risking 100 to make a couple hundred on the calendar spread. Lulu earnings is today? Is Lulu today? No, really? Let me look and let's have a quick little look. 12/11. Oh, it's tomorrow. Okay, so it's tomorrow. So maybe we'll do that tomorrow. So remind me tomorrow. We'll do some Lulu tomorrow, maybe. But I'm not going to do it today because we've got Oracle. We've got this, this butterfly. Man, we should have taken it off at $1.40. Well, we had $1.70. We should have done it. Now we've got 58 cents. So I'm not going to do it now. That would be a total Johnny move. Although that 58 cents, it's as good as gone. So Anderson Homestead, let's see. Where are we at? Oh, I lost it. Oh, no. I clicked something and I lost everything. Oh, that's brutal. I lost where I was in the stream. Oh, there we go. I think I got it now. Anderson Homestead. Oh no, I just saw a call spread in Oracle. No, you're good, man. You're good. And you're good. I mean, I would change it quickly. Like you still have time. Like you have time before the market closed today. Buy it back. Take the little ding. Take the little pattern day trader ding. Like it's worth it. Trust me. Right? Take the ding and reset your stake to the upside. Right? Again, I don't know what more I can do for you guys, but I know I can do that. And I think that's going to give you the most possible value that I could give you. And so, but let's see, man. I see you guys. Emmett Morrison or Danu Ashford, James Wentworth in the house. James Wentworth says the dot plot came back as less than expectations. Don't know why it's up at all. Yeah, I mean, that's another thing, right? If you knew that beforehand, do you think you could have made money? I don't know. Now, again, markets only go up. It's only green. It's, if it's too red, we just do enough, computer restarts and we're good to go. Like, I understand all that. But again, this might be another situation where if you knew this ahead of time, I don't know that you could have made money. Maybe you could have, right? I don't know. But I think it's harder than maybe people realize. But man, we made it. Did we make it? Man, somehow we made it, but we're out of time and I got to run. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to connect with you guys on there as well. But in the meantime, guys, stick around. We've got Tim Knight coming up next with Trading the Charts. And until tomorrow, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Na, na, na.
Hello, everybody. Well, we are done. We're on the other side of the last FOMC of the year. As expected, rates dropped 1/4 of a point. The last I checked, Powell's still talking, but maybe he stopped. I don't know. The market loves what he's saying. They have turned open the spigots again. They'll be buying ungodly amount of treasury bills to flood the market with liquidity. And the market's responding very positively. We got a lifetime high on the small caps, and most other markets are getting very close to their peaks on last Friday. It's not lifetime highs across the board, but the small caps led the way, and generally speaking, it's just green all over the place. I've backed off to some degree on my shorts. It's kind of a mix. The positions I've got 4 are down for 6 that are up. So not a great day for the bears at all. But the bulls definitely win this one. And it's just, I'm always glad when these FOMC things are done because it really just kind of clears the air. By tomorrow morning, it should be even clearer because not only will people have had a chance to digest what's been said, but Oracle will be out of the way, which is kind of one of those off-season reports that we get, kind of like NVIDIA. Not as important as NVIDIA, but Oracle is definitely one of the top 5 most important public companies in the AI space, and so that'll be closely watched. Let's jump into the charts, and we begin with a spider. On the one hand, we're not at lifetime highs. On the other, we could be. Probably not today, but maybe by tomorrow. This was the former lifetime high here back on October 29. I say former, it's still the lifetime high. And then here we have a bullish engulfing pattern, and quite a big one. And it wouldn't take much to cross that line. Of course, it's a subtlety, but the ETFs do incorporate dividends, so they're not exactly the same as the cash indexes themselves. But the point is that it would not take much at all to notch another lifetime high for the S&P 500. So we can see here that since late October, we've basically made just a giant letter V. We fell pretty continuously from the 29th of October down to the day after NVIDIA. And then since then, we have undone pretty much all of those losses. Over at the diamonds, kind of the same idea. This was a lifetime high, a little bit of a different date. This was November 12, and so we fell hard. There's post-NVIDIA day, and we've undone pretty much all those losses. One of the biggest green bars we've seen in a while, and rather close to its own lifetime high, represented by that horizontal. And of particular strength is the small caps. These have blasted to lifetime highs. It had been making tiny lifetime highs recently, so this was the former one here, back on the 15th of October. We got the tiniest bit above it yesterday, and then today it's just smashed right through. So as we back way away, we can see here that we're still below the broken trend line. We're getting close to the underside of that. I would note that in recent years, every time we've made a new lifetime high, it's been kind of a short-lived victory. Here's what I mean. This was the former lifetime high here, way back in the day. It took a long time to beat it, but it finally did so late last year. And that lasted a day or two, and then it just fell to pieces. Then we've rallied again. We've bested this high as well. Let's zoom in. So we beat this high, and that stayed up for a couple of weeks that time before slumping into the post-NVIDIA low, and now we've got yet another lifetime high. So it's almost like it spends all its energy making the achievement instead of really persisting. But as I said earlier, the bulls definitely win the day because we're up anywhere from 0.5% to almost 4 times that much on the big equity futures. Over with the cubes, this is one of the more modest gainers. It is up a little more than 0.5%. It is not at lifetime highs, nor has it passed this gap. So this gap is still intact. And, if, let's just say, Oracle slumps this evening. I have no position. I have no particular opinion on it. It's very badly sold off, so that would shock me. But if Oracle did slump this evening, that gap will probably remain open. If Oracle, on the other hand, recovers nicely, then we'll seal that right up and could even push to lifetime highs on this. It wouldn't take too much. Now, of course, with FOMC, bonds are going to move, and bonds are doing pretty decently. The TLT is up about 0.4%. We've still got a pretty decent little head and shoulders pattern here, so they're not out of the woods yet. It doesn't look like a great buy. It's not something I would buy and hold on to because there's a lot of overhead supply, but it certainly isn't, falling to pieces. The bond market likes what it's heard. And by the same token, the medium-term bond fund, IEF, has managed to not even break below its own reversal pattern, and it's undone all the damage from yesterday. Okay, now, precious metals continues to be really interesting. Let's take a look at this. Gold is up. Not tremendously. It's not very exciting considering all that's going on today. GLD is up 0.5 percentage point. It is still below the gap. My spidey sense is that it should conquer that gap before the week's out. Hope so. This is a pretty good looking basing pattern right here. Getting above this level, which is basically the low of October 20, would, I think, get things really cooking. This is very messy here, got a little more stable here, and stable almost to the point of boring over the past couple of weeks. So this is the gap that's beckoning, and if we can get past that, I don't think it'll take much effort at all to beat back the tiny amount of overhead supply defined by that bar, which was the lifetime high back in October. As far as miners go, let me back up. The miners are doing pretty good, and this also speaks to the good prospect of pushing to lifetime highs here. The GDX peak was on the 16th of October. There's not much sunshine between that peak and present price levels. We're up nicely now, about approaching 2% on the day. So I think that's looking really good for new lifetime highs, probably before the week is out. And then over with silver, another lifetime high. It just keeps blasting higher. The futures themselves are up at 62.25. Obviously a lifetime high there too, but silver has just been doing very well. And I think it speaks loudly to how fiat looks in the future. This is the great debasement trade, and precious metals have had a fantastic 2025. Palladium, bless its heart, had a rough morning, but it is not out of the woods, that's not the right term. It's down but not out. That's more appropriate. It did get beaten back down into this range, and it was a disappointing opening, but certainly didn't fall to pieces. It seems to have stabilized to some degree. It's down over, PALL is down over 2%. PA itself is down 2.22%. But, let's see if yesterday's breakout still counts, because if gold and silver keep thriving, if miners keep thriving, I think people will wake up to palladium and finally send this thing upwards where it belongs. But right now, some days it's the superstar. Today it's the dud. But let's give it a chance. Over in Bitcoin land, it's up a puny amount, 0.37% over on BTC. I maintain that 98,000 is a thick wall of resistance that I don't think the price is going to get above. I saw Tom Lee's still talking about $5 million a coin on BTC. Okay. In my own view, I think we've got a really important top at hand here, and 98,000. And incredibly, I heard Eric Trump saying that Bitcoin will replace gold. I don't think so. Indeed, I think that those who are into crypto may sort of start to move over to stuff you can hold land, because I think gold, silver, palladium all look terrific. So Bitcoin, it's up just a touch, but pretty dismal performance considering that the Fed's thrown open the spigots once more. Also, kind of a favorite long-term short here, keeps sinking. DeFi Development, DFDV. You may recall the right triangle pattern on this one. Let's just draw it again real quick. This was the base, and this was the top line. Yeah, more like this. Come on, doink. That's not bad. So you can see here that right triangle, and this has been just like a very slippery ski slope, like so. So we've got another multi-month low. It's a beautiful chart, so it just keeps sinking. Okay, let's look at some of my surviving shorts. Definitely a select few. One I got out of yesterday, and were I in it today, I would definitely be getting out, is Vistra, VST. It's been a good run, but this is a pretty pronounced hammer at the bottom there, so I think that's probably going to bounce. So that's VST. AMD, this one's been a little bit wobbly, and I'm sticking with it. I think Oracle's news will definitely inform semiconductors in a big way tomorrow. But this has been recovering little by little, but it's up 0.37%. Not particularly strong showing, so remaining short on AMD. Centene, CNC, which was the healthcare business, United Healthcare competitor. I've shown this one before where you got this just tremendous amount of overhead supply. It's up a little bit right now. Most things are. I mean, there's only a couple of real stars right now. One I'll show next, which is Oscar. That's down real hard. And then DoorDash, and then Hims and Hers, Oklo, Meta. There's a few decently down, but obviously this is the bull's day. As far as Oscar goes, this is one of the stranger patterns out there. It's down 7.22% on the day. And as I pointed out before, this had been in the past a good-looking bullish pattern, but the bullish breakout flopped up here. It was a failed bullish breakout, and since then I got short as it was pushing itself up against its own failed pattern, and now it's slipping nicely. So hopefully a good one to hold for the long term. I'm not showing it here today, but another really what I like and hope to hold on to for many months is Progressive, PGR. BIIB, this is Biogen. I don't think we've talked about this one before. Biogen is a well-established biotech company, and it has its own tremendous amount of overhead supply going back for many, many, many years, like so. Just rough that out real quick. And this is starting to turn south. It had a weak opening today and got down pretty hard because some analysts are starting to drop their price projections on it and moving it from like hold to sell, or not sell, nobody says that, but like underweight, reduce, that's another euphemism. It's actually up 0.75% now, but this looks like another good long-term short hold. And a few more here. DoorDash, DASH, this one's actually down about 3.25%. That's sinking away from what I perceive as a nice reversal top like so. I'm just doing this kind of quick and dirty like that. And as I mentioned, Hims and Hers is down nice, about 4% on this one. Got back into this one a couple of 3 trading days ago. And we got the same deal here. Big old distribution top on Hims and Hers, doink. And a couple more that will be after these. Intel, INTC, this one's up about 1%, but sticking with that one. And Meta is actually down 1.33% beneath its own mass of overhead supply. I'm not showing it today, but I'll mention as an aside that Rivian continues to look good as a long position. I think they're having some kind of product announcement tomorrow, if I'm not mistaken. That's not the basis for the trade, but it is still kind of clumsily shoring up into what could be a really good long-term basing pattern. So just to put a bow on today, here's SMH, the semiconductors. New highs, new lifetime highs, bursting as with the IWM above that former peak. But the one to watch now that Jerome was out of the way is Oracle, which has been just marking time the past few days. It had a long, nasty slump from September 10 until a couple of weeks back. It's recovered a little bit since then, but it'll be very interesting to see what comes of tonight's report. So congratulations, we're done for the year on those FOMCs, and now we can stop worrying about Jerome Powell till next year, right? Okay, thanks for coming by, and I'll see you here on Thursday. Bye-bye.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, we are back for the last call, and we have been delivered another Jerome Powell face ripper. We've got E-mini S&P 500 futures at the high of the session, 69.06. We're up 58 points here. You got the NASDAQ up 156. It's actually the weakest of the group. The Dow up 600 and change here. We're above 48,000. Get your hats out. You got the Russell up 48. It's the strongest of the group, almost 2%. Oil catching a bid, 59.02, up 77 cents, a little over about 1.33% here. Volatility futures down to 1888, down 65 cents, a little over 3%. The VIX itself in the 15 handle, vol is gone, fear is gone. Bears are dead. You've got bonds up 15. They were slow to respond to this, or at least not really seeing that response on the long end of the curve. Gold up 27. Silver continuing to rip faces off, up to 62 and change, up $1.40. Bitcoin as well, catching in on the love here, up $700 on the futures. Spots up $1,200. It wasn't baked in, I guess. It was baked in. Liquidity's coming. What say you?
Everyone loves a little short-term treasury buying, which, given the treasury's general account levels, I mean, it feels like the Fed's doing this to make sure that the treasury has enough money as we go into like the tax day drain. Basically, the account winds down going into April, and then it gets replenished.
Okay.
But this was a really good set of economic projections. You're telling me that we're still going to get the cut the Fed promised in September, even though we're going to have stronger growth, lower inflation, and a better employment situation than they previously thought? So,
and no bubble.
Nick yeah, that is really when the market started to take a turn during Powell's commentary, when he was asked, does he see bubble-like conditions? And he goes, well, I used to think so. Not so much anymore. And that was really the green light for the market to pick up and run. So, we were kicking this around on Overtime and Futures Power Hour. If we don't get the guidance for more cuts next year, will Trump try to steal the show? Nick, I wish there was a poly market on that, because Trump has already responded to Fed Chair Powell.
I think there will be a poly market for this the next Fed meeting. Is how long will it take Trump to respond after Jerome Powell steps off the stand? And literally 1 minute. It's amazing. It's amazing.
He's just on top of his game. Of course, Trump saying that Powell should have cut more today. So there you have it, Nick. We have a market here that's sitting up near the highs. In the S&P, we haven't quite broken through the November high, which is 6909.5. We got to 6908 today in the ESZ 5 contract. But that vol crush is really the most remarkable thing that we're seeing on the other side of this all. If the Fed thinks that we just got a maintenance cut here, the data that comes out next week, maybe it inspires them to give us another cut before, say, April, which is what the market is currently favoring. And that may not be the worst thing in the world for a market that's still finding a reason to run to the upside.
Oh, that would bring us straight to 7,000. That would be just an instant, you just pump that liquidity right in. To move those prices. You're salivating. I can see you, like it's like you're eating like delicious ice cream over there, thinking about that.
Just the structure of the market. Obviously, people have gotten a little bit more bullish recently. You said before that the bears are dead, and the recent AAII investor sentiment survey showed a huge swing, net 24-point change in just 1 week from bears to bulls. So we'll have to see what the survey says tomorrow morning when it comes out, but it's hard to imagine that people are going to be feeling less optimistic. And then you're thinking about a saturated market where I suppose, Nick, the seasonality here, let's say that kicks in. From today through December 16th, this is a lull in the stock market. If you go in the S&P 500 back to 1950, this is the week where you typically get some digestion. It's December 16th onwards where the market has produced that historical plus 1.4% for the month of December going back to 1950. So, if bulls can survive and hold these gains for the next few days, Santa Claus rally looks like it could be on deck.
What do you make of the market here with just, the NASDAQ kind of being the weakest of the group right now? In terms of some of the big Mag 7 stocks, Amazon catching a little bit of a bid here. Microsoft has been to the other side. A little bit of weakness here. You have Oracle earnings after the close today. I presume a little bit of the fear that's in Microsoft is baked into that announcement there. You got Meta kind of weak on the session here. NVIDIA hasn't really been kind of the front runner of the group. Do you think this is more just rotation? Like, is that why I know we're getting a lot of moves in the financial stocks? You got like JP Morgan, which had a $13 down move to yesterday, is now up $10 today. Goldman Sachs is approaching 900 and change here. A lot of those lower cap banking stocks kind of leading the way with the Russell. Is this are you expecting more of this to continue into the end of the year and into next year, or is this just a momentary blip in terms of like this kind of tech leadership versus small cap, more conservative stocks?
I think this is probably great news if you look at the rotation beneath the surface. Sure, the headline NASDAQ, the tech-heavy equal-weighted NASDAQ is only up by 0.6 right now, but the breadth is fantastic around the board. Equal-weighted NASDAQ is up 1.17%. Equal-weighted S&P right now is up 1.6%. That's going to be a new closing high all-time for the equal-weighted S&P 500. Don't recall that being a bearish sign. We also have the Russell here moving up to a fresh closing high for the year. So check. You mentioned NVIDIA being down, Meta being a bit softer, Microsoft, Oracle, okay. So you have your OpenAI flywheel being a touch weaker on the day. Where's SMH? Semis are about to put in a new all-time closing high today with NVIDIA dragging them down on the session net. So, I mean, Nick, this is great. This is what you want to see if you're a bull. There's still some hurdles to clear here technically for the NASDAQ and the S&P to really get the green light. Like, I'd like to see a 69.10 close today in ES. I'd like to see like a 25.900 in the NASDAQ. I know Ilya will say if we don't get through those levels, then we haven't officially broken out yet, which I do think is a fair critique. But the table's set right now. And at the end of the day, a maintenance rate cut with an economy that's growing, that's been awesome the past 2 years. No reason to doubt it now.
Does the 48-hour reversal scare you at all? We've had, a lot of these kind of turnarounds after FOMC, kind of had the buy the rumor, sell the news type events. Sure. Is that in the back of your mind here?
I hope not, because today's been a good day thanks to stocks and metals doing what they should be doing in a world in which the Fed just gave us what we got here. So tomorrow would be a very bad day for me. Otherwise, I don't intend on taking off any gold or silver or copper exposure, anything in ES at the moment, or in crypto for that matter. But I'm open to it, right? And again, the key here is, can we survive as bulls? We got a nice bounce into resistance. Can we hold our ground for the next few days, if not improve upon it? Because this is a seasonally weak window for December now that we've entered.
Yeah, you do have a monthly expiration next week. You have some of the dividends coming up in like the market in the SPY, Qs, and some of the smaller ones as well. So things to just keep in mind as we get into next week too. We do have a couple earnings after the close today. So we've got Oracle sitting at $2.24 right now. It's up $2. It's at about a $4 or $5 intraday range today. Adobe as well. I did a little broken wing butterfly on the downside in Adobe. Sold puts in Oracle down in the 180-ish range in the January expiration. Do those have any interest to you, or are you going to be looking for anything specifically? Does Oracle kind of interest you as a, OpenAI kind of Microsoft proxy, or is it just it doesn't matter now that we got J Powell out the way?
Ahead of the most recent earnings report I traded in Snow, I sold some puts at 230 when it was trading at 265, and that stock is now 216. That was a week ago. I don't think anyone should be taking my advice on trading around earnings, given my 0-for-1 track record 2025. That's why I stay away from them. For me, it's a roll of dice.
I mean, Oracle.
But Nick, Vol Crush, though, that's the name of the game if I'm playing the earnings here today. Forget directional bets in Oracle. Given how this market's broadly moving, and even across all the major tech companies, we've seen that vol crush go into play almost instantaneously, regardless of how the earnings have panned out.
Yeah.
So that's what I think would be the better bet than try to say up or down.
And I agree with you on a day like today where, you're having a huge vol crush, a nice little bid in the market. I think it kind of dulls the downside risk on some of those stocks. I know the fast market trade that we did in Adobe was kind of bearish, and I did like a broken wing butterfly on the downside, so I had no upside risk. But I think the way the market's moving right now plays into that kind of assumption. I think the same thing in Oracle, selling some downside volatility. Maybe we've seen the lower end of where that move has been, and just given the strength in the market, volatility contracting in the market, I think it helps dull some of the downside. But I do think Oracle will be an interesting look as to, kind of the next couple weeks of the AI trade. I mean, that was kind of the one that set off the last explosion higher. Maybe that's kind of in play here. I think that's kind of what I'm thinking here. But
I'm looking at the end of the week here. It's $22 and change for the implied move, about 22.16 right now at the 2 DTE. So if you were to go out and sell the 200 and 250 guts and go out to the 255 and 220, the 195 wings. So you're $10 wide on a short iron condor position there. 64% pop, risking 2 to make 1. Pretty clean. And you'd have to, for that to be wrong, you'd have to see vol outpace what the expectation is right now, because 200 and 250 are both outside of the expected move. And that's not a terrible bet, all things considered, which, I don't trade around these things a lot, but I've talked myself into it. Maybe I can get filled here quickly before the end of the session.
Yeah, we've shown all sorts of earnings data, and it's funny because every single time it's basically 50-50 in terms of direction. So to your analysis, it is basically a coin flip at most of the
79
time.
IVR. 79 IVR is what draws me in. If this was like a 19 IVR, I wouldn't be looking at this, but something to do.
Yeah,
right, Nick?
Slim pickings.
And that's slim pickings, but something to do in an environment where vol has just been absolutely thrashed today. So who's to say that they won't see a vol crush as well?
E-minis here, 69.04. We've been shopping around in the 6,900 mark. We finally got off that 68.50 mark, which was basically the pin for all of December. You think that was you think that's the spot where if we do get a little bit of a downside move that you get back in, or is it just smooth sailing for the rest of the year?
Yeah, I think today's lows are probably the lows that we want to watch in both the S and NQ. Right? If we do see a pullback over the next few days, if we hold today's lows, all good. At the end of October, right, the following session when we broke through the Wednesday lows around the Fed meeting, October 29th, that kind of signaled that the rally had run out of steam. And then sure enough, you spend the next several weeks chopping around to the downside. So I would just keep an eye out if I'm going to scalp this or look at this from the long direction now. Today's lows hold, we're good to stay long. And I'll change my mind tomorrow if they break.
That's okay. Hey, that's a trader right there. You don't have to get married to your position. I'm with you there.
Oh, gosh.
I'm leaning a little short delta here, so I'm playing for the 48-hour reversal small. But if this move in silver continues, I might have to mortgage my condo again, and just fund this one out.
Being long is fun. It's been a lot less stressful.
It certainly is. It certainly is. I usually wait till we get to this point. I'm not short the whole way. It's a small little shot here. On some of the other fronts, energy, specifically oil, you had a nice little bid today, up 68 cents. You had all your Venezuela talk kind of playing out a little bit today. How are you feeling about oil / energy in general? Are you still bullish, kind of playing in neutral still? What are you thinking here?
I've been playing this two-pronged approach in oil, which has been longer duration, short iron condor, because the market's been mostly range bound since mid-June after Iran and Israel's war stopped. And then in the short term, I've been trying to pick up some long deltas with very short duration. Right now, I'm currently in a 2 DTE. I need to go out and get into the 9 DTE as well, thinking that maybe there could be something that happens geopolitically. But today, Nick, the headline, and I think this is really exemplary of why, even when constructing one of these like geopolitical hedge trades, the discussion that we've had is think about the difference in total supply that Venezuela brings to the global oil market relative to what happens in the Strait of Hormuz, where over 20 million barrels per day go through, whereas around Venezuela, you're talking about less than 1 million in recent data. So even the scope and scale of, we'll call it disruption to a global energy picture with the U.S. invasion of Venezuela, or even just a brief exchange of, kinetic weapons, is it going to be the same $7, $8, $9 move that you saw over the summer with what happened in Israel and Iran? I would say no. You're probably looking at $1 or $2 at most. But maybe it's worth having a little something in the pocket, because you don't know what that kind of headline can do, especially around the holidays and thin markets, right? Fewer people are trading. Junior traders are on the desk. Books are being wound down. And you get one of these headlines and all of a sudden ES is off 1% because of missiles in Caracas, but that's about it. I'm not really constructive on oil long-term. And if Trump has his way in Venezuela, Maduro leaves, Venezuela has the largest oil reserves on the planet. Do we think that we're going to see 1 million barrels per day continue into the future? Or will the market open up for like 3 million or 5 million or 10 million at the high end? But you could see the market saying, oh, there's a lot more supply that's now accessible. And so we can push oil into the low 50s, perhaps. So I just have a hard time being optimistic.
Okay. Well, they haven't pumped volatility in there. So I think they're on your wavelength here. At least the market is, given that volatility is basically at the lows. It hasn't really moved at all over the last couple weeks. So I think I agree with you. It continues to be like kind of a sideways trade. Hey, we got a couple things going on. I know we have the 12 days of trading. We can throw that up just for a little sign up there. And you'll start seeing our Christmas pictures come out. We won't be able to do a Christmas card. I was really, really going for that. I really wanted to send out actual Christmas cards, but this is a nice little ad as well. What do we got here?
We're waiting to see what the production team throws up on the screen. There
Nick. It is.
This is a holiday special from our friends at Tasty Trade. Their 12 Days of Trading email series is a daily email with trader-ready topics, easy reads, and good reminders as we head into next year. If you opt in now, you'll start receiving the emails. Today is obviously day 3 because it started on Monday, December 8th, and it's going to run through December 23rd. So go to tastytrade.com/12 days, tastytrade.com/12 days to sign up now. Nick, there's a lot of great content, and the producers were kind enough to share the entire slide deck photo reel of all of the team photos with those of us who were not in the office for them. So I'm sure the Christmas photos will make their way into the world one way or the other.
I was explaining to E, I was like, I hope you didn't sign up for this because this is why I've been here for 10 years. They have all this blackmail on me. I can't possibly leave. There's photos of me doing unspeakable things.
Unholy. I've seen you drinking the adenochrome, Nick. It's just her. Oh, gosh. All right. Well, stocks here coming off the board a little bit.
I closed out half of my short. I closed half my short. I took a little tiny bit, just a little nothing bit, but I got a little bit left.
What reaction surprises you the most? Is it the fact that the Mag 7 are lagging? Is it the fact that we have the dollar getting hit? Is it the metals move? I mean, what's interesting you the most out of this? Because a lot of things make sense. Maybe something doesn't.
Yeah, I would say the Mag 7 not really participating is a little bit of a surprise, especially the ones that have been down, your Metas, I guess Amazon is catching a little bit of a bid here, but I'm a little bit surprised there. Microsoft as well. I think the other surprise is kind of the Bitcoin move. We had a little bit of a move up to, I want to say like 94 and change here, but I've been keying on that as kind of just my ultimate liquidity gauge. And just the fact the bonds were down in the first part of the session with J-Pow. I mean, they really didn't catch a bid until the last 30 minutes. I think that's a little bit surprising too. Just to see them, they're not, I would imagine 116 would be on the docket for us on the bond market. But, to sit here after a rate cut and kind of a sort of dovish talk, it felt like, at least from J-Pow, a little bit surprised to not see the bonds rallying a little bit, rates coming off a little bit.
Yeah, on futures power hour, because there's some longer, maybe it's a head and shoulders, maybe it's a trend line break in ZB, particularly if you look at the continuous contract. We've been operating in a 44 DTE position there, long a put spread 112, 113, but consistent with today that maybe the market's not going to get all the cuts at once, and therefore the Fed's late and recession risk is up. I put on a quick 2 DTE trade here in ZB.
Okay.
Long the 116.5, long the 117, which right now it's not working out hot. It's actually flat on the session. Hasn't done much of anything, but a little bit more of a bounce in bonds. Nick, I was thinking last September, the Fed gave us 50 basis points. Stocks went up, yields went up, right?
Mhm.
Too many cuts. Maybe not enough cuts would push yields down temporarily. And so you could get a day or two where yields come back in. And so there could be a short-term window for a ZBZN bounce. But other than that, I mean, IVR and ZB 0.1. You can't really do the typical tasty methodology here. There's just not enough volatility to harvest.
Yeah, it's a tough one. I mean, that's you get this rally and a massive vol crush. Now, if you don't have positions on prior, it's very hard to find new ones to put on here.
What do you make of crypto, though? I mean, this was getting close to 95,000 an hour ago.
Yeah.
We've shaved off like $2,000 here in the last hour. Is
Yeah.
that a warning sign?
I think it is. I think it's good that we've held this level at around 90K. But if this was all like, if the vol crush was in and we were just gonna Santa Claus rally into the year end, I figured you'd have a little bit of a stronger session for Bitcoin and in cryptos in general. But that's not here. Maybe that's moved to metals. Maybe metals are the meme asset now.
Yeah, they called Bitcoin digital gold. Maybe they're going to call silver physical Bitcoin.
I did tell my dad, and I told him this morning when I got home yesterday. I threw on the TV. It was on CNBC, and they were ready to. They wanted truckloads of silver. Don't even touch gold. Don't touch anything else. Silver's going higher. I heard doubles. I heard 100 by the end of next year. That was the kind of things that I was hearing on the tube.
Yeah, I don't know about that. I see a path to 67 in the next 2 months.
I'm just warning you. And then the CME margin requirements. Hopefully, we get that bid up a little bit.
Yeah. Well, no, thank you.
For me, not for you. I know that might hurt you.
No, but yeah, I'm like getting into the place with the current position I have because it was put on so many weeks ago when volatility had come back in and it was a 55 call, 55 and a half call spread, variety of different positions. Here in the follow account, it's 55 and 55 and a half. Yeah. It's beginning to lose some convexity. I'd like to see a little bit of a bigger gain on a day when it's up 2.34%. It's not working nicely, but I feel like I need to start reaching a little bit more. And that's why you have a silver market that has this kind of call skew, which I don't know if you saw yesterday, Nick. Silver call skew became a little bit more extreme than its gold counterpart, which is unusual. Mm-hmm. But it almost feels like people are it feels like there's a chase here happening right now.
Yeah.
And it's like we're going to keep bidding these prices into the sky. That's when you got to start to protect your neck. So I think for the average retail trader, I like trading SI. I like trading SIL in the futures market. I prefer futures to regular products otherwise that are tethered to cash equity hours.
Mm-hmm.
But SLV is probably becoming the more appropriate product for the typical tasty trader, generally speaking. SI is really big and it's moving very quickly these days.
Oh, yeah. Huge contract. You got to be careful there. No doubt. I'm learning that myself. SIL as well. Very, very big. As we get into the close here, we got about 2 minutes left until the close up. I should say a minute. You got E-minis down below that 6,900 mark. You got the NASDAQ only up 100 here, about 0.4%. You got the Dow up 500, the Russell up 34, oil staying here at 58.95. You got vol futures down about 70 cents here, a little over 3.5%. You got bonds up 15 ticks, gold and silver staying at up about 24 on gold, silver up $1.40-ish, and Bitcoin continues its weakness into the close here. Got earnings coming up with Oracle and Adobe into the close. Does 6,900 matter for you closing right here? Above or below? Does that matter?
No, I don't care about round numbers at all.
Okay.
But you know who does? The guy who's going to be on next. You said that bears are dead. I know one who we just can't seem to kill.
We don't want that to happen, okay? Don't do that, Chris. I need both of you around, all right?
No, this is what happens. I get really get a little arrogant, and then the way to counterbalance this is I see myself getting a big head. I start getting short the stock market because I know I know how this works.
Mr. Vecchio.
Ball runs over, Nick.
That was fantastic. Oh, you had to do this. There you go. Look at that. Oh, man.
Chances. That's not me.
Yeah.
It wasn't me.
My dad's been working out. He's been doing back and squats and stuff, so he had no problem with putting my 200-pound tuchus on top of him.
Those are the cutest photos. It's like, oh, this is me and my dad when I was 3 riding him.
Yeah.
This is me now when I'm 38 riding him. Like, nothing's changed.
Thank you, Mr. Vecchio, for setting that one up. I'm glad that the peeps will get that into the close here. We're going to take a quick little 90-second break. I'm going to think of something that I can get in my back pocket for blackmail with Mr. Vecchio here. But Vecchio and Ilya.
Just going to ask.
We got more coming up after this. Got Overtime Boys up next. Stay tuned for that. We'll see you tomorrow. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The Fed cuts. Powell delivers. What's next? It's Wednesday, December 10th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes or so as we wind down Fedmas. Powell delivered. I thought we were getting coal in our stockings, Ilya.
No, well, it's interesting
enough.
because the market decided that he delivered.
The market made the decision that Powell delivered halfway through Futures Power Hour. We had our rate decision come out and stocks meandered slightly higher. it really wasn't until Powell took the podium that things got off to the races. A good set of numbers, growth projections up, inflation down, unemployment rate down, all relative to where they were in September. Some curious observations by Powell, though. 20,000 jobs a month being lost in the economy. Interesting. Also interesting, are we seeing a productivity boom? Are we seeing an economy akin to the 1990s? Are we in a bubble? Powell says, yeah, productivity is booming. No, I don't think we're in a bubble. Markets decide to take a turn higher from there, Ilya. So we have stocks up on this Fed Wednesday. NASDAQ is your laggard. Neither the S&P or the NASDAQ clear the key thresholds that we discussed an hour and a half ago on Futures Power Hour. 69.10 in ES, 25,900 in NQ. Hold up thus far. But your Russell 2000 moves up into a fresh closing high for the year. The equal weighted S&P 500 is up at a fresh closing high for the year. QQEW, the equal weighted NASDAQ, is back on the up 0.98% compared to the NASDAQ's 0.33% gain. So that's, I suppose, the good news here. In the world of bonds, we can just take a look around. We had a rally. We since pulled off. We're slightly higher overall at the end of the day. Bonds and notes both get a little bit of a rebound. Gold prices are able to move up ever so slightly. We see here up by about 0.5%. Silver prices up strongly, up 2.1% right now. And then we have our copper prices up 1.5. So Ilya, I'm piecing together a story here where I see stronger stocks. I see stronger commodity prices. I see a little bit of a weaker US dollar, which is now falling to fresh monthly lows. What did the Fed tell us that gave us this, I guess we're getting more liquidity type of market reaction today?
Seems like what the market really liked was the idea that we are experiencing a productivity boom, which is interesting because if we're experiencing a productivity boom and the Fed is cutting, one wonders why when there's all this concern about inflation. But the way that the Fed chair sort of did the dance seemed to suggest that we are seeing what you've described, to your credit, as the kind of maintenance cuts that markets like, where these are not cuts in response to some sort of negative outturn. They're more maintenance to get back to neutral and away from restrictive because the labor market was cooling. And Powell made it very clear that what's going on in the labor market isn't necessarily AI related and has been going on since before you could really attribute it to AI, but that what we've seen for a few years now is 2% productivity growth or more.
We just take a quick pause here. We have Oracle earnings and Adobe earnings that just came out. Oracle earnings are in at 226 versus 164 expected, but they missed on revenues. 16.06 billion versus 16.21 estimated. So the stock is in here a little bit, down to 208 after hours. We closed at 223. So that's $15 weaker. The expected move through the end of the week was 22. So thus far, we could chalk it up to being somewhat of an inside reaction, Ilya. Over at Adobe land, Adobe did have slightly better earnings than expected. It was trading up higher. No, that's ADBE, excuse me. Still up here now to 349. Last closed at 343. They beat 540 was the expected. 550 was the actual EPS. Revenues came in at 6.194 billion versus 6.11 billion. So slightly better. In both cases, Adobe up, but Oracle down and rebounding. We just want to keep an eye on that because on last call, Nick and I were talking Oracle, and I put on a short iron condor trade, just thinking we'd see a little bit of vol crush here on the other side of earnings, regardless of which direction we went. Hoping that plays out, of course. But Ilya, you were saying about the Federal Reserve's meeting today as NASDAQ and S&P come in a little bit here following those Oracle earnings.
Yeah, I mean, it seemed like the market liked not so much what the Fed did, because that was a given, and at first didn't like that the Fed didn't move the outlook for 2026, which was, of course, the boogeyman that everybody was so concerned about. And so we came into the press conference with a little bit of weakness. But when Powell started talking up productivity growth and saying we're in the middle of a productivity boom, that seemed to really give the markets confidence. Now, there is some caution to be had here. We didn't break the key levels that would define the range tops on the big indexes. We do have very convincing breaks in the dollar. We have convincing breaks in the metals. We don't have convincing breaks in stocks. And that's curious here. But the dollar and the view in metal certainly seems to suggest that the markets broadly decided that this was a dovish enough outcome that they could cheer it.
I'm looking at the S&P 500 seasonality here, Ilya. If people were to zoom in on this chart, which they're going to have a chance to do here in a quick second, for our December seasonality, okay? This is a 20-year time frame. You notice that effectively from the second week until the end of the third week, you have this correction here. Ryan Detrick at Carson Research, friend of the show, we've shared his research here previously. From now until the 16th through the 15th, you're in the seasonal weak part of the month for stocks, which is exactly what you see here, even on the 20-year. And then you get around the corner, and then really from the midpoint of the month, the Ides of December onwards, it's where you produce your historical rally. Obviously, that's not been the case over the past decade. December's been a bit soft, but when you go back 20 years, when you go back 50 years, you go back to 1950, December, particularly the second half of December, has been pretty strong. So I'm thinking about the market in those terms. If the Fed gave us somewhat of a green light today, at least for the next few weeks, we scale 6910 in ES, we scale 25,900 in NQ. It probably becomes a game of just attempting to test the yearly highs at a minimum in thinner markets, in lower volumes. And then we can go to the drawing board again if people are thinking this thing is frail, maybe at the end of December. But we got to cross those thresholds first for bulls to really declare victory here and this corrective move since the end of October to have been completed.
Yeah, I mean, this now becomes a very interesting sort of test because if we remember what happened in October, we didn't get the negative response the day of. As a matter of fact, we got a rally overnight. And then over the course of the next day, the market kind of digested and arrived at its assessment that ultimately it didn't like what the Fed said, that ultimately it didn't want this to look this way. And so that's sort of how you then ended up with weeks and weeks of consternation. So it behooves us to be careful here and not to over extrapolate. But what we see from the dollar would suggest that this probably ends up in a way that stock markets, at the very least, don't hate.
I'm looking at the regional banks here, man. This has been a chart that we've been talking about for the past few weeks. I don't have any position in here, but we had outlined this potential left shoulder, head, right shoulder, inverse head and shoulders pattern. Maybe it's a bigger triangle that's been forming effectively over the past year, going back to last December's highs. Here today, we put in a new high close for the year. We're clearing out the highs that we had in September. In fact, the high for September was 66.97. We close above that high today, Ilya. So this is not just like a punch through it and then get sucked back in and can't. This is a legitimate break. Maybe we have to see how the week turns out because this is a longer term chart, but nevertheless, that kind of chart is looking pretty good right now. And then you think about the broader Russell, which it's starting to break out. I want to go to our continuous here, but that's a new closing high for the year for the Russell. And again, it's above the prior high, 2566.5. Are we there? 2568.60 currently in the after hours. So you're getting some signals from the market, right? Maybe it's another one of those Decembers where the small caps crush. And I certainly don't have enough long exposure there. Okay, but if this is a September or December where the small caps crush, I just found it fascinating today that the FOMC was so optimistic and Powell downplayed concerns about there being a bubble. And I don't know. I see that coupled with everything the administration's doing. And Trump, he responded a minute after Powell stopped speaking, saying he wished Powell cut more.
Of course,
it's just directionally, the direction is just for more asset inflation. And it's not fighting. It has been really helping me sleep at night. I just don't see a reason to stop doing that.
You don't get the sense that one ought to stop doing that from this response. But again, I think the key here seems to be that we don't want to overinterpret, because if we overinterpreted immediately last time, it would have been the wrong read. So this now becomes a question of when the dust settles and we look at this tomorrow, what's the thing that we're going to see? But to your point, if you look at what the dollar is telling us here, it isn't telling us that there's an issue. It's telling us that indeed the kind of risk-on read is the correct one.
Yeah, I mean, pound has its highest close since late October. The Canadian dollar continuing to charge ahead. High close since late September. The euro here perking up finally. Good thing I got out of a bunch of my dollar positions yesterday, because just bringing down. Today was a good day. Bringing down exposure is never a bad decision. Punching through 117 in the yen, right? This is taking a big turn to the upside. The dollar just doesn't look healthy all of a sudden again. And I think if you told me that we were going to get faster growth and a better employment situation from the Fed, I'd say, then we're going to be looking at fewer cuts.
Yeah.
So maybe something doesn't add up all the way right now, but the major themes, Ilya, right? Big picture stuff. Is the Fed directionally easing or tightening? Powell said that it's no one's base case for hikes.
Right.
So directionally neutral to easing. And then fiscal authorities are, pretending like there's no inflation in the economy. So who's to stop them from opening the spigot some more?
Well, I mean, we'll see if that's how this plays out. But there is, I think, the kind of optimism here that you've pointed out, which is that it depends why you're getting the cuts and not getting the cuts. If you're not getting more cuts, if the Fed is not committing to more cuts, if it's not saying, look, I don't know why you all want 50 basis points next year. We're in the middle of a productivity boom. We expect a pickup in growth, and that's what we saw in the SEP. It's unclear why the markets want cuts, but they are amenable in that environment to saying, oh, okay, fine. More productivity, more growth. Yeah, all right.
The one thing I can't square today, Bitcoin again tried to cross 95.
Still couldn't do it.
Couldn't do it. Not everything fell into place today.
No.
Almost. Not everything.
Mm-hmm.
This is a lot of green on the screen here, Ilya.
It is.
The only things that are down, micro XRP futures, wheat, corn, crypto, Bitcoin. Okay. Everything else is bright green on the screen. Volatility comes in dramatically. Negative IVRs now in the treasury market. The VIX got slaughtered today, off 2 points from the highs. Is this just everyone closing their books and going home and extending duration? Frank Walsh had a really interesting point here in the session. VIX calls over puts 4-1, and the volume is 4 to 5 times the norm. This was at 2:25 Eastern, so before Powell speaks. But the open interest in all of them is still bigger than today's volume. So these may be positions who are closing. Lots of folks are already rolling their December VXZ to the January Fs. The volumes are almost matching 1 for 1. This is early, but the contango is still really wide. It feels like today's a day where people are saying, you know what, nothing's happening the next few weeks. We could take our ball and go home until after the holiday to a certain extent. Short-term traders just getting shaken out.
It does have that flavor, and there isn't, as you were saying, there isn't perfect consistency. It's a little bit incongruous when you look at some of the kind of benchmark assets here. Bitcoin is just one of them. But if you look at NASDAQ, I mean, has it actually gone anywhere today? Not really. It's been in the same range for 4 or 5 days. Has the S&P? Not really. It's been in the same range. This is the 4th day. Did Russell break its high? Not really. Still basically, I mean, it tested above it. It set a new intraday high, but did it close there? No.
I can't tell you
it's an interesting set. Did gold go anywhere? No. The dollar really seems to be the place where you get this unalloyed response. But
sure,
I'm going to be very curious to see what happens over the next 24 hours.
What do you make of the expanded breadth in the market? Because this, again, putting everything on the scales here going into tomorrow, 25 sectors we cover here. All but one were in the green today. It was utilities down 0.05%. The second worst performer were consumer staples, which were still up by 0.29. I see RSP closing at a new record high. That's the equal weighted S&P 500. So good breadth, strong volume. Outside of the lack of technical advance, it feels like there's enough there to feel like the path of least resistance may be up, assuming we don't get the 48-hour shenanigans and we survive the next week of seasonality, which calls for a drawdown.
I think that's fair. I think it's certainly fair to look at this and say, okay, look, you have to start and end with the price action. And what we saw last time was on October 29th, markets didn't like that the Fed threw them for a loop, but they didn't show the pain on the first day. You can see that long wick on the 29th where the markets freaked out and then shed the losses by the close. And then actually tried to set a higher high intraday the next day. So it took them some doing to really think this over.
Well, that gives us a pretty clear level for tomorrow then. If S&P is below 6830.
Yes.
Danger Will Robinson, same thing for the NASDAQ. If the NASDAQ is below today's low of 25,528, you got a problem.
Mm-hmm. Yeah.
Do you think the fact that the Fed isn't signaling more cuts, this is enough of a window for bonds to bounce here?
I think what Powell said today really sort of speaks to just how much uncertainty there is, especially at the long end. I mean, notice today, the front end actually had a decent move, and certainly the buying of short-term paper ostensibly to paper over liquidity shortages around tax season, which is interesting. Powell said, this always happens. So why don't you always do a short-term debt buy every year?
Is there a reason why the Treasury's coffers might be emptied? So it looks like the timeline for the SCOTUS decision on tariffs isn't going to be this Friday or next Friday. It's going to get pushed off into January.
Yeah, interesting. But
the Treasury would have to refund all those people their money, wouldn't they? Wouldn't that lead to a bigger drawdown?
Yeah, they just might. They just might. We might not have ample reserves. So
look at Powell already helping the administration.
I think when the history books are written and someone like a Ron Chernow or a Simon Montefiore, a historian of heft, writes the Powell bio, I think it'll be one of the most scintillating reads in this space in a long time. I'm just wrapping up Chernow's book on Washington, and the parallels, not from Washington to Powell, but from the acrimony then to the acrimony now, very, very strong. Powell is an incredibly deft operator and has turned out to be probably one of the best Fed chairs we've ever had in terms of his sort of acumen for building consensus, maintaining a neutral perspective, being dovish when that's called for, being hawkish when that's called for, and really walking the political tightrope very adeptly in a very complicated environment. It'll be curious to see now, to your point, what the markets make of this. Because you have a situation ostensibly where, and Powell would be the first to tell you this, he's speaking out of both sides of his mouth. And he's doing it knowingly, openly, and on purpose.
Mm-hmm.
Because he's coming out and saying, look, our two objectives are in tension. Of course, we're speaking out of both sides of our mouth. We have to be. That's what our mandate calls for. And at first, when he came out and said, look, we're at about neutral on rates here, and we're looking to stay here for a while to see what happens, the market didn't like it and said, whoa. Neutral on rates. That means you're done cutting? And then a different question came and asked, so do you think it's possible you might hike as your next move? And he said, that's not anybody's base case. Take it easy. And then the next question came and he's like, yeah, we're in the middle of a productivity boom. You wrote this script some weeks ago where the message was stimulus coming to a hot economy. Answer, higher asset values.
That's it. That's the game. Whether or not it's warranted, if you're going to continue to flood the pool, the water level is going to rise.
Yeah.
At a certain point. Mundell Fleming model for the win. Yeah, I'm interested in seeing Powell's memoir. I don't know if I want a historian. I want to hear Powell say something like,
that of course. But
no, I want to hear like Dead and Company were in DC and I just wanted to like chill out and, vibe to John Mayer and, Bob Weir. And I couldn't because the president was all up in my business.
Yeah.
Like, that's going to be interesting.
And this dude at the White House just would not let me have my chill, man.
Yeah. Yeah. Well, Elia, it's a fascinating day. We don't clear all of the technical hurdles that we need to clear for stocks to be fully in the clear, but tomorrow is, of course, another trading session. 6910 NES, 25,900 in NQ. Looking good to go, perhaps. Bonds, slight bounce, maybe no cuts. Maybe we're not going to overheat things. The Fed is feeling like it's in neutral mode. Other than that, silver, another strong day. Gold, copper, better. Oil, up. We seized a tanker off of Venezuela. More posturing. Yeah, well,
apparently it was a big tanker. Some say the biggest ever.
I saw the comments. I saw the comments in the chat a few weeks ago when I said, "Oh yeah, like this isn't about narco-terrorism; it's about oil." And I appreciate Trump being so forthright about it being about oil. Exhibit A, yeah. B, again. But Ilya, second half of this week, data thin. Initial claims tomorrow, earnings. Next week, it's really CPI. It's non-farm payrolls. There's a lot of data coming out between now and the January Fed meeting, so a lot could change, and I don't think that's something we should discount. Powell himself acknowledged that here in this session. Yes. But until then, it is Wednesday, so overtime's out of time for today. We'll be back tomorrow, as we are every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. Take a brief break, though. Ilya's sticking around, so should you. Macro Money's up next. You're on Tasty Live.
See you there, everybody.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Lo vamos a hacer hoy. Llégale, no lo pienses, ya lo decidí, que contigo me voy. Dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear.
Well, we have our Fed policy announcement, and at least at first blush, it seems to leave the markets in relatively good form. Now, we don't get a big response from stocks that seems convincing, but we do get the averting of what could have been much worse, at least in the fears of the markets. And now a big question as to what comes next. That's what we're going to explore here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as ever, we'll take a look at the price action. We'll take a look at what that price action seems to suggest. And then we'll, of course, go through in significant detail here exactly what the Fed did what the Fed didn't do, and what that seems to mean going forward. So we'll start kind of with the market reaction and what that seems to mean. And then we'll go into more sort of the forward-looking bit from there, because it does seem to be a tale of two worlds here: price action versus sort of realized headway. This is what the markets did ultimately by the close of the day, and we can see here S&P liked it. NASDAQ, not so much. We had some Oracle earnings that came out after hours that didn't help matters, but NASDAQ was kind of soggy even through the Fed. We can see yields come in lower, and that's despite that the Fed was widely expected to deliver the rate cut that it delivered, and the tally going forward really doesn't seem to be supportive of what we're seeing here. But there is a bit of a caveat. The Fed saying it is looking to restart asset purchases in a very limited way, looking to buy about $40 billion at the onset in short-term paper, ostensibly not to alter the setting of policy, but to make sure that markets don't over-tighten because of a liquidity shortage going into the tax season and sort of various kind of operational and tactical things like that. But the market certainly takes notice. Crude oil a little bit higher here, but still within that same kind of blinders on drift that it's been locked in for weeks. Gold higher, dollar weaker. Bitcoin, interestingly, doesn't pick up on the risk on flavor and the anti-dollar flavor of the day, and kind of skids into the close. So what are we left here to extract just looking at the price action? Well, stocks higher, yields lower, gold higher, dollar weaker. I mean, that comports pretty clearly to a dovish interpretation of what came out. And what's interesting is that what came out wasn't very dovish. And so what this starts to look like is maybe a sense of relief that the outcome was not more hawkish than it was. What was that outcome then? Well, let's go through it here. This is the policy statement and the annotations here that are tracking the changes in statements from October into this December statement. Those are from the Wall Street Journal. Hat tip to Nick Timmeros there, who published it on the internets. And so when we look here at the changes, we can see this is not exactly the most dramatic set of changes. This is not particularly eye-catching here. There is a little bit of a change here in the third paragraph where the Fed says, in considering the extent and timing of additional adjustments, not so much in considering additional adjustments. So it seems like additional adjustments are being made more likely by this statement, whereas before, perhaps there wasn't even a commitment for adjustments. That's interesting, but very nuanced and doesn't seem particularly telling. The big change actually happens down the page here, where you get this new bit added where it says the committee judges that reserve balances have declined to ample levels and will initiate purchases of shorter-term Treasury securities as needed to maintain an ample supply of reserves. So for whatever reason, the Fed thinks that there is tightness in short-term money markets and is looking to paper over it. Powell said in the press conference later that this would amount to about $40 billion as an initial purchase. Now, this is not a big sum, and the Fed chair is saying that these purchases are going to run at this clip for a few months and then start tapering off, in the sense is that they'll start to taper off sometime after tax day, mid-April. So it looks like what the Fed is looking to do here is sort of paper over some sort of a liquidity crunch that it envisions. And not surprising in this context, if the Fed is going to come out here and buy short-term paper, then short-term yields are going to come in because prices are going to come up. And indeed, we see that in the 2-year here. Perhaps there is also some spill-off into the longer end. That may very well be why the dollar gets whacked to the extent that it does. Because, of course, the dollar is very sensitive to short-term borrowing costs and the relative spread between those borrowing costs and those of other currencies, which essentially come down to the idea that one person's borrowing is another person's income from lending. And so you'd want, usually, to hold the higher yielding currency, taking any two currencies and comparing them, because you could make more money lending it out. There's a greater interest return on that currency. It pays more. And so think of it almost like dividend yield. And so you have a situation then where the Fed is very clearly saying, we're going to be a buyer of short-term paper. We're not looking for that to be an object of policy, but the markets obviously understand that if there is a new buyer in size that they didn't know about, then yields should be lower, prices should be higher, and that's what we see here, at least as a first adjustment. And of course, the dollar is very sensitive to that, so perhaps that explains why the dollar's move is more convincing today than are the moves elsewhere, because though we have a rally in stocks, it does not make meaningful headway. We don't manage to take out the barriers we've had on the range in the S&P, going to the end of last week, and before that going to the middle of November, right around 6,900 or so. We don't end up clearing that barrier at 25,850 or so on NASDAQ, where we've been since the markets jeered the Fed's October 29th decision. Still within the recent range there. We don't have a breakout on gold. Again, it's higher, but still well within the range where it's been oscillating, in a very narrow range at that. Since the beginning of this month, gold has basically gone nowhere at this point this month. If we look at the net change for gold this month so far, it is, drumroll, 0.21%. So nothing is really going anywhere. So we have these responses and they seem to paint a picture, but none of them really have a breakout. But the dollar does. Euro seems to break out higher. The pound is attempting to break out higher. The Aussie breaks out higher. The Canadian dollar breaks out higher. So a weaker dollar across the board here. And that's perhaps the bigger story here, this buying of these bills and the driving down of short-term rates. This is perhaps why we get conviction there. But of course, it's also very interesting that we don't get conviction elsewhere, which tells you that there's a level of confusion as to what the Fed actually means here. Now, looking at the summary of economic projections, again, we see an upgrade of growth expectations, and for next year, a particularly emphatic one, from 1.8 to 2.3%. Now, we did see GDP expectations upgraded in September also, but this is much more significant. We also get a somewhat of an adjustment in the unemployment rate in a positive direction, mostly steady here, but next year slightly lower. Inflation adjusted slightly lower for this year and next, both at the headline and the core. But then the path of rates here, absolutely unchanged. Now, of course, the bogey for us was this number. And the markets initially didn't like that we didn't get an adjustment here because we still, despite all of what we've seen already, we still have 55 basis points on the board for next year. And of course, there's another rate cut right here. But still, the Fed is saying no. We're only going to have one. And it does, as we discussed yesterday, increasingly seem to look like a statement of intent rather than a commitment to this or that thing. Here's what Powell had to say about it on the stance of monetary policy. This is the part that the markets didn't like because they think the Fed could be more circumspect in cutting further on this basis. Powell was saying the policy rate is in a plausible range of neutral, and the committee is well positioned to determine whether further adjustments are needed. Not when, if. There's no preset path. The risks of inflation and employment are equally balanced, so the policy should sit around neutral. This is not an endorsement for more cuts. This is the Fed saying, we're going to sit here for a while. And saying a further rate cut is not our best case. So this then is where things get interesting, because initially when this comes out, the markets don't like it. They say, wait. So you're saying you're going to trim back rate cut expectations. We wanted you to go in the opposite direction. So not only are you not going to change what you're writing down for the forecast, you're going to talk us through why you're not even going to smooth that over rhetorically. You're saying, yeah, well, you really shouldn't be expecting a lot of easing. Now, on what happens with the labor market, because, of course, that was ostensibly the reason why we started to get all of these cuts, restarted, as it were. We get the sense that we are still in this kind of locked labor market where there's not a lot of hiring, but there's not a lot of firing. And so we get a labor market that the chair describes as less dynamic. What was perhaps the most interesting part here, and this maybe is where the Fed gets its bias, is they're looking at the overcounting error in non-farm payrolls as being about 60,000 jobs a month. And with the headline numbers then averaging around 40,000, the Fed seems to think that once you take the overcounting out of the picture, you're looking at about 20,000 jobs lost per month. And that's kind of the cadence. Now, Powell does say he does not expect a sharp downturn in employment, but he doesn't want to push down job creation with policy. And so it seems like we're still in this space where the Fed is saying backstopping the labor market is becoming an increasingly important objective. Now, we'll see what kind of data we're going to get coming in here, but even Powell cautioned that the data is probably going to be very skewed because some of the numbers were simply not collected. And so we'll see how much clarity there is there. But for now, it seems like the Fed is prepared to say, on the first side of its mandate, there is enough worry about maybe risks to the labor market to keep the bias on the side of cuts without committing to how many cuts and without committing to when they will come. On the inflation side of things, It still looks to be somewhat elevated, but it looks like what the Fed here is saying is this is, I'm sure Powell was carefully coached not to use the transitory word, but they're saying maybe this will be a one-time price adjustment because most of it seems to be coming from the goods side, and that's the tariffs. Whereas the part that's been the most sticky for longer, the services side, seems to be easing. And so the Fed is seemingly comfortable here. They were asked if they're okay with 3% inflation, and Powell said, no, we're not. We want to get to 2%, and we think that once we get around the horn on rebasing for these tariffs, our baseline is that we will do that because once they fall out of year-on-year calculations, which should happen at some point in the first going into the early second quarter, we should have inflation significantly lower and back in the low 2s. We'll see if that holds up. But if we take this together, then it starts to make sense why the Fed has this easing bias. On economic growth and on the risks, we can see that it's much the same song and dance. There's not a plan. There's higher uncertainty. There is a desire to move with caution and in a very deliberative way while the two goals are in tension. And what the Fed is seemingly saying here, what Powell is seemingly saying, that there's not a reason to worry about the economy, that the cuts are coming to backstop a labor market that isn't so much falling apart as it is maybe a potential risk downwind. And certainly if they're extrapolating that we're getting an average of 20,000 jobs lost every month, it's not a lot, but it nevertheless is a loss, and that's not what the Fed wants. Maximum employment, that does not make. So in that context, this SEP seems to make sense, where we get more growth. The unemployment rate is basically steady. Inflation comes down because the tariffs rebase out of the numbers, and you don't know what you need to do on rates because you're not really sure what the unemployment situation is going to look like. It was very key, and this is where sentiment seemed to turn, when the market was initially annoyed that Powell didn't move, or that the committee didn't move this point right here to something more dovish, lining up more closely with what the Fed is anticipated to do by the markets, which is at least one more cut, as we can see here, than what that statement says. That statement says 1. This says 2 for next year. The comment that Powell made in response to a question where he was asked, do you think we're in the middle of a productivity boom? And that's sort of how you get the current environment. That's how you get kind of a wobbly labor market, but it's not necessarily for bad reasons. It's for transition reasons. And Powell seemed to broadly endorse that idea. He certainly cautioned that you can't really point the finger at AI for that because improvements in productivity have been going for a few years now, longer than you could really point the finger at AI and say, oh, that's the thing. But nevertheless, the story seems to be, if you have greater productivity, you're not going to get a lot of turnover in the labor market from the demand side because you can do more with less. And so if that's what's going on, then you're going to get these kinds of funky things in the labor market that maybe the Fed needs to address by rebalancing policy. And if that happens at the same time that inflation from tariffs works its way out of the headline figures calculus, well, then you have your soft landing. And that seems to be the positivity that the markets are broadly responding to here. And indeed, it is not unlike what we discussed when we were looking at this yesterday. We can see from the latest data that we do have, data outside the government's purview, the Institute for Supply Management told us that the service sector has strengthened as of December, even though we still have relatively anemic manufacturing. And so the overall economy seems relatively anchored at okay levels of growth. As ever, this is done in the logic of PMIs. 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below, the faster the contraction. So you can see here for the service sector, which accounts for the overwhelming majority of the economy, we have something of a pickup. And although it doesn't look like December was a better month than November, once you kind of weigh this out and say, okay, about 80% of the calculus here, 70 to 80%, let's call it services, and 20 to 30% is manufacturing. It looks like growth is about the same for November here as it was in October, but those 2 months also amount to the strongest sort of collective reading we'd seen since February. So the economy looks to be in okay shape, if not screaming. We can see that for the most important service sector, employment is contracting, but at a slower rate. And the rate has slowed over the past several months, consecutive reports. And we see inflation is still elevated relative to history, but at least it's trending down over the past several months. Even in services, inflation ticked a little bit lower in this last edition. So when we consider all of this together, you kind of get what the Fed is trying to say here. What's interesting, again, is that the markets don't ultimately run away with this and say, oh, goody, inflation is going to come in. That'll give the Fed license to cut. The unemployment rate might well stay uncomfortable, and the labor market may well shed some more dynamism because of efficiency gains. Okay, so maybe that encourages further easing, but the economy is not in a bad way, so easing in a bad economy would be something that markets could be concerned about because the economy were weak, but that's not what this is. It seems like the Fed is not giving the markets as much easing as perhaps they want, but is biased toward easing at a time when the economy is not really hamstrung in a worrying way, or really hamstrung very much at all. In fact, if we take a look at the S&P global version of where growth is, we can see these composite index levels that take in both manufacturing and services are recovered from the kerfuffle at the beginning of the year around tariffs and are now hovering around these heady levels that were there at the end of last year. So looking at all of this together, it seems to make sense why the market ultimately liked it, but also not why they didn't like it more, and there's not a concerted sentiment response. Perhaps we are, in fact, still going to get something on reflection here over the next 24 hours. On October the 29th, it took the markets a full 24 to 48 hours to really decide that they didn't like what the Fed was putting out there. We'll see what happens from here, but so far, the big barometers of risk sentiment are somewhat relieved but circumspect, and it's really the dollar making the big move, perhaps because the Fed announced, as we said moments ago, that liquidity facility at the front end and took those yields lower. As far as exposure is concerned, I trimmed back quite a bit ahead of this Fed announcement. I took off gold, I took off silver, and now I've started to peel away this dollar exposure that clearly didn't work here. Euro seemed to break out, so I took that off. Pound did not, so I still have that on. Still have a tiny bit on the short side of Bitcoin, which again did not join stocks here in whatever positive response. Still have a little bit in SPY risk-off exposure via this put vertical because, again, the breakdown or the breakout, rather, did not occur. Still have a little bit of crude oil, which continues to grind. A bunch of put verticals there. It's been very slow going, though, as we've talked about, and so I'll be looking to manage this very soon here. But otherwise, I've really left things to the longer-term positions like EWZ, which looks well into next year, and MSOS, which looks well into the end of next year and the beginning of 2027. So I've backed up a little bit here as far as my exposure, and I'm looking for what we get. There should be a settling of the dust and some decisions getting made over the next day or two, and I'll be watching very closely to reinitiate new exposure and maybe to flip some things around. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.